Hello, hello. Hello, hello. Just let me know if it's clear, but otherwise it's fine. Noise and volume. Hello, hello, hello. Perfect. Now I think it's working. I'm hoping it's working. Clear आएगा? Noise आता है? Is the place really burning? Awesome. Oh wait, I think we're good to go. Yes. Good morning, guys. I know. Delays are bound to happen in my class. You know, they say that when glass breaks, things are going favorable, right? In my class, when mic is not working, then everything is favorable. But nevertheless, try to cover up this 20 minutes quickly. Maybe. Yes, I am assuming you're still writing May. So, yeah, you are not giving an extension. But nevertheless, I think whether you're writing May or not, you have been given 2 days of additional leave for my subject, which gives me a better position to put you on. Yes, you get additional 2 days for my subject. Personally, not very happy with that. Not supposed to give you additional 2 days for tax and all. But yeah, since you have been given the opportunity, we will try to crystallize the opportunity. Yeah, the intention has not changed, people. Regardless of you get 2 days, 1 week, 10 days, they postpone your exams. The day before exams, you're only eligible to get 7 hours for direct tax, and that's what we're going to do. That's what we're going to do. You're only going to be given 7 hours for you to read your direct tax. The intention is remaining the same from the last 5 years. You are supposed to complete at least 3 revisions before your exam for the subject. Yes, 3 revisions, bare minimum for you to pass, no doubt about it. Bare minimum, that is what is required. If you're doing anything less than 3, you're compromising your own paper. Yes, 3 revisions is what we are looking for to clear the paper. Now this is 3 not for direct tax alone, because obviously, unfortunately, direct tax is 50 and indirect tax is also 50, so which means it's 3 for both. 3 for both. I do not have control over indirect tax, so I leave it to your supervision. Yes, I'm not going to question that. nevertheless, direct tax is only 3 revisions, no less, no less. Yes, 3 revisions would almost not mean that you read the whole book once again. Understand there is something called learning curve, which means the first time you read it takes about 7 to 8 hours. The second time you read, you have to only read 5 hours. Third time you're only revising the 1 hour, and fourth time you're ready for the exam. Yes, that is how the plan of action should be. Learning curve should be there. Yes, if you come and tell me, Rahul, first time is also 7, second time is also 7, third time is also 7, might as well don't write the exam. Yes, so you have to have that learning curve with you. That is what the intention is. How, Rahul, 7 hours first time reading will happen? That is what we are doing today. That is what we're doing today. We're doing something called a speed reading. Obviously, the topic under discussion today will not be about understanding the concepts, because that is something which I'm assuming at this point of time you should know. No, should know. It's no is a different thing. No is then I'm trusting you with things. I'm not trusting you with anything. Yes, you should ideally know by this point of time. So I'm not going to give you those kind of trust. You should ideally know concepts at this point of time. If you still have any confusions on the concepts, I would recommend you that you discuss that with me later after the marathon goes forward. Because yes, I have blocked this room only till 5 o'clock. I need to leave at 4 o'clock, so we close at 4. We close at 4. We do not take anything beyond that. If you keep asking me doubts, then we stay back till night. I am happy to do it. I'm not sure how much you are comfortable. Yes, you ask me, Rahul, let's do night stay study. I will do it with you. Yes, I will book lunch, dinner, everything for you. I don't have a problem. Yes, but yeah, you have parents and I have challenges. Yes, so I do not want to take all those kind of risks with me. 4 o'clock max to max is what we will try to target and close. We will try to learn the concepts as much as we can. I will try to give you shortcuts for those of my friends who are not from this academy, but nevertheless, we will try to work it out. This time's pattern is a little different than what we do normally. Yes, normally what we do is we take a concept book, I keep the first page and I take the whole chapter. Yes, this time fortunately my May 24 students have helped me prepare something called as cheat sheets. So starting now we are only looking at cheat sheets. The 5 heads of income plus clubbing plus setup will be done from a single 9-side pages. Only 9 sides is what you're reading for exam. For your gross total income. Apart from that, all those topics we will be discussing from the concept book. So I'll be juggling between those. I will be taking concepts as per my material. Yes, for those of my friends who are not from this academy, don't worry about it. If you have learned from another faculty, you have learned from study material, subject has not changed. Yes, delivery is only changing. So I may have a different way of approaching things. You may have a different way of approaching things. I am not going to hear debate about who did better. Yes, my only topic is to tell you a topic and you tell me what is the provisions. That is what the whole understanding is. Is that clear? Hello? Yes. On that note is what we are trying to work it out. My voice is still low, is it? No, I think I'm clear. At least the OBS is telling me I'm clear. Madam, you may have to check your personal mobile. If you're trying to work with something called Redmi and everything, throw it off. It's anyway burning. Yes. I think my voice is clear, but nevertheless, if it is not, then yeah, we'll figure it out. Yes. Sweet. We are trying to do something called as direct taxes. Now, the syllabus from November 23 to May 24 as a slide changes. We have certain amendments to focus upon. So I will be paying special attention to your amendments as well. We will be discussing some, at least a little bit relating to your amendments. Not much, but we will be trying to do it. Yes, so that my November 23 students, if you have not understood the amendments yet, at least we'll try to focus it in today's class. Yes, but nevertheless, the more focus will be on the provisions. We're going to do on those. Your syllabus has now changed from 60-40 to 50-50. At the same time, your syllabus has undergone drastic changes in the sense that now ICA expects less of sums, more of concept understanding. A new syllabus expects you to be acting as a tax professional. Yes, most of the topics which you will learn on May 24 are now called as tax optimization. Meaning questions which will be tested in your exam are going to be more related to the fact that they will ask you, as the CA consultant, what will you recommend? As a person, what will you recommend? What is the most beneficial option and all those things? So when we discuss topics, we'll be also discussing about how to understand these most beneficial logics. That is what our understanding on this topics would be. It's still very low, is it? Everyone is telling it as well. Hello. Please fully one marathon I want to do. Hello. Hello. Check now. Lower or down? I don't know what I'm doing. Hello. 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 Mukina pottanu. Can you hear me now? Then I copy paste now. My voice is normally very audible. Please does not let me start it. I will cancel you. For all my friends who did not decide to come to physical class, you are lost. Is it still audible? Now it's audible. Hello, hello. புரியலடா. டேய் டேய் வாங்க போறேன். 100 போட்டேன், இந்த 200% வச்சுக்கோ. Hello. Now see. Check if it's not audible. Check if it's not audible. If I know tax or not, I'll definitely someday learn how to work on computers. Nevertheless, people get some woofers at home. Good time to buy things. Final check. Is this still audible? Yes, I assume it is audible. Hello. Yes, I think it's working. I'm assuming it is working. I'm going to boof it up to 200%. Staying at home, please advise your parents to leave the room. Yes, perfect. Now it is making sense. Awesome. Okay. Yes. Wasting too much time. 7:35. Okay. Rules of the marathon. I'm talking headings. You are talking provisions. I'm talking heading. You're talking provisions. You will be given sufficient breaks as per my wish. Yes. So your breaks are as follows. You get one break at salaries or 9:30, whichever is later. You get salaries or 9:30, whichever is later, and then you get 5 heads of income or 1 o'clock, whichever is later. Whichever is later. Yes, you are completing 5 heads of income by lunch with me. Yes, that is what the target is. We will do it. We'll do it. If not, Rahul, Rambo Pasigdana, have food at your place. Have food at your place. I'm okay. Yes, I can stay without food. I am kind of person. If you have food in your place, open boxes, start eating, no problem. Yes, but you're not leaving the class until 5 heads of income. Breakfast you cannot have here. Lunch you can have. Okay? Yes, yes, please keep those thoughts in mind, but nevertheless, I'm just kidding. We will have sufficient break. Don't worry about it. But we are starting with this concept called as Direct tax. Yes, I'm going to look at chapter number 1 first. Before I do that, I always have some golden rules which I discuss in my classes with my students. The golden rules are as follows. We start from identifying question, finding out the person and his residential status, checking whether the income is taxable or not, classifying the income into 5 heads of income. Yes, after you classify the income, you need to provide for deductions and expenses under those heads of income. You will arrive at something called as income from all heads. Step number 6 becomes clubbing of income. Step number 7 becomes providing for losses and unabsorbed depreciation. At this stage, what you will have is called as gross total income. From this gross total income, you will reduce something called as chapter 6A deductions and 10AA deductions, SEZ deductions and 10AA deductions. You will arrive at something called as total income. Starting this attempt May 24, your step number 9 changes. Step number 9 changes for all of my friends of November 23. You would have first done old regime. Now we are going to do default regime first. Yes, so we'll first compute tax as per default regime, then we'll compute tax as per alternate regime. You will then compute tax as per AMT. You will compute tax as per AMT. It would be alternate versus AMT, whichever is higher, compared with default, whichever is lower. Compared to default, whichever is lower. This is your optimization part. This is your optimization part. When a question comes and says, tell me what is most beneficial, you will come and check for your alternate along with AMT, whichever is higher. Compare that with the default, whichever is. We will discuss all these things. We'll discuss all these things. Don't worry about it. Yes. This step will give you your tax liability. This step will give you your tax liability. From this tax liability, you will reduce AMT credit, TDS credit, advance tax credit, any other things, self-assessment tax credit. Then that's all. Yes. At next step, you will add your interest. You will arrive at your final tax payable. This final tax payable gets rounded off to nearest 10. This gets rounded off to nearest 10. Pay all these taxes. File your returns. Update if required. Updated return is required. This is your step number 16. This is your step number 16. These are my golden rules of taxation, and one has to follow this religiously. One has to follow this religiously. Do not do step number 16 without doing step number 1. Answer. Yes, we need to focus on those things. Nevertheless, our topics are going to be a little jumbled. We will not be doing step number 1, 2 first. We will be doing step number 9, 10 and 11 first. Yes, we are looking at something called as basics of income tax before we go to rates of taxes. Your first chapter is about basics of income tax. Not much important from exam perspective, but nevertheless, basics of income tax come and talk about whether what is income tax. We only have to understand the fact that income tax is levied by government because Constitution approves for the same. Constitution approves for the same. Constitution is you can levy or collect taxes only by an authority of law. You have two kinds of taxes. One is direct tax, one is indirect tax. Both are there for syllabus. Both are there for exams. So I don't have to tell you what it is. I don't have to tell you what it is. You have something called as income tax laws. Income tax laws are generally bigger than act. Yes, your laws comprise of act, rules, circulars, notifications, case laws. Yes, act is there for exam, rules is there for exam, circulars is there for exam, notifications is there for exam, case laws are final. Case laws are final. For your current May 24, your applicable Finance Act becomes Finance Act 2023. Finance Act 2023. Your Finance Act becomes Finance Act 2023, on which you are getting assessment year 24, 25. You're getting assessment year 24, 25 for your exam. In your exams, 99% of the questions will relate to 24, 25 unless question specifies otherwise. Unless question specifies otherwise, your first heading itself in the question will come and say that all questions are relating to 24, 25 unless they specifically ask you for any other assessment years. If they don't ask you, don't do. They don't ask you, don't do unless you are doing only assessment year 24, 25. Is that clear? Yes. After Finance Act, what happens is you get your circulars and notifications. The only MCQ question from exam perspective is, Rahul, which one is binding on department? Which one is binding on department? Both are binding on department. Both are binding on department. Rahul, which one is binding on assessees? Only notifications are binding on assessees. In simple words, Rahul, when it comes to circulars, circulars are binding only on department. Notifications binding both on department and assessees. Binding on both department and assessees. Circulars are basically those kind of items which are going to give you clarifications. Notifications are those kind of items which are going to help you understand what is the changes. What is the changes? Notifications is what is got used for you to draft your rules. Is what is used for drafting your rules. From exam perspective, only thing to keep in mind, circulars are binding on department only. Notifications are binding on both department and assessees. Department and assessees. You have some definitions and all for your chapter number 1. Not so important. I will tell you what definitions are important. One definition which has been tested in exam in the past is called as assessee definition. One definition which is tested in the past in exam is called as assessee definition, where they come and talk about who is an assessee. In simple words, Rahul, assessee is a person who is liable to pay tax or any other sum under that. Any other sum can mean interest, penalty, etc., etc. But you also are including those kind of people who are going to have proceedings initiated against them for checking their incomes, losses, refunds, for checking their incomes, losses and refunds. So I'm saying, Rahul, assessee is a person who is liable for tax or any other sum and is including any person for which you are going to launch proceedings for income, losses, refunds, income, losses and refunds. It is also including something called as an assessee in default, which is basically those kind of people who default in paying their TDS. This is what the assessee definition is. And overall bird's eye view, this is what you write in exam. That is enough for go. Don't have to mug up and vomit the same provisions. Not required. Yes. After your assessee definition, we had your assessment income. Not important. You have something called as capital revenue receipt. This has come last time's MCQ question. This has come in the last time MCQ question as to differentiate between what is capital receipt and revenue receipt. Yes. In simple words, Rahul, if you are going to do a transaction which is non-recurring, it is capital. If you are doing a transaction which is recurring, it is revenue. Rahul, if you are going to sell your stock, it is revenue receipt. If you are going to sell your assets, it is capital receipt. Rahul, if it is not going to be done in a daily course of business, it is capital receipt. If it is going to be done in daily course of business, it is revenue receipt. Rahul, if you are holding shares, as a share broker, you are doing revenue receipt. If you are doing shares as an investment, it is capital receipt. Yes or no? Rahul, I am buying assets. I came and told him that I want the assets within 2 days. He said, Rahul, I will be giving it to you in 2 days. I said, you promised me that you will give it in 2 days. If not, you have to pay me 1 crore penalty. He did not give me the assets within 2 days. I asked him to pay 1 crore penalty. Rahul, this penalty is capital revenue. Capital because relating to asset. Yes or no? Yes. Rahul, I have an agency. I am the only agent for Reliance. I am coming and saying I am Reliance Soda agent. Tomorrow Reliance comes and says you are not doing a good job, please exit. I come and say, sir, you are my only bread and butter. Please give me some compensation before I leave. I get compensation from Reliance. Revenue, capital because only source of income. Rahul, I am an agency having 100 agencies with me. One of the agency comes and says, I want to let you go. I said, sir, please give me compensation. This is revenue because you have multiple agencies, one of which is not going to impact you so much. Now you are working in a company, you are an employee of the company, receiving salaries. Company is giving you salaries, but came and said, boss, I'm sorry, please leave the company. I said, sir, if you want to throw me out, you have to give me retrenchment compensation. Rahul, revenue, capital because only source of income. Rahul, I'm going to receive gift from my friend. Revenue, capital. Rahul, I'm going to waive off a loan of a person. Waive off the loan. I gave loan to someone. I gave the loan to someone. I came and told Rahul, I don't want the loan to be repaid anymore. I waived off the loan for him. Capital revenue. Because again, loan relating to capital nature. You understand what is happening? Yes. Be very clear now. Recurring now. Capital. Revenue it is. If it is non-recurring, it is capital. If it is the only source, it is capital. If it is not the only source, revenue. Yes or no? Please keep those things in mind. These are being tested in MCQ. Fairly straightforward. Be careful about it. Yes. Then you have something called as charge of income tax. Not so important from exam perspective, but nevertheless, the provisions are coming and saying, now, if you are going to have to pay income tax, you have to pay as a person. On the total income at the rates in force for the income earned in previous year in the assessment year. Persons and income tax are individual, HUF, firm, AOP, BOI, AJP, local authority. Yes, I came and told Rahul, you have to pay it in previous year. For your exam, previous year is 23, 24. Assessment year is 24, 25. Assessment year is 24, 25. Now, previous year will be always for 12 months. No, previous year can be less than 12 months depending on business started in the middle of the year. Business started in the middle of the year. Correct, not correct? Yes. Now, business does not started. Previous year will start from today. Previous year will start from today. Now, assessment year will always be for 12 months. Yes, assessment year is only for 12 months. You do not have to change your assessment year. Yes or no? Yes or no? How can previous year and assessment year be same? Normally, no, but you have exceptions of 5 rules. You have exceptions of 5 rules, Mr. Vijay Mallya case. Mr. Vijay Mallya case. First of all, AOP BY started in the same year, discontinued in the same year. Then, ship of a non-resident outside India coming to India, carrying passengers. Next, business is discontinued in the previous year. Persons leaving India with no intention of coming back. Last one. Sale, dispose, transfer, charge, lease of your assets with an intention to evade taxes. Yes, Vijay Mallya selling his F1 racing, decides to shut down Kingfisher, comes and sells all his assets, closes Kingfisher, goes and calls Barbie Doraemon, whatever it is, Barbie Doraemon, and asks him to bring a ship, comes and collects the passengers, leaves India. Yes or no? Yes, 5 conditions for you to keep in mind. Theory question for your last question. Question number 4 in exam, theory question. Please be careful. Yes. This is what your chapter number 1, basics of income taxes. Is clear? Yes, people on online, I'm assuming it is now audible. I heard one comment saying it is slow. If it is still low, please drop me a message. Not that I can do anything about it, but nevertheless. Yes, we're moving on to chapter number 2. Before I move on to chapter number 2, please to understand total income means what? Total income means income from salaries, house property, profits and gains of business or profession, capital gains, IFOS. You will add all these things, you will get income from all heads. In this you will add clubbing, reduce, set off, claim, chapter 6A and 10AA arrive at total income. When you have already reduced deductions, it becomes total income. Yes or no? Yes. Proceeding forward to chapter number 2, you are looking at something called as rates of taxes. Before I start these rate of taxes, please understand this is the amendment of current year. This is an alternate regime now. Which means we need to now focus on default first. We have something called a section 115 BAC. We need to focus on something called a section 115 BAC. Income tax comes and says that Rahul, if you are going to have section 115 BAC, if you are going to have something called a section 115 BAC, we are now going to call it as default tax regime. Income tax comes and says under this regime, the persons eligible are individual, HUF, AOP, BOI, AJP. Yes, every persons are covered. Whether they are resident or non-resident, it does not matter. Whether they are resident or non-resident, all persons are covered. Now, what are the tax rates given to you? 0 to number is 0, 3 lakhs to 6 lakh, number is 5, 6 lakh to 9 lakh, number is 9 to 12 lakh, 15, 12 to 15, 20, 15, above, directly 30. Now 25 is lost. Was there till old syllabus? Is not there in the new syllabus. Not there in the new finance act for that matter. But I am with us. Yes, these are what your tax rates are. Here, not here. Yes, please be careful about this. Now, if you are going to have these tax rates, these are only going to be for middle class. Which means you have other 2 categories called poor, rich. Rahul, if you are going to be classified as poor, you are eligible for rebate. Rahul, how do you call yourself poor? If you are going to be a resident individual having total income less than 7 lakhs in the new default regime, income has become 7 lakhs. Rahul, how do you get your rebate? You will get it as tax payable or 25,000, whichever is lower. Correct, not correct? Correct, not correct? Yes, please be careful about this. Please be careful about this. Rahul, if you are going to be found as a rich person, you will now be liable for surcharge. Rahul, surcharge rates 0 to 50 lakhs, nil after 50 lakhs to 1 crore, 10, Rahul 1 crore to 2 crores, 15, after 2 crores, 25, Rahul 37 is not there. 37 is not there under the default tax regime. Please do understand the fact that when you're talking about surcharge, these numbers are not slab. These numbers are not slab, meaning if the income is 55 lakhs, full 55 lakhs of the tax is liable for 10%. Full 55 lakhs income is liable for 10%. You will not come and say, Rahul, for the first 50 lakhs I will do 0 surcharge and the next 5 lakhs I will do 10% surcharge. Everything becomes liable for 10. Everything becomes liable for 10. Correct, not correct? Correct, not correct? Yes, please be careful about this. Now, if you are not going to be opting for default regime, you are going for something called as alternate tax regime. Under alternate tax regime, they are coming and saying, tell me whether you are individual who is a resident or any kind of non-resident. Individual who is a resident or any kind of non-resident. Income tax is, your slabs are 0 to 2.5 lakhs, number is 2.5 lakhs to 5 lakhs, number is 5%, 5 lakhs to 10 lakhs, number is 20%, above 10 lakhs, number is 30%. But Rahul, if you come and tell me, no, Rahul, I am an individual resident more than 60 years, 2.5 becomes 3 lakhs. 2.5 becomes 3 lakhs. No other change in the law. Correct? Yes. Rahul, I am coming and saying, no, I am actually not to more than 60 years. I am more than 80 years. Income tax says, forget this slab. This becomes 0 to 5. This becomes 0 to 5 lakhs. This means 0 to 5 will become 0. 0 to 5 will become 0. 5 to 10 will become 20. After 10 will become direct 30. After 10 will become direct 30. Yeah. Please understand at this point of time, income tax comes and says any time during the previous year. Meaning, in the year if you have crossed 60, any time it is eligible. In the year if you have crossed 80, at any time it is eligible. Meaning, for your exam, if the question comes and says how the person was born on 1st April 1964 or 1st April 1944 and prior, the person is eligible for higher basic exemption limit. The person is eligible for higher basic exemption limit. Yes or no? Yes. So I am saying, Rahul, if you are going to have an income, if you are going to be a person who is going to have date of birth 1st April prior for 1964 or 1944, you are eligible for higher basic exemption limits because you are assumed to have completed 60 years or 80 years of age. You are assumed to have completed 60 years or 80 years of age. Is that clear? Yes. Now, if you are going to be these kind of persons, you again have to classify yourself into rich or poor. You again have to classify yourself into rich or poor. Meaning, Rahul, if you are going to be poor, you are going to be getting rebate. Rebate will be eligible if you are a resident individual having total income less than 5 lakhs. Number becomes tax or 12,500, whichever is lower. Whichever is lower. Rahul, if you are going to be a rich person, you are eligible for surcharge. Surcharge becomes 0 to 50, 0, 50 to 1, 10, 1 crore to 2 crores, number is 15, 2 crores to 5 crores, number is 25, above 5 crores, 37%. Yes or no? Yes, this is what your provisions are. This is what we have to learn about. Clear? Yes. Now, Rahul, when it comes to these kind of things, you also have something called as special tax rates. What are the special tax rates, Rahul? First is capital gains. Under capital gains, you have LTCG. Under section 112, number is 20%. LTCG under section 112A, number is 10% excess of 1 lakh. 10% in excess of 1 lakh. Then you have short-term capital gains under section 111A, number is 15%. There is nothing called short-term others. Those will be taxable at slabs. Apart from this, you have something called as winnings. Number is 30%. Apart from this, you have something called as online winnings. New amendment for current year. You have something called as online winnings. Number becomes 30%. Rahul, how do you check for online winnings? Ask yourself a simple question. Rahul, what is my closing balance? What is my closing balance? Add what you have withdrawn in the current year. Add what you have withdrawn in the current year. Remove something called as opening balance and remove something called as deposits made in the current year. Number will become your winnings of online. Number will become your winnings of online. For those of my friends who have not understood this provision carefully, there are some videos on YouTube where I have explained all the amendments. Explanation of this amendment will be there in the YouTube channel. You can find it in the YouTube. You can learn from there. Yes or no? Yes. Apart from this, you have something called as unexplained expenditure. Unexplained expenditure or unexplained income. Limit is 60% plus 25 flat percent. Plus 25 flat percent. Apart from this, you have to levy cess. So 25 becomes a flat surcharge. Yes or no? Yes. On this, Rahul, whatever surcharges you have right now, income tax says, Rahul, whatever surcharges you have after 15, meaning 25 and 37. These 25 and 37 will not be applicable for 454. Number is LTCG under section 112, LTCG under section 112A, STCG under section 111A, and dividend income. These are the four kind of incomes which will not be levied for additional surcharge of 25 and 37. On these incomes, the surcharge will maximum remain 15%. You cannot have anything more than 15 for these incomes. At the same time, income tax says, because of these incomes, if the other incomes are going to change the slab, do not let them change the slab and do not levy higher surcharge. Minimum in those cases will be 15, maximum in those cases will be 37. In simple words, Rahul, how will this work out is income tax is coming and telling, do one thing. Tell me what your total income is. If your total income, including all income, is less than 2 crores, if your total income, including all income, is less than 2 crores, the maximum which you can levy is only 15. In that case, do you have to split or not split? No split. Don't split it. Take the income as it is. 0 to 50 lakhs income will become 0. 50 lakhs to 1 crore income will become 10%. 1 crore to 2 crore income will become 15%. 2 crore and above income will become Barad, because we just told it is not applicable. Yes. Assuming, Rahul, your total income is going beyond 2 crores. Income tax says, do one thing. Split the income into 4 incomes we discussed and the other incomes. Split the income into 4 incomes which we discussed and other incomes. The 4 incomes which we discussed will always be 15%. The other incomes, standalone basis check now. If it is anywhere between 0 to 2 crores, minimum 15. Anything above 2 crores, 25 in default regime. In alternate regime, up to 5 crores, 25, after 5 crores, 37. Clear? Yes. Just to take a simple example so that you can understand it along with me. We are looking at the table where the table is coming and saying, Rahul, these are the cases. I am saying, Rahul, there is a specified income of 15 lakhs. There is another income of 25 lakhs. Total income has become 40 lakhs. Now total income is 40 lakhs. Will you be liable for 25 and 37? Which means, do you split or not split? No split. Don't split the incomes, which means I'm going to look at it as it is. My surcharge on specified income will become 0. My surcharge on other income will become 0, because, Rahul, everything is less than 50 lakhs. Yes or no? Yes. I'm looking at case number 2, Rahul. Case number 2 comes and says my specified income is 15 lakhs. My other income is 75 lakhs. Rahul, if my other income is 75 lakhs, I am coming and saying you will have to take your total income as 90 lakhs. If your total income is going to be 90 lakhs, Rahul, is it more than 2 crores, less than 2 crores? Less than 2 crores. Therefore, you will again not split. If you're not splitting, you're checking the income as it is. 90 lakhs, surcharge rate is 10% on both. 10% on both. Correct, not correct? Yes. Now I'm looking at case number C. The case is coming and saying 15 is your specified income, 170 is your other income. Total income is 1 crore 85. Now more than 2 crores, less than 2 crores. Split or together. If you're checking together, 1 crore 85 falls in 2 crores. Surcharge becomes 15. Number is 15 on Both sides. Number is 15 on both sides. Correct? Correct. I'm looking at case number D. It says 15 and 395. Total is 410. 4 crore 10 lakhs. 4 crore 10 lakhs. Rahul, is it more than 2 crores, less than 2 crores? More than 2 crores. If it is more than 2 crores, you will split and check. Rahul, if you're splitting and checking, specified is always 15. Others now split and check. 3 crore 95. 3 crore 95 falls within 2 to 5 crores. Falls within 2 to 5 crores under alternate regime. Therefore, it becomes 25. Under default is also 25. Under default is also 25. Correct? Yes. I'm looking at 15 and 565. Total becomes 580. Total becomes 580. 5 crore 80 lakhs. 5 crore 80 lakhs. Rahul, more than 2 crores. Therefore, split and check. If I'm splitting and checking, specified is others is 37 for alternate, 25 for default. Correct? No. Correct? No. Yes. I'm looking at 60 and 30. My income is 60 lakhs and 30 lakhs. Total becomes 90 lakhs. My 90 lakhs is less than 2 crores. Therefore, I will check together. I'm checking together. If I'm checking together, it falls between 50 to 1 crore. Number becomes 10% for both. 10 for both. Okay, people are understanding. Yes. I'm looking at case number G. Number is 60 plus 125. Total becomes 185. 1 crore 85. Number is less than 2. Therefore, no split. Check together. 1 crore 85 falls within 1 to 2 crores. Number becomes 15. This side, Rahul. Both sides, Rahul. I'm looking at point number H. 60 and 350. That total becomes 410. 4 crore 10 lakhs. Number is more than 2 crores. Therefore, if I'm splitting, specified becomes other becomes 25%. Yes. Next one, I'm looking at 60 and 520. 60 plus 520 is 580. Number is more than 2 crores. Therefore, split, specified becomes others become 37 or 25. Correct? Yes. I'm looking at 130 plus 55. Total is 185. Total is 185. Rahul, number should be less than 2 crores. Therefore, keep together. Keep together. Number is 15 on both. Rahul, I'm looking at 130 plus 280. Number is 410. Number is 410. Rahul, left side is 15. Right side is 25. 2 crore to 5 crores. Next, 130 to 450. Number is 580. Left side is 15%. Right side is 25. Rahul, I'm looking standalone. I'm looking at standalone basis. Standalone basis income is 4 crore. 50 lakhs falls between 2 crores to 5 crores. Number remains at 25. Number will not go to 37. Number will not go to 37 because income standalone basis less than 5 crores. Income standalone basis less than 5 crores. Clear? Yes. Next. Rahul, I'm looking at 220 plus 190. 220 will become 15. 190 will become same 15%. Same 15% because Rahul, standalone basis income is between 1 crore to 2 crores. Surcharge is 15%. Rahul, next one is 220 to 360. 220 becomes 15. 360 becomes 25 because standalone basis not more than 5 crores. Not more than 5 crores. Rahul, last one very carefully. 525 plus 55. Number is 580. My specified income is 525. Surcharge becomes 15. My other income is 55. Surcharge becomes 15%. Surcharge becomes 15%. Rahul, but the income is less than 1 crore. Income is less than 1 crore. Doesn't matter because minimum surcharge 15. When your income is more than 2 crores. When your income is more than 2 crores, minimum surcharge is 15. Rahul, can I bring it to 10 or 0? No. Because income is at least more than 2 crores. Income is more than 2 crores. Is that clear? Is that clear? No confusions? No confusions? No. Rahul, now if I am going to look at my surcharge and my rebate, I now have something called as marginal relief. I now have something called as marginal relief where income tax is coming and telling that yes, if you are going to have an income which is very close to the slab where the surcharge changes, your income is very close to a slab where the surcharge is changing. For example, if your income is 50 lakhs, your income is 50 lakhs. Rahul, surcharge will apply, not apply. Surcharge will apply, not apply. Surcharge will apply, not apply. It will not apply. Up to 50 lakhs, no surcharge. Up to 50 lakhs, no surcharge. Come in. Yes. If I am saying, Rahul, your income is 51 lakh. Your income is 51 lakhs. Rahul, if your income is 51 lakhs, will your surcharge apply now? Yes. But Rahul, notice what is happening. How much extra income have I earned? 1 lakh. For the extra income of 1 lakh, if you actually compute tax, you'll end up paying more than 1 lakh. You'll end up paying more than 1 lakh. Income tax says you cannot pay more than 1 lakh. You cannot pay more than 1 lakh because you have earned only 1 lakh. Do one thing. Surrender the 1 lakh rupees. I will not ask you for any extra tax. Surrender the 1 lakh rupees. I will not ask you for any extra tax. For example, numbers are not right. For example, I'm saying around 50 lakhs ka income is coming as 12 lakhs. Assuming I'm telling, okay? I am not telling it is the right answer. I'm telling assuming. Assuming the number is coming as 12 lakhs. Assuming here the number comes as 13 lakh 40,000. The number comes as 13 lakh 40,000. Notice what is happening. How much extra income did I earn?
1 lakh.
1 lakh. How much extra is he asking to pay? 1 lakh 40. Will I pay this 1 lakh 40? Will I pay this 1 lakh 40? No. I will come and tell, sir, why should I pay you 1 lakh 40 for earning extra? 1 lakh. Let me give up the 1 lakh and I will not pay anything extra. Extra is 40,000. Income tax will say, you surrender the 1 lakh rupees. I will give you 40,000 as marginal relief. I will give you 40,000 as marginal relief. This marginal relief you will reduce from 13 lakh 40,000 and number will become 13 lakhs. Number will become 13 lakhs, which is nothing but the tax which is payable on 50 lakhs plus the surrendered income. Both sides will come 13 lakhs. Rahul, notice one thing very carefully. Marginal relief always applies before cess. Marginal relief always applies before cess. Please be very careful about it. Do not do cess and then do MR. MR always happens before cess. MR always happens before cess. Do not make that mistake. If you do it after cess, you will get wrong answers. Because income tax wants more money. Income tax is saying pay cess on the 1 lakh also. Please always do MR before cess. Is that clear? Yes. Now, MR will apply for any person. Whether you are resident, non-resident, any person, as long as you are going to have an income more than the slab where the surcharge changes. I'm not sure how many of you have taken the efforts this time, but mock test paper number 1 released by ICA. Compulsory question number 1. Question came somewhere relating to total income and tax payable in the most beneficial manner. Where what happened is they asked you to do default regime and alternate regime. The problem what happened is people were so bothered about doing default and alternate regime, they did not realize the fact that in default regime the number came as 50,38,500. Rahul, the moment I'm saying 50,38,500, the one thing which should strike my head is there is a marginal relief coming into the question. In that question, they ask you for default regime ka full computation, alternate regime ka full computation, AMT ka full computation, then tax on both the sides. Right side tax will be lower because they will have a lower incomes, but left side tax, which is the default regime, also had to be done MRs. 115 mark question. You have to do full default regime, full alternate regime, full AMT, one tax in default with marginal relief, and one normal tax. All these 5 things together carried 15 marks. No one completed the paper. Not possible. Obviously not possible. The weightage was too high. The expectation was way too much. For those who have not tried it, please try it. You will realize the kind of complexities. Because I told you this time ICA does not want to see what your provisions, what your sums are. ICA wants to see what your concepts are, what your concept clarities are. One question they asked you 5 different things and they played around with things. Be very careful about these kind of questions. Yes. Now, what I'm trying to tell you is in exam, if a question comes and they say compute tax full stop, you need to do both and check whichever is lower. When they say compute tax in the most beneficial manner, you need to do both and then check whichever is lower. Unless the question comes and says compute tax as per alternate regime or compute tax as per default regime, you cannot avoid both. You have to do both. Rahul, can I make an assumption right away itself and come and say tax will be lower in default, therefore I will not do alternate? No, you have to do both. Unless and until you are very clear that the income in both the scenarios are not changing. Yes, if you have a clear clarity that income in both the scenarios will not change, then you can put that assumption. Depending on the mark. Depending on the mark. If it's a 4-mark question and you have to do the full question with the tax, then you can make such assumptions, provided income does not change. The income is changing, you have to do both. You have to do both, no doubts about it. Clear? Yes, please be smart about this. Please be smart about this. Now, how will it be presented in exam? They will give you two English. They'll give you two English. One, they will come and say compute tax as per default tax regime. One, they will give compute tax as per default tax regime. Second, they will say compute tax assuming he is opting out of default tax regime under section 115 BAC subsection 1A. Subsection 1A. Now, don't get intimidated by saying 115 BAC, Rahul. Just because you saw 115 BAC, let's do default. No. Yes, section is not important. English is important. What does the English say? Meaning he is going for alternate tax regime. Rahul, what is the significance of this? This subsection is what comes and tells you can opt out. This subsection is what comes and tells you can opt out. Subsection does not say do default. Subsection says come out of default. Come out of default. So please don't get intimidated by this. You have to be smart about the fact that the second one is talking about alternate regime. The second one is talking about alternate regime. You need to be very smart about this. One small mistake in finding out the regime, the answer is fully wrong. You don't have to start the question itself. The examiner will look at the heading and will come and say, okay, wrong regime, cut the full mark. Cut the full mark, no step marks for anything, because regime is wrong. Regime is wrong. Are you clear? Are you clear? Yes, this is what your concept of regimes are. But nevertheless, we were discussing about marginal relief. The second thing in the amendment of the current year, the most important amendment of the current year, called as marginal rebate. The most important thing of the current year, called as marginal rebate. This is only there in default tax regime. Rahul, this is not there in alternate tax regime. This is not there in alternate tax regime. We are looking at something called as marginal rebate. Expect a question 101% in exam. Expect a question 101% in exam. This question got tested as an MCQ in RTP also, MTP1 also, MTP2 also. All the three places it was there, which means chances of this is coming is 101% there. 101% there. Rahul, in exam, will they tell you that you have to do marginal rebate? No. You have to know. You have to know. Rahul, what is marginal rebate? Income tax is coming and telling the same logic. Understand? If you are a person who's having an income up to 7 lakhs in default regime, income tax will say your tax payable is 0. Your tax payable is 0. But if you are coming and telling me, no, Rahul, my income is 7 lakh 1,000. My income is 7 lakh 1,000. Rahul, what will happen? Are you now eligible for rebate? Are you now eligible for rebate? No, because 7 lakhs you can claim rebate. After 7 lakh 1,000, you cannot claim rebate. You need to do the full tax. You need to do the full tax. And you'll realize up to 7 lakhs number is 25,000. After that, the balance 1,000 you'll have to pay at the rate of 10%. Number becomes 100. Number becomes 25,100. Hey, tell me, Rahul, how much have you earned extra? 1,000. How much extra are you paying? 25,100. Do I look stupid? Do I look stupid? No, because understand how much extra did I earn? 1,000. How much extra tax are you asking? 25,100. Will I pay 25,100? No, I will tell the government, take the 1,000 and leave me silent. Leave me silent. Which means I'll come and say, forget this whole thing. I will pay 1,000. Add cess 40. Number becomes 1,040. This is what I'll pay you. This is what I'll pay you. Clear? Yes. This is what your marginal rebate in your default tax regime is. This is not there in alternate tax regime. Meaning in alternate, Rahul, it goes 5,100. It goes 5,100. Will I pay that extra? Yes. Rahul, it's wrong. Yes. Does it matter? No. Yes. Understand, this is only there in default tax regime, which means if your income is going to be somewhere up to 7,27,000 something. Yes, you don't have to mug up the number. I'm just saying if your number is somewhere up to 7,27,000, income tax will say, boss, you are eligible for now something called as marginal rebate, where you do one thing, you surrender your income to me. You surrender your income to me, and I will not ask you for any extra tax. I'll not ask you for any extra tax. So here also what I will do, I will surrender 27,000. I will add 4% cess, and I will pay this much as a tax. I'll pay this much as a tax. Is that clear? Is that clear? No confusions? Yes, please be smart about this. Please be smart about this. Can we go for? Yes, please mark this as important. This is very crucial for your exams. This is very crucial for your exams. Clear? Yes. This technically completes your rates of taxes for your for your chapter number 2, with some small things pending. One thing to keep in mind, Rahul, when you talk about rebates, whether it is 5 lakhs or 7 lakhs, this rebate cannot be claimed on LTCC under section 112A. 112A is not eligible for any kind of rebates. You have to bare minimum pay the tax. So please be careful about this. In exam, if you see an income up to 5 lakhs or 7 lakhs, and the question has 112A. If the question has 112A, stop there. Always ask yourself, Rahul, am I at least paying the tax on 112A? If yes, then great. If not, then pay the tax on 112A bare minimum. Bare minimum. Yes or no? Yes. Take a simple example where I'm coming and saying, Rahul, what is happening is there is a person with an income of 3 lakhs. The person also has an 112A of 1,50,000. The person has an income of 1,50,000. His total income is 4,50,000. His income is 4,50,000. Clear? Yes. Now, Rahul, assuming I'm going for default tax regime. On 3 lakhs, number becomes 0. On 112A, what will you do? Reduce 1 lakh, balance 10%, number becomes 5,000. Total becomes 5,000. Rahul, can you claim rebate? No, because you have to bare minimum pay 5,000. So 5,000 will be fully taxable. Add 4% cess, get the answer. Please be very careful about this. You cannot claim any kind of rebate when it comes to 112A. Is that clear? Can we go for? Yes. Second, Rahul, you have something called as kaju katli. What is kaju katli, Rahul? Basically, if you're coming and saying this number was not 3 lakhs. This number was only 2,50,000. How much was it? 2,50,000. Rahul, if the number is 2,50,000 and you're under default regime, did you utilize your whole basic exemption limit? No. Income tax says if you are not able to utilize your full basic exemption limit, you can bring in your kaju katlis, which is 112A and 111A. You can bring in these three. Try to adjust your basic exemption limit and pay no tax. In my example, what will happen is, Rahul, if my income is 3 lakhs, basic exemption is used. But if my income is 2,50,000, I will move 1,50,000 lender, 50,000 inside to my basic exemption limit. My new basic exemption limit is 3 lakhs, and my new 112 is 1 lakh. Now on this, Rahul, tax is 0. Tax becomes 0. You understand what I'm doing? Yes, this is called as kaju katli example, where I'm coming and saying that, Rahul, if you're not able to utilize your basic exemption limit by the Finance Act incomes, bring in your capital gains and adjust the basic exemption limit in order to pay lesser taxes. Two conditions for this. Condition number 1, you can only do it for capital gains. You cannot do it for winnings, online winnings, unexplained income. Those cannot be used. Condition number 2, if you want to use kaju katli can only be had by residents. No one else can use it. Non-residents are not permitted to use kaju katli, meaning they have to pay full tax on 1,50,000. They have to pay full tax on 1,50,000. For them, there is no kaju katli. Clear? Yes. Which means in Rahul, chapter number 2, there are two things where residents are treated well. One is rebate. Rebate is eligible for resident, not eligible for non-resident. Second, kaju katli, where residents can use kaju katli, non-residents cannot use kaju katli. Yes or no? Yes. So you have to only avail benefits of residents in 2 places. Balance places, you are not eligible for the benefits. Is that clear? Yes. Rahul, apart from this, what does this chapter have? The chapter has tax rates on other people. The first one is firm. Income tax says tax rate is, don't worry if you don't remember, it doesn't matter. Tax rate is 30%. Surcharge becomes 10 or 12 in excess of 1 crore. If you are going to have an income more than 1 crore, you can claim a surcharge of, you have to pay a surcharge of 12. Rahul, marginal leave can be claimed, not claimed? Can be claimed. Everyone is eligible for marginal leave. Whether it is a firm or a company. As long as you are richer, you will get marginal leave. Rahul, can a firm do rebate? Yes, sir. Rebate இருக்கும்போது rebate வரமா கேக்குறாங்க. Will you claim rebate? No. Understand, rebate is only for Individuals. Rebate is only for individuals. It's not for anyone else. No one else can claim a rebate. Yes or no? Yes. Rahul, if you're not a firm, you're a company. In company, there are two classifications. One is domestic company. One is foreign company. Income tax is foreign company rate is 40. Domestic company rate is 25 or 30. Rahul, how is it 25? If your turnover for previous year, previous year, previous year, 21, 22. Rahul, how did you get? Forget your previous year, forget last previous year. Forget your previous year, forget last previous year. It is previous year. It is previous year. Previous year is 23, 24. Adhika previous year is 22, 23. Adhika previous year is 21, 22. Adhika previous year is 21, 22. It is to be less than 400 crores. Less than or equal to 400 crores. In that case, you will be eligible for something called as 25%. If not, you will be eligible for 30%. Rahul, if you are going to do this, you will also have something called as surcharge. Surcharge is 0, 7 and 12. Here surcharge is 0, 2 and 5. Rahul, what is this? For 0 to 1 crore, it is 0. 1 crore to 10 crores, it is 7. After 10 crores, it is 12. After 10 crores, it is 12. I am making it very clear to you once again. Please do not make the mistake of assuming surcharge at slabs. Surcharge is not at slabs. Surcharge is on the income. Surcharge is on the income. Check your income. If the income is 5 crores, you will do surcharge of 7 or 2. You will do surcharge of 7 on 2. Now, surcharge is on what? Surcharge is on what? Surcharge is on basic tax. Surcharge is on basic tax. You will compute the tax. On that, you levy surcharge. On that, you levy surcharge. On that full figure, you levy cess at the rate of 4%. At the rate of 4%. Yes or no? Yes. So please understand, tax is on income, surcharge is on tax, cess is on both. Cess is on both. Yes or no? Yes. Rahul, rebate you will give after cess or before cess? Rebate you will give after cess or before cess? Before cess. Relief you will give after cess, before cess? Before cess. Surcharge you will give after cess, before cess? Before cess. Everything is before cess. Everything is before cess. Clear? Good to go. Good to go. Yes, this is what your provisions are. This is what your provisions are. Any confusions? No. This is your chapter number 2. This is your chapter number 2. Can we go for? Yes. You have the next chapter in my book, something called as unexplained incomes. Unexplained incomes. This is the 2 seconds chapter. This is the 2 seconds chapter. The provision is very simple, straightforward. Unexplained income comes and says, Rahul, you are liable for tax at the rate of 60 plus 25% surcharge plus 4% cess, effectively becoming 78%. Effectively becoming 78%. Income tax comes and says, Rahul, you will be called as having an unexplained income. You will be called as having an unexplained income. If the assessing officer comes and asks you for the source, comes and asks you for the source. The most important thing in this chapter is something called as source. So, assessing officer will come and ask you, tell me the source. If you tell him the source and he's happy, no problem. If you tell him the source, he is not happy, 78%. You don't even tell him the source, 78%. In simple words, Rahul, this provision comes and says, assessing officer should either not be satisfied. He should either be not be satisfied, or he should not got any explanation. Not got any explanation. If the assessing officer has not received any satisfied explanation, or he has not even got any explanation, whatever source he was talking about will become fully taxable as unexplained income. Will become fully taxable as unexplained income at the rate of 78%. Now, what are the items which are covered here? Anything, income, investment, expenses, any kind of partial disclosure, whatever it is. Yes, it does not matter. It does not matter. In exam, they will simply straightforward come and tell you, Rahul, there is a person. There is a person who has made an investment of 1 crore. Who has made an investment of 1 crore. Assessing officer is asking you for source. He only explained source for 50 lakhs. He only explained source for 50 lakhs. Officer will say, balance 50 lakhs, not explained. Please pay tax at the rate of 78%. Clear? Clear? Rahul, I came up and got a question. Question comes and says, there is a person whose house was raided. Whose house was raided. He found that there is a cash of 50 crores there. There is a cash of 50 crores there. He asked for bills, receipts and sources. He asked for bills, receipts and sources. Person did not give any source. Person did not give any source. Income tax will say, take the 50 lakhs, tax at the rate of 78%. Tax at the rate of 78%. Yes or no? Yes. Now, example number 3. I have just now hosted a big wedding. 5 crores ka wedding. 5 crores ka wedding. Assessing officer said, come and tell me how did you get this 5 crores for hosting the wedding. I came and gave him explanation for 3 crores. I came and gave him explanation for 3 crores. Officer will say, pay tax on 2 crores. Pay tax on 2 crores. Clear? Yes. Now, can I go to officer and come and say, sir, no problem. I will pay you tax on 2 crores. I'll pay you tax on 2 crores. But this 2 crores was spent for the wedding. I don't have the money. Which means I've also incurred an expense. I also incurred an expense. So you do one thing. The 2 crores will become my income. The same 2 crores will become my expense. Make it 0 and therefore I'll pay no tax. Therefore I'll pay no tax. Is it right? Not right. Not right. Because income tax comes and says against unexplained income, you cannot claim any expenses, any losses, any deductions, any set-offs, and any kaju katli. Yes or no? Yes or no? No benefits of any adjustments. No benefits of any adjustments. Whatever income is there, pay the tax on full 78%. Pay the tax on full 78%. No benefits of claims. No benefits of claims. Yes. Now the same provision is also there for winnings. This provision is also there for winnings. Meaning winnings also you cannot claim any expenses, losses, deductions, adjustments, kaju katli. Nothing permitted. Nothing permitted. Same provisions for your winnings also. For your winnings also. Online winnings also same logic. Online winnings also same logic. The only difference is formula is different. So in the formula you are getting the deduction of opening balance. You're getting the deduction of opening balance. Other items you can do. Other items you can do. Yes, that is between us. We will not discuss. Yes, yes, yes. Please understand this. Please understand this. Any kind of unexplained income and winnings not eligible for any expenses, deductions, set off, allowances, and any kaju katli, and any kaju katli. Everything else you can do. Everything else you can do. Everything else you can do. Clear? Yes, yes. But please understand the same things are there for capital gains. The same things are there for capital gains. Those are different things. Those are different things. Are you clear? Yes. This is what your whole chapter on unexplained income is. Nothing else to read. Nothing else to read. Are you good? Are you good? Are you good? Yes. You have another chapter called as agricultural income. You have another chapter called as agricultural income, where income tax comes and says, Rahul, agriculture income is agriculture income is agriculture income is partially integrated. In my class, there is nothing called exemption. There is only partial integration. There is only partial integration. There is no nonsense called as exemption. There is only partial integration. There is only partial integration. Where income tax comes and says, Rahul, if you are earning income from normal sources, if you are earning income from normal sources and you are earning income from agricultural income, and if you are earning income from agricultural income, you have to follow a certain step for you to compute your tax. You have to follow a certain step for you to compute your tax. Step number 1, tax on total income plus agricultural income. Tax on total income plus agricultural income. Step number 2, tax on basic exemption limit plus agricultural income. Step number 3, 1 minus 2. Yes, we call it as partial integration. We are coming and saying that, Rahul, when you have an agricultural income and you have a normal income, first compute tax on all the incomes. Then reduce the tax which you are going to pay to state. Reduce the tax which you are going to pay to state, which is basic exemption limit plus agricultural income, thereby getting the central tax. Now, this is called as partial integration. This rule does not apply in case you are having agriculture income less than 5,000. If you are having agriculture income less than 5,000, income tax rate, in that case it is exempt. In that case it is exempt, and it does not apply for 3 rules. It does not apply for 3 rules. Any idea? It does not apply in case you are not following slabs. In case you are not following slabs, because Rahul, it will not make an impact. It will not make an impact. It will not apply in case the agriculture income does not push to next slab. Does not push to next slab, and when other income is less than basic exemption limit. The other income is less than basic exemption limit. The other limit is less than basic exemption limit. Clear? Yes. Now, what does this mean? What does this mean? I'll give you examples. Imagine an example where you're saying a normal income. When I say normal income, I mean total income. I mean total income, and I'm saying my agree income. I'm saying my agree income. Imagine an example where I'm saying my agree income is 2 lakhs. My agree income is 2 lakhs. My normal income is, let's say, 3 lakhs. My normal income is 3 lakhs. Forgetting the fact that you are eligible for a bit. Forgetting the fact that you are eligible for a bit. Tell me, Rahul, will partial integration apply? No. Because Rahul, what is happening is, understand, even if you don't have agree income, even if you don't have agree income, or whether you have agree income, the extra money which you have after 2 lakh 50, which is 50,000, is going to be taxable at the rate of only 5%. Yes or no? You include agree income also, every income is going to be 5%. You don't include agree income also, every income is going to be taxable at 5%, which means there is no difference. There is no difference. So there is no point of doing partial integration. There is no point of doing partial integration. Correct? Correct? Correct. Second example, I am saying, Rahul, my normal income is 2 lakh 40,000. My normal income is 2 lakh 40,000. My agriculture income is 20 lakhs. My agriculture income is 20 lakhs. Rahul, will partial integration apply? No, because my normal income is less than basic exemption limit. When my normal income is less than basic exemption limit, what would happen? My step number 1 will become taxable, but step number 2 will become higher than 1. Step 2 will become higher than 1 because step number 2 says basic exemption limit plus agriculture income. And step number 2 is 2 lakh 50. Correct? Not correct? Yes. So in step number 1, what will you do? You will say step number 1, the number is 22 lakh 40,000. And step number 2, you will say number is 2 lakh 50 plus 20 lakhs. Number will become 22 lakh 50. Now tell me which one will have higher tax? Which one will have higher tax? Left or right? Right will have a higher tax. If right is having higher tax, you're saying step 1 minus step 2. Meaning number will become negative. Number will become negative. Correct, not correct? Rahul, will government give you back money? Will government give you back money? Government will say, boss, forget it off. No. Partial integration. No. Partial integration. Correct, not correct? Correct, not correct? Yes. These are some simple 3 rules for you to keep in mind. As such, not there in the book. Not there in the book. This is just for you to save time. In case you see a scenario like this, you can directly stop integration and you can come and say no partial integration because anyway it will not make a difference. Anyway, it will not make a difference. Are you clear? Are you clear? Yes. This is what your agriculture income looks like. This is what your agriculture income looks like. Apart from this, Rahul, what exactly is agriculture income? Income tax is any income which is arising from the land on which agriculture is happening. Any income arising from a land on which agriculture is happening is called as agricultural income. It's called as agricultural income. It can be of 3 types. It can be of 3 types. One is the same agricultural income, growing crops. Growing crops. Second is any kind of renting of premises which is there on the land. Renting of the premises which is there on the land. Basically, I have a warehouse. I have a warehouse on the agricultural land and I'm renting it out to someone. Rahul, agricultural income. Yes. Yes. And third is any kind of sale of the land itself. Sale of the land itself, which means I have sold the land, then also whatever capital gains comes will be called as agricultural income. So 3 kinds of income which can come from agriculture. One is the income from the agriculture. Second is income from letting out the property. And third is selling of the land. Selling of the land. All these 3 things will be called as agricultural income. Agricultural income. Please do keep in mind, agricultural income is not exempt. Is not exempt if 2 of the things are happening. One, agricultural income is coming from outside India. Agriculture income is coming from outside India. If the income is coming from outside India, income is taxable. Second, if the agriculture income is coming from an urban agricultural land, if it is coming from an urban agricultural land, meaning only agriculture income coming from a rural land is exempt. Only those coming from rural land is exempt. If it is coming from urban land, it is taxable. It is taxable. Now, what do you mean by an urban land and a rural land? Income tax is saying these cases will be called as urban land. These cases will be called as urban land. If you are coming and saying you are in the municipality, if you are coming and saying you are in the municipality and the municipality has more than 10,000 people, more than 10,000 people, land is urban. Land is urban. Rahul, if it is falling within the 2 kilometers, if it is falling within the 2 kilometers, same population of 10,000, land is called as urban. Land is called as urban. Rahul, if it is falling between 2 to 6 kilometers, meaning next to 4 kilometers, and the population is more than 1 lakh, land is called as urban land. And if it is falling between 6 to 8 kilometers, population is more than 10 lakhs, land is called as urban. Rahul, land is falling 8.1 kilometers, called as fully rural. called as fully rural. Any land beyond 8 kilometers is directly rural. Clear? Yes. When you're looking at the land space, you need to look from the aerial distance. You need to look from the shortest distance. You need to look from the aerial distance. You need to look from the shortest distance. Clear? Not clear? Yes. This is what your agriculture income concept is. This is what your agriculture income concept is. Now, in the same agriculture income tax also comes and says, Rahul, if you are going to have both incomes, meaning business also, agri also, this is called as composite income. This is called as composite income. Income tax is saying, Rahul, if you are going to have a composite income, split your P&L into two, business and agri. Business will become taxable, agri will become partial integration. Very good. Agri will become partial integration. How will you split, Rahul? Split your properties into two. One is land, one is factory. Tell me what are the costs which you are going to incur. Tell me what is the sale price you are going to incur. Sale will happen of factory or land? Sale will happen of factory or land? It will happen in factory. Hey, I am saying, Rahul, I am a sugarcane. I am growing sugarcane, making into sugar, then selling sugar. What will I sell? Sugar. Profit will come from factory. So therefore, I am saying, Rahul, what you do, you tell me what is the revenue from sugar. You tell me what is the revenue from sugar. Tell me what other costs will you incur. You will incur processing costs. Where? Factory or land? Factory. Then you will incur cultivation costs. Factory, land. Correct? No. Income tax is saying, Rahul, what is missing? Sale value of sugarcane is missing. And right side, purchase of sugarcane is missing. Assuming both are market price. Assume that both are market price. You will get the balance figures. Find out the agricultural income. Find out the PGBP. In simple words, Rahul, I am saying, do one thing. From the land, sugarcane will be sold to the market. At market price. Factory will go to the same market and buy it from the market at market price. Yes or no? Yes. For those who do not understand this, costing, further processing costing, you have something called as process cost. There you will learn this. I am giving you simple English where I am coming and saying, assume that the land will sell it to market, factory will buy it from market. When land is selling to market, land will sell it for market price. Factory will buy from market, will market price. So therefore, you take it as sale value, you take it as cost price, and therefore you will get your split of agri and business. Clear? Yes. But now I am coming and saying there are some businesses where you cannot do a split. Like tea, coffee, and latex or rubber. Yes. And in that case, income tax says, don't worry, I will tell you how to split. Do one thing. You find your full profit. 40% of the profit will become PGBP. 60% of the profit will become agriculture if it is tea. 35% of the profit will become PGBP. 65% of the profit will become agriculture if it is rubber. When it comes to coffee, income tax said, Rahul, there are either 2 words or 4 words. There are either 2 words or 4 words. 2 words is grown and cured. 4 words is grown, cured, roasted, grounded. Does it matter? No. 2 words, 4 words. Rahul, if it is 2 words, 25, 75. If it is 4 words, it is 40 and 60. If it is 4 words, it is 40 and 60. This is what the provisions are. You take your PGBP, you split them into 2, and this is what your answer will be. Clear? No confusions? All good to go? Yes. This is what your agriculture income chapter is. Thereby completing your ICA study material chapter number 1. ICA study material chapter number 1. Clear to go? Yes. We're moving on to chapter number 2. We are looking at something called as residential status and scope of total income. I am saying, Rahul, if you are going to have a residential status and scope of total income, income tax is coming and saying, for your exams, the most important person is individuals. I am ignoring all this nonsense. I am going to my chart. If you have the chart, great. If you don't have the chart, then I'm sorry. I don't think I can switch. I cannot turn it. So yeah, whatever it is. Yes, in my chart, the provisions are coming and saying, Rahul, you do one thing. As an individual, tell me what your Number of days of stay in current year is. Tell me what your number of days of stay in current year is. If you tell me that my number of days of stay in the current year is more than 182 days, I will assume you to be a resident. I'll assume you to be a resident and push it on the right side. Push it on the right side. If I'm telling no, Rahul, your stay is less than 182 days, I will bring it to left side. I'll bring it to left side. In the left side, I'm coming and saying chart number 1. Tell me whether you are an Indian citizen leaving India for employment, or you are an Indian citizen who is a crew member of a foreign bound ship. Crew member of a foreign bound ship. In that case, I'm saying Rahul, condition number 2 is not there, which means directly non-resident. Directly non-resident. Yes, I asked you to satisfy 182. You do not satisfy 182. Therefore, I'm telling condition 2 is not satisfied. Therefore, you are non-resident. Correct? Correct. Now, chart number 2. Chart number 2. I'm saying you are an Indian citizen or a person of Indian origin. Or a person of Indian origin. Person of Indian origin means a person whose parents or grandparents are born in undivided India. Are born in undivided India. India, Sri Lanka, Myanmar, Bhutan, Bangladesh, Pakistan, Nepal, Bangladesh. Yes, all those things. Yes, all those things. Income tax is saying, Rahul, if any of your parents or grandparents are born there, then you're called as an Indian citizen, a person of Indian origin. If you are an Indian citizen or a person of Indian origin who is outside India, visiting India in the current year, I will then ask you a follow-up question. Tell me what your Indian income is. Rahul, what do you mean by Indian income? Indian income means that income which an R and OR will earn in India. Indian income means income which R and OR will earn in India. So tell me what your Indian income is. If you tell me, Rahul, my Indian income is less than 15 lakhs, income tax says condition number 2, not required, therefore non-resident. You say, no, Rahul, my Indian income is more than 15 lakhs. My Indian income is more than 15 lakhs. Income tax says, okay, now I'll give you second condition. Second condition being stay in India for more than 120 days and 365 days in last 4 years. 365 days in last 4 years. Obviously less than 91 because in Himalaya took time. Yes, so it is stay for more than 120 days in current year and 365 in the last 4 years. Now, if the condition gets satisfied, you directly become RN1. You directly become RN1. Condition does not get satisfied, you become NR. You become an NR. Correct? Not correct? Correct? Not correct? Now, I am saying no. You are an Indian citizen or a person of Indian origin, not coming to India for visit. Not coming to India for visit. Or you are a foreign citizen. Income tax says your second condition is 60 in the current year, 365 in last 4 years. You satisfy the condition, you are resident. You don't satisfy the condition, you are non-resident. You are non-resident. Now, Rahul, you have resident here and you have a resident there. You have a resident here and you have a resident there. Income tax is saying, Rahul, you do one thing. You tell me what is the last 7 years ka stay. If you tell me in the last 7 years, the person was less than 730 days, meaning 729 or less. I will come and call this person as RNOR. I'll call this person as RNOR. If you come and tell me, no, Rahul, this person was there for more than 730 days, I will ask you second condition. Tell me, have you been a non-resident in last 9 out of 10 years? If you are telling me yes, you are again RNOR. Which means if you don't satisfy both, you are ROR. So I'm saying, Rahul, 2 conditions to satisfy. Condition number 1 is that your stay in India should be less than 730 days and is it and or not? It's or non-resident in 9 out of 10. Anyone satisfied, you are RNOR. Anyone satisfied, both are not satisfied, you are ROR. Both are satisfied, you are ROR. Clearer? Yes. At the same time, please do also understand the fact that if you are a crew member, income tax comes and says the date on which you board the ship till the date on which you exit the ship will be assumed as outside India. For any other person, the date of arrival in India and the date of departure from India, both are included in India. Notice this very carefully. For a crew member, it is excluded. For an other person, it is included. So when you stay in India, it means your arrival date is also considered, your departure date is also considered. But if you are going to board a ship, then in that case, income tax says the day on which you board the ship to the date on which you come back from the ship is fully excluded. Is that clear? This is what is your RS for Individual. This is what is your RS for individuals. Yes. Second person is called as HUF. Income tax came and said, Rahul, if you're going to have a control and management wholly or partly in India, then it becomes resident. If you're having to have control and management wholly outside India, he's a non-resident. He's a non-resident. Now, if you're coming and telling me the person is a resident, income taxes again split them into ROR, RNOR. How will you split, Rahul? Check for Karta. Check for Karta. If the Karta in the last 7 years was less than 730 days, then the HUF becomes RNOR. If the Karta in the last 9 out of 10 years was non-resident, HUF becomes RNOR. If none of the conditions are satisfied, HUF is ROR. HUF is ROR. Clear? Can there be a possibility that HUF and Karta are not residents? Yes. One can be resident, one can be non-resident, one can be non-resident, one can be resident. But understand if both are residents. Understand if both are residents, both will be ROR or both will be RNOR. You cannot have a scenario where you are saying one is ROR, one is RNOR. Not possible. Not possible. When both are residents, both are ROR. When both are non-residents, both are non-residents. Both are non-resident. Is that clear? What up? Yes? Clear? Yes? Yes. After your HUF, you have something called as firm. Income tax says, Rahul, when it is a firm, AOP, BOI, AJP, local authority, check for the C&M, control and management. If the control and management is wholly or partly in India, he is resident. If the wholly and partly outside India, it is non-resident. Rahul, here will you split into ROR, RNOR? No. Only splits of ROR and RNOR for individual and HUF. Individual and HUF. Rahul, I'm saying, no, I'm not all these. I'm a company. Income tax says, Rahul, tell me what kind of company you are. Tell me what kind of company you are. Are you an Indian company or any other company? If you say me, Rahul, you're an Indian company, income tax says you are R. If you say you're any other company, income tax says, tell me what your poem is. Tell me what your poem is. Place of effective management. If your poem is found to be in India, you are R. If the poem is found outside India, you are NR. You are NR. Yes or no? Yes. This is what your RS is. This is what your RS is. Any doubt? No. Going forward, you have something called as scope of total income. You have something called as scope of total income. Income tax comes and says, Rahul, if you are going to be an R or an RNOR or an NR, your decision for step number 3 will happen here. Your decision for step number 3 will happen here to check which one is taxable and check which one is not taxable. Income tax says if you are found to be an ROR, your global income is taxable. If you are found to be an RNOR, wait, let's do NR. Let's do NR. Income tax says if you are found to be an NR, 4 incomes are taxable. Income received in India, income deemed to be received in India, income accruing or arising in India, income deemed to arise in India. Yes, these are the 4 incomes which are going to be taxable. But if you come and say me, no, Rahul, I am an RNOR. Income tax says, Rahul, in that case, take the 4 incomes. Take the 4 incomes that is taxable plus the income accruing or arising outside India from a business controlled from India, profession set up in India also becomes taxable. At the same time, please to understand what is taxable is income, what is not taxable is remittance. Meaning money sitting outside India brought into India is not taxable. Money sitting outside India brought into India is not taxable because this is merely a receipt, not a income. Is that clear? Yes. Take a simple example. I am saying, Rahul, these are my incomes. Tell me whether it is taxable or not taxable. Yes. I am saying the person is either ROR, RNOR, NR. Income tax is saying, Rahul, income is received in India. Taxable for all. Income deemed to be received in India, taxable for all. Income accruing or arising in India, taxable for all. Income deemed to accrue or arise in India, taxable for all. Income accruing or arising outside India from a business controlled from or a profession set up in India. Now ROR, RNOR, NR. Now RNOR, how much is taxable? Assuming the question comes and says the business is outside India. 40% of the money is received in India, but the full business is controlled from India. Rahul, how much is taxable? 40 full. Full is taxable. Understand, even though 40% is received in India, everything is controlled from India, so everything becomes taxable in India. Rahul, up to 40% will be taxable for whom? NR. 40% will be taxable in NR because NR is received in India. Are you clear? Are you clear? Yes. Now, income accruing or arising outside India from a business controlled from or a profession set up outside India. Are what? RN what?
Not taxable.
NR?
Not taxable.
Not taxable. NR? Not taxable. Correct. Correct. Now, any kind of income from other heads accruing or arising outside India. Are what?
Taxable.
RN what? NR? Income earned and received outside India, later on remitted to India. Are what? RN what? NR? Because Rahul, you have got a remittance, you have not got income. You've got an remittance, you have not got an income. Are you clear? Is it making sense? Can we go forward? Yes. Now, in this chapter, you also have something called as income deemed to be received in India, income accruing or arising in India, income deemed to accrue or arise in India. Now, what is income received in India? Money which you got in India, either in your hand or in bank. Either in your hand or in bank. Rahul, what is income accruing or arising in India? Any kind of income which is generated from an activity carried out in India. Activity carried out in India. The challenge comes when you say income deemed to be received in India and income deemed to accrue or arise in India. Income tax says, Rahul, what is income deemed to be received in India? Is all those kind of retirement benefits which are given to you as an employee. As an employee. Any kind of benefits which are given to you as an employee are income deemed to be received in India. Now, what is deemed to accrue or arise in India? Income tax says, tell me what the head of income is. Tell me what the head of income is. If you tell me the head of income is salaries, if you tell me the head of income is salaries, income tax says, Rahul, what is taxable for you in India is any kind of salary which is received for services rendered in India, even if the payment is happening from outside India. So, if you are going to be an employee which is going to be working in India, I will tax it to you in India, even if the salary is coming from outside India or the payment is happening outside India. Yes. Second, I am saying, Rahul, if you are going to work as a government employee outside India, example, embassy cases. So, if you are going to be an employee who is going to work in a government embassy, who is going to be working in a government embassy outside India, income tax says that is also taxable in India. That is also taxable in India, except for two, any kind of allowances and perquisites. Any allowances or perquisites which are given to these government employees are exempt from tax. Provided they are working outside India. Understand, it's not for all government employees. It is only for government employees working outside India. It's only for government employees working outside India. Correct? Rahul, I am not in salaries. I am in HP. I am in HP. Income tax says, Rahul, if the house is in India, income is deemed to accrue or arise in India. Next one. PGBP. Next one is PGBP. Rahul, income tax comes and says, if you are going to appoint an agent in India, tell me whether the agent is dependent or independent. If you tell me that the agent is dependent, I will say the agent is leading to a business connection in India and therefore taxable in India. Yeah. If you say me, no, Rahul, the agent is independent, I will say he is not leading to a business connection in India, therefore not taxable in India. In simple words, Rahul, dependent agent taxable, independent agent non taxable. Rahul, taxable for agent or non-resident? Taxable for agent or non-resident? Non-resident. Agent was anywhere in India only. I am bothered about non-resident. So if you come and tell me, Rahul, the non-resident will become taxable in India if the non-resident is going to appoint dependent agent. Clear? Yes. Apart from this, you have something called a significant economic presence. Income tax comes and says, Rahul, if you are planning to sell goods more than 2 crores to users in India, income tax says it is significant economic presence and therefore you have to pay tax on this 2 crores in India. If you tell me, no, Rahul, I am actually not doing any sales in India, but I am actually going and doing survey in India. If you go and do a survey for more than 3 lakh users in India, whatever profits you earn will be taxable in India. Because you are establishing a significant economic presence. More relevant for MCQs. Clear? Yes. Now, Rahul, what is not taxable in PGBP? Income tax says 5 things. What are not taxable in India? They are saying any kind of operations not carried out in India is not taxable in India. Any kind of operations not carried out in India is not taxable in India. Any kind of collection of news and views in India for giving out outside India is not taxable. Indira Gandhi case. Yes. Third, I am coming and saying any kind of purchase of goods in India for the purpose of exports will become not taxable in India. Point number 4, I'm saying, Rahul, if you are going to shoot any cinema in India by a non-resident, the non-resident coming to India shooting cinema films is also not taxable in India. And finally, if you are going to display any uncut or unassorted diamonds in India, that is also not taxable in India. That is also not taxable in India. Yes or no? Yes. Rahul, does all the condition have to be satisfied for it to be not taxable? No. Any one is also enough. Any one is also enough. If you come and see a question where the question comes and says, Rahul, the person is going to sell diamonds. The person is going to sell diamonds. Does it become taxable? Yes. Yes. But if the question comes and says the person is going to sell diamonds to an outside India, does it become taxable? Does it become taxable? No, because it falls into exports. It falls into exports. So if the question comes and says that you're selling diamonds outside India, it becomes an export. Therefore, it becomes not taxable. It becomes not taxable. Don't just look at the diamonds word and come and say, Rahul, display panada exempt. Sale panalo, it is exempt if it is exports. If it is exports. Are you clear? You know what I'm talking about? Yes. After that, you have something called as capital gains. After that, you have something called as capital gains. Income tax says, Rahul, if it is capital gains, if the asset is located in India, then the gains is also taxable in India. If the asset is located in India, the gains is also taxable in India. It doesn't matter where you are. It doesn't matter where you are. If two non-residents are also selling products outside India, it is still taxable in India if the asset is in India. The asset is in India. Basically, shares of Indian company. Shares of Indian company. Clear? 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 After capital gains, you have something called as IFOS. Income tax comes and says, Rahul, if you're going to give any gift to a non-resident, that is also taxable in India. That is also taxable in India, provided the person giving the gift is resident. The person giving the gift is a resident. Resident giving a gift to a non-resident will become taxable in India because the money is coming from India. The money is coming from India. Correct? Correct. Second, income tax came and said, Rahul, if any dividends are going to be given to this non-resident by an Indian company, that is also taxable in India. That is also taxable in India. Leaving you with the last and three important parts, which is called as interest, royalty, and FTS. Interest, royalty, and FTS. Yes. Income tax is saying, Rahul, for these items, don't look from the perspective of the person who is giving the royalty. Look from the perspective of the person who is paying the money. So tell me who is the payer. If you tell me, Rahul, the payer is a government. If the payer is a government, income tax is fully taxable, or you can say fully deemed to accrue or arise in India. For government, a receiver. If the government is going to pay, receiver is going to tax it in India. If the government is going to pay, receiver is going to tax it in India. If you say me, Rahul, the payer is a resident. Income tax is, it is normally taxable. Unless you tell me that you are going to use this item for outside India. So which means I will come and ask you, tell me whether you are using in India or you are using outside India. If you tell me you are using in India, I will say fully taxable. If you say I am using outside India, I will say fully not taxable. Yes or no? Rahul, who's using? Payer or recipient? Payer, resident. Understand, resident is using the product in India. Which a non-resident gave. For which resident will pay. Non-resident will be taxable in India because resident used it in India. Correct. I am saying, Rahul, resident pays to non-resident because resident is going to use it outside India. Income tax will say not taxable. You understand what I'm saying? Yes. Now, when it comes to non-resident, now what is happening? Non-resident is going to pay non-resident. So NR is paying NR. Normally not taxable. So I'm saying normally not taxable. But if you come and tell me that the person is using it in India, it will become taxable. In simple words, Rahul, same logic. I'm saying, Rahul, tell me whether it is used in India or used outside India. Rahul, if the non-resident comes and says, I'm going to use this money
of loan or IP or technical service in India, income tax is it is taxable. If the non-resident comes and says, no, I am using it outside India, income tax is not taxable. Not taxable. Correct. But coming to this use in India, income tax says, Rahul, use are of two types. Tell me, Rahul, are you using it because it is interest, or are you using it because it is royalty and FTS? Are you using it because it is interest, or are you using it because it is royalty and FTS? Income tax says, Rahul, if you are using it as interest, it is only taxable in India if it is used for business or profession. It is only taxable in India if it is used for business or profession. If it is used for any other source, it is not taxable. It is not taxable. But when it comes to royalty or FTS, income tax says whether you use it for business, it is taxable, and use it for other source also, it is taxable. Use it for other source also, it is taxable. In simple words, Rahul, when a non-resident pays to another non-resident, when a non-resident pays to another non-resident, interest, what? Interest for a loan which is used for other reasons in India. For a loan which is used for other reasons in India, income tax will say not taxable. It is only taxable if you are going to use it for business in India. It is only going to be taxable for business in India. If I have to give you an example, take an example where I'm coming and saying there is a non-resident going to another non-resident, getting a loan. Getting a loan. Yes, this non-resident is going to take the loan and put it in shares. Put it in shares. So he bought Reliance ka shares. This Reliance is going to give him dividends. In exchange of this non-resident is going to pay the non-resident interest. Yes, Rahul, this interest taxable, not taxable? Not taxable, because the money is being used for other reasons than business. If you come and tell me, no, Rahul, actually what happened? No, this person did not give him loan. This person gave him IP. IP is intellectual property. In return, this person gave him royalty. Rahul, royalty taxable, not taxable? Taxable, because there it is business or any reason in India. Because it is not for business, also it becomes taxable because it is royalty or FTS. Interest alone, you have to be careful that interest will not be taxable in India if the money is used for other reasons in India, provided the payer is non-resident, the receiver is also non-resident. The payer is non-resident and the receiver is also non-resident. Are you clear? No confusions? All clear? Yes. This is what your chapter number study material chapter number 2 looks like. Clear to go? No confusions? Yes. Awesome. This is what I wanted to do from my concept note. I am moving back to my cheat sheets. We are looking at something called as head of income number 1. We are at salaries. Yes. Cheat sheet should have all these in short terms. You will be discussing in short terms, but we will be explaining it as we progress. Yes or no? Yes. For those who don't have it, people, this is there on Telegram. You can take it from Telegram. You can use it from there. It's free of charge. You don't have a problem. Yes. Great. We're starting with this new chapter called as salaries. One of the more important topics from salaries because you get it as a part of the question number 2 or question number 3. It will not form part of your compulsory question. You will get it as question 2 or question 3. In all practical sense, it will come in question number 3. 2 will be more about your residential status along with TDS. Yes, residential status along with TDS. 3 will be all your total income, salaries related questions. 4 will be all your theory questions. Along with clubbing and set off. Yes or no? Yes. Nevertheless, salaries important. Good, easy scoring paper. We are looking at the chapter called as salaries. Can you get that? And the AC. We are looking at the chapter called as salaries. Yes. Now, if I have to start salaries, very simply, I come and tell you, Rahul, salaries to start needs 2 conditions to be satisfied. There should be an employer-employee relationship, and the payment should be against this relationship. When it comes to salaries are taxable on due or receipt, whichever is earlier. advance salary is taxable, but any advance against salary is not taxable. Rahul, what is advance against salary? I am coming and saying, Rahul, I'll give you 1 lakh rupees today. I'll give you 1 lakh rupees today. Promise is that next 5 years you'll work, next 5 months you'll work with me. Next 5 months you will work with me. Question, Rahul, any guarantee that the person will work for 5 months? No. In that case, Rahul, can I tax 1 lakh right now? No. I will tax it when the 1 lakh becomes due for every month. 1 lakh becomes due for every month. Option number 2. I am coming and saying, sir, I am in dire need of 1 lakh rupees. Give me 1 lakh rupees right now itself as a loan. As a loan. You can in the future take it away from my salary. You can in the future take it away from my salary, or I will itself repay you back. I will itself repay you back. Rahul, taxable, not taxable. Taxable, not taxable. Not taxable, because again, you don't know whether the person will work for you or not. You don't know if the money will be repaid back or not. In simple words, Rahul, I'm only taxing those things which are received as an advance salary. Received as an advance salary, meaning I'm coming and saying, Rahul, if you want to work in the month of March, pay me salary on 29th Feb. Pay me salary on 29th Feb. Rahul, taxable on Feb. Taxable on Feb. Advance salary. 29th Feb I gave you for you to work in March. Taxable in 29th Feb. Taxable in 29th Feb, because this is certain. This is certain. It is not like 29th Feb you will give him and 1st March he will abscond. Yes or no? Yes. So he will work on the next day. He will work on the next day. Therefore, this is taxable on Feb. This is taxable on Feb. Yes or no? Yes. So salary is taxable on due or receipt, whichever is earlier. Due or receipt, whichever is earlier. Clear? Clear? Yes. No doubts? Yes. In this chapter, 2 people are not covered. One is salary paid by firm to partners becomes taxable under PGBP. Second, salary paid by government to MPs and MLAs taxable under IFOS. Yes, ignoring these 2 people, every other incomes are taxable here. Now, when I'm taxing something, I'm taxing everything relating to salaries, whether it is received during employment, pre-employment, post-employment. Pre-employment joining bonus, post-employment pension, all are taxable under salaries. All are taxable under salaries. What is the format of salaries is what we're going to discuss along with the breakups. Along with the breakups, you always start with something called as basic pay. Then you add something called as DA. Now DAs are of 2 types. Forming part, not forming part. Yes, in terms or not in terms. Rahul, which one is taxable? Both are taxable. Both are taxable. Both are taxable. Rahul, then you have something called as commission. Rahul, commission are of 2 types. Fixed commission, turnover commission. Rahul, which one is taxable? Both are taxable. Both are taxable. Then you have something called as bonus. Rahul, bonus is taxable in the year of receipt. Bonus is taxable in the year of receipt. It is not taxable on due basis. It is taxable on receipt basis. These are your basic components. These are your basic components. Apart from this, you will now start with something called as allowances. You start with something called as allowances. Income tax says, Rahul, when you are going to receive allowances, the first allowance you can receive is something called as leave encashment. Leave encashment. Income tax said, dear person, tell me whether you are receiving leave encashment during employment, after employment. If you are receiving during employment, fully taxable. If you are receiving after employment, tell me whether you are government employee, non-government employee. If you say government employee, fully exempt. If you tell me it is non-government employee, least of the following 4. Least of the following 4. Actual amount received. Notified limit of amendment of current year. Amendment of current year. People who have learned it before this will have a different number. Amendment of current year. Number is 25 lakhs. Number is 25 lakhs. Third one, any kind of average salary per month into 10 months, and last one is average salary per month into leave balance available month format. Month format, meaning you'll take the total leaves available minus the leaves utilized divided by 30. Divided by 30, you'll get the number of months available of leave multiplied by average salary per month. Rahul, what is average salary per month? Basic pay, DA forming part, turnover commission for last 10 months. For last 10 months divided by 10. For last 10 months divided by 10. This is what the leave encashment is. Yes, at this point of time, please also understand the fact that when it comes to leave balance available, income tax says you can only have leave balance available to an extent of 30 days per year. 30 days per year. You cannot get more than 30 days in a year. You cannot get more than 30 days in a year. If you're getting more than 30 days, I will restrict it to 30 days. I will restrict it to 30 days. Clear? Clear? Please understand the notified limit of 25 lakhs is a lifetime limit. Is a lifetime limit, meaning Rahul, if you have already claimed exemption in 1 year, if you have already claimed exemption in 1 year, even the following employment you go, number will automatically reduce. Number will automatically reduce. So if you come and say, Rahul, first employment, I got an exemption of 2 lakhs. I got an exemption of 2 lakhs. When you go to second employment, number will not be 25, number will be 23. In the next employment, I got 15. Next employment will become 8. In the next employment, I become 8, I will get next employment 0, which means from 4th employment everything will become taxable. Everything will become taxable. Understand 25 lakhs is the lifetime limit. 25 lakhs is the lifetime limit. I'm focusing on this because last November this came in as a question. So be careful about it. Yes. After leave encashment, you have something called as HRA, meaning house rent allowance. Income tax is coming and saying, Rahul, if you're going to receive any house rent allowance, least of the following 3 are exempt. First one is actual amount received. Second one is 50% of salary in case you are in metropolitan areas, Delhi, Chennai, Mumbai, Kolkata, and 40% of salary if you are in any other places. And last one is rent paid minus 10% of salary. Rahul, salary here means basic pay plus DA forming part plus turnover commission for respective months. Rahul, what is the trick to understand whether it is 10 months or respective months? Ask yourself, when are you receiving the money? Hey, leave encashment you're receiving on retirement. HRA you are receiving during employment, which means as you receive, you will be taking the salary. That is what the provisions are. Clear up? Yes, Rahul, why there are highlights in my book? I will tell you later. Next one, you have something called as special allowances. Income tax says special allowances are of following types. You have something called as child education allowance. Income tax says you can claim an exemption of 100 per month per child, 2 children, provided education is in India. If you're saying child hostel allowance, it is 300 per month per child, 2 children, education should be India. If you're telling any other allowances like transport allowance, income tax says fully taxable unless you are handicapped, where you get an exemption of 3,200 per month. Apart from this, Rahul, any other allowances? Ask yourself a simple question: is the allowance pertaining to business or not pertaining to business? Like uniform, daily allowance, travel allowance, conveyance allowance, per diem allowance, any kind of research allowance, all these things are fully business related allowances. Income tax says these allowances are fully exempt provided it is used for official purposes. If you receive any other allowances, everything else becomes fully taxable. Like lunch allowance, Rahul, fully taxable. Mobile allowance, Rahul, fully taxable. Any kind of medical allowance, Rahul, fully taxable. Internet allowance, Rahul, taxable. Any other allowances you receive is fully taxable because these are not for official purposes. Yes or no? Yes. Apart from allowances, Rahul, next thing which comes up is called as retirement benefits. Under retirement benefits, the first item is called as gratuity. Yes, gratuity comes and says, Rahul, you will receive gratuity during employment, after employment. If it is during employment, fully taxable. If it is after employment, tell me government, non-government. If you tell me government, fully exempt. If you tell me non-government, tell me whether you are covered under POGA, non-POGA. If you tell me, Rahul, you are covered under POGA, least of the three is exempt. Actual 15 by 26 into last drawn salary. 15 by 26 into last drawn salary into number of completed years, rounding off, permitted. POGA you are in POGA. It is least of the three. It is actual salary. 15 by 26 into number of completed years in or rounding off into last drawn salary. Salary means basic plus all DA. Whether forming part or not forming part. Yes, Rahul, I'm saying no, I'm in non-POGA. POGA does not apply to me. Least of the three. Actual 1 by 2 of average salary per month because it is received after employment. Average salary per month into number of completed years. No round-offs. Or the notified limit of 20 lakhs in both the scenarios. Least of the following three. Rahul, here average salary per month means basic DA forming part, turnover commission for 10 months divided by 10. Yes or no? Yes. Please be careful about it. If you are going to receive it in income tax and it is received after employment, generally the rate is average salary per month, meaning basic DA forming part, turnover commission, 10 months for 10. Clear? Yes. After gratuity, you have something called as pension. Pension. Income tax comes and says when it comes to pension, Rahul, pension are of two types. One is commuted pension, uncommuted pension. Uncommuted pension means recurring pension. Income tax is uncommuted pension, fully taxable. Uncommuted pension, fully taxable. Coming to commuted pension, tell me government, non-government. If you tell me government, fully exempt. If you say non-government, tell me, are you receiving gratuity? Not receiving gratuity. If you say you are receiving gratuity, income tax says exempt amount is 1/3 of total pension. 1/3 of total pension. If you say you are not receiving gratuity, it is 1/2 of total pension. Now, what is total pension? Total pension is not the pension you got. Total pension is commuted pension divided by commutation percentage. It is commuted pension divided by commutation percentage. It is not the total pension you got. It is the pension which you would have got if you would have claimed full 100%. If you would have claimed full 100%. Yes or no? Yes. So if the question comes and says the person has received 3 lakh as commuted pension on exchange of 60% of the loss. On exchange of 60% of the loss, you will come and say my total pension is 5 lakhs. My total pension is 5 lakhs. I will give you exemption of 1/3 of 5 lakhs or 1/2 of 5 lakhs. 1/3 of 5 lakhs or 1/2 of 5 lakhs. Are you clear? Good to go. Good to go. Yes. Now, if you're not doing pension, you're doing something called as funds. You're doing something called as funds. The most important funds for exam is RPF. Is RPF. Income tax says, Rahul, when it comes to RPF, there are 4 categories of scenarios. One is employer contribution, one is employee contribution, one is interest on employer, one is interest on employee. Interest on employee. This is what the provisions are. And finally, you have something called as withdrawals. You have something called as withdrawals. Rahul, employer contribution will be taxable under salaries. Employee contribution will be taxable under not taxable because it is not a salary. Interest on employer will be taxable under salaries. Interest on employee will be taxable under other sources. Will be taxable under other sources. This is a warning. In ICI study material, even interest on employee has been taxed under salaries. In study material, it is taxed under salaries, which is wrong. It should be taxed under IFOS, but just for the sake of convenience, ICI has been putting it under salaries. It does not matter. Numbers are not going to change. Are you clear? Just be careful about it. The reason I'm telling you is because in exam, if they come and ask you a question, where they come and say compute the interest taxable under salaries. Compute the income of interest which is taxable under salaries. You may sometimes realize that ICI has actually taken the interest on employee also. Don't worry, ICI will not confuse you. Meaning either the interest on employer will be directly given, which number will be there, or it will be added of both. You will never come to a scenario where they'll give you one of the two. They'll not confuse you that level. Because then in that case we can put a case on them. Yes, that much we can do. So therefore, don't worry about it. If you don't find your number as employer, try also adding in employee. You will find the option. Is that clear? Yes. Now, when it comes to employer, income tax came and said when it comes to RPF, income tax said employer should not contribute more than 7.5 lakhs. Employer should not contribute more than 7.5 lakhs per annum. If the employer is contributing more than 7.5 lakhs per annum, whatever extra contribution he makes is fully taxable. If the employer is contributing up to 7.5 lakhs, income tax says it is exempt up to 12% of salary. Now, salary here means basic DA forming part, turnover commission for very good respective months. Why? Because Rahul, PF will happen during employment regularly. Yes or no? Yes. So the provisions are, if an employer contribution has been given, more than 7.5 lakhs fully taxable, up to 7.5 lakhs exempt up to 12% of salary. Please do not worry about how they computed the number. Yes. Sometimes in exam you will come and see that they'll come and say employer has contributed 20% of basic salary. Are you bothered? No. You are bothered about the number. Take the number, reduce 12% of full salary. I've seen people, what they'll do, no, they'll come and say 20% of basic salary, then they'll remove 12% of basic salary. Hey, provision is 12% of basic DA forming part, turnover commission. So you have to reduce all the three. Reduce all the three. Don't do 12% of basic salary. That is wrong. That is wrong. You understand what I'm saying? Yes. Only take the number for the purpose of computation. Find out what the number they're telling. Remove 12% of full salary. Remove 12% of full salary. Are you clear? Are you clear? Yes. Now, Rahul, I am coming and saying, no, I am not employer. I am employee. I am employee. I am contributing my own money. I am contributing my own money. Income tax says, Rahul, you can contribute 1,50,000 because ATC. Because ATC. If you want to contribute more, it's your loss. I will not give you deduction. I will not give you deduction. Correct, not correct? Yes. I am an interest on employer. I am an interest on employer. Income tax says, tell me, where is this interest coming from? Tell me, where is this interest coming from? Is this interest coming from the extra more than 7.5? If the interest is coming from more than the 7.5 lakhs contribution, income tax says, then the interest is also taxable. Interest is also taxable. If you say, no, Rahul, the interest is coming from less than 7.5 lakhs. Interest is coming from less than 7.5 lakhs of contribution. Income tax says it is exempt up to 9.5% per annum. 9.5% per annum. Rahul, what do you mean by per annum? Don't worry. Don't worry. I say I will tell you. I say I will tell you. I say I will come and say you have received interest of 13,000 rupees at the rate of 13%. You have received 13,000 rupees at the rate of 13%. Meaning, how much was your principal? 1 lakh. When 1 lakh ka 13% you do, you get 13,000. How much can you exempt? 9.5. So you'll come and say, Rahul, 13% is what I got. 9.5 is what I should get. Extra I got is 4.5. Taxable amount is 4.5. How will you get, Rahul? 13,000 is 13%. 4.5 is how much? Sorry, wrong number. 3.5 is how much? Clear? You understand what I'm saying? You understand what I'm saying? Yes, please be careful about it. Don't come and do 9.5% of salary, 9.5% of contribution, 9.5% of opening balance. No, it is 9.5% per annum. Per annum. Are you clear? Are you clear? Yes. Rahul, if it is interest on employee, income tax statement said employee should have not contributed more than 2.5 lakhs. Employee should have not contributed more than 2.5 lakhs. If the employee has taken this excitement and contributed more than 2.5 lakhs, the interest coming on that extra will also become taxable. The interest on that extra will become taxable. Please understand, contribution will not be taxable. That is your own money. Contribution will not be taxable. That is your own money. I'm talking about the interest on the contribution becoming taxable. Are you clear? Yes. Rahul, if he's contributing less than 2.5 lakhs, income tax says interest is exempt up to 9.5% per annum. 9.5% per annum. Clear? Yes. Rahul, how to compute this interest? How to compute this interest? You will have to prepare a small 4 column. You'll have to prepare a small 4 column. The 4 column says average of all fund. Average of all fund. Right side will be called as interest on all fund. Bottom left, average of taxable fund. Right side will become interest on taxable fund. What will you do, Rahul? What will you do, Rahul? Cross multiply. What will you do? You will cross multiply. Now, what is average of all fund? It means opening balance of the full fund plus closing balance of the full fund divided by 2. Divided by 2. Yes, here what will be? It will be opening balance of taxable fund plus closing balance of taxable fund by 2. By 2. For all of my friends who are not from this academy, Rahul, what the hell are you talking about? We are talking about the formula called as PC by 2 into R plus PC1 plus TC1 into R. Some nonsense. Yes, there is something like this in your study material. If you did not understand, this is what the format is. This is what the format is. If you cannot understand this formula, you follow the format, you'll get the answer. You follow the format, you'll get the answer. Technically, that's what I've done. This is called as F average. This is called as I. I by F average is R. You will get opening balance plus closing balance is PC by 2 and PC1 plus TC1. Right side is what you're trying to find out. Right side is what you're trying to find out. If you figure it out, great. If you don't figure it out, don't worry. Yes, yes, yes. It has not been tested till date in exams, but yeah, you never know. You never know. Yes. Until last class, I always used to come and tell people VRS will not come, VRS will not come. Veche vaangunanga November la. Yes, November exams, VRS came for exam. November exam, VRS came for exam. For those of my friends who wrote, you know. Yes, for those who did not write, don't worry about it. Yes, point is sometimes you cannot predict Cannot predict. Yes, nevertheless. Good thing is because it has come in November, it is not coming in May. Varad, chance 100% varad. Yes, it has never happened in the past that if they have asked you one weird thing, they has come in the next exam. Never happened. Yes. So weird thing and all is BRS. You don't understand only. Even I don't understand personally. Yes. Nevertheless, this is what your provisions are. Now, finally, if it is any kind of withdrawals from the PF, income tax says, tell me whether the withdrawal is happening within 5 years or after 5 years. If the withdrawal is happening within 5 years, it is fully taxable. If it is happening after 5 years, it is fully exempt. But if it is happening within 5 years for 3 reasons. Reason number one, health issues. Reason number 2, company is shut down. Reason number 3, you are leaving the company and transferring the fund to another PF. You're transferring the fund to another PF. Any of these conditions come in, you will be exempted from the PF. If not, it will become fully taxable if it is withdrawn within 5 years. Are you clear? Yes. Now, apart from this, what other funds you have? You have some funds called superannuation fund, statutory fund, PPF fund, and all those things. Not important for exam. Leave it off. Yes. Then you have something called as contribution to NPS, contribution to Agniveer Corpus Fund. Agniveer Corpus Fund is your amendment for current year. Income tax is coming and saying any kind of employer contribution happening to National Pension Scheme or any kind of contribution happening to Agniveer Corpus Fund will become fully taxable under the head salaries. You can claim a deduction under Chapter 6A. But it will be fully taxable under salaries. Are you clear? Yes. Now that we have completed what is your retirement benefits, we are moving on to something called as perk. The first perk in your exam is called as leave travel concession. Income tax says you are going to travel for your personal reasons. Company is sponsoring your leave. Leave travel. Income tax comes and says if you are going to get your leave travel sponsored, first of all tell me where are you traveling. If you tell me you are traveling outside India, income tax will say taxable. If you are telling and saying no Rahul, I am traveling in India, then I'll come and ask you, tell me how are you traveling. If you are traveling by flight, I will exempt economy class. If you are traveling by train, I will exempt first class AC. If you are traveling by bus, I will exempt first class AC. If you are traveling by any other permissible modes, it is first class AC. Then I will come and ask you, Rahul, with whom are you traveling? Income tax says you can travel with spouse, 2 children, dependent siblings. But yes, if the children end up being twins on second birth, if the child end up becoming twins on second birth, then you are permitted for 3. Rahul, how many can you travel? You can travel for 2 trips, 4 calendar years. Rahul, you have not utilized your 2 trips. You can carry forward 1 trip from one block to second block, provided you use it in first year. Rahul, what can you claim exemption for? You can only claim exemption for travels. You cannot claim exemption for stay. You cannot claim exemptions for food. You cannot claim expenses for accommodations. Yes, you can only claim expenses for travels. Clear? Yes. Now, second item is called as medical expenses. For some reason, people are making a lot of mistakes in this. Please pay attention. Medical expenses are of 2 types. Income tax is saying, Rahul, you can either incur medical expenses in India or outside India. Rahul, if you're going to incur it in India, income tax says you can incur it for only family. Family here means self, spouse, children, dependent parents, dependent siblings. Rahul, can you incur it for grandparents? No. You cannot incur it for grandparents. Clear? Yes. Second, income tax is saying even if you are incurring it for these people, it will only be exempt for 4 reasons. If it is incurred in employer's hospital, if it is incurred in government hospital, if it is incurred for COVID, or if it is incurred for approved disease. Rahul, apart from this, if you incur it, it is fully taxable. I just saw mock test paper number 1 yesterday, and there was a question which came and said, medical expenses incurred for daughter reimbursed by the company. Rahul, taxable because not falls in 4. Have you taken it from government? Have you taken from employer? Have you taken for COVID? Have you taken for approved? No. Therefore, it is fully taxable. Correct? Not correct? Correct, not correct? Please be careful about this. Yes, I'm saying, Rahul, expenses happening in India, exemption only for 4 reasons. It is government hospital, employer hospital, approved disease, COVID disease, approved disease or COVID disease. Rahul, it is happening for any other reason, fully taxable. Fully taxable. Correct, correct. Rahul, it is happening outside India. It is happening outside India. Income tax says, Rahul, for any kind of treatment and travel, for any kind of treatment and travel, it will become exempt if it is approved by RBI. And for any kind of stay, it will be exempt if the gross total income before claiming this deduction is up to 2 lakhs. If not, it is fully taxable. If not, it is fully taxable. Now, not important from exam, has never been tested, will not be tested. Has never been tested, will not be tested. They will never give you a question with gross total income less than 2 lakhs. Not worth it. Yes, so they will never give you this question, so don't worry about it. You only have to focus on India. You only have to focus on India. Persons covered are self, spouse, dependent parents, dependent siblings, any children. Yes, please understand, if you are going to have these kind of things, then only it is exempt, which means if you are going to get any reimbursement, it is fully taxable. If you are going to get any medical allowance, it is fully taxable. Rahul, if you are going to get any accident policy cover insurance, it is premium paid on accident policy insurance, fully exempt. Premium paid on any health insurance, exempt. Premium paid on any life insurance, taxable. Premium paid on any life insurance is taxable. Health is okay, life is not okay. Life is not okay. Clear? No doubt? Yes. Now, after medicals, you have something called as rent-free accommodation. Very important because amendment. Very important because amendment. Income tax says, Rahul, when you're looking at any kind of, if you're looking at any kind of RFAs, income tax says, tell me whether the RFA is received by a government person or a normal person. If the RFA is received by a government person, income tax says taxable amount is license fee. If it is received by an other person, I know it's wrong. If it's received by another person, ask yourself, Rahul, is the house owned by the employer or is the house hired by the employer? If you tell me, Rahul, the house is owned by the employer, income tax says check for the city population. Check for the city population. There is one small mistake. I have written it ulta. This is up to 31st August. And this one is after September. No. Kila one is wrong. Kila is wrong. Okay, I'll maybe discuss it later. Yes, I'm saying, Rahul, other employees look for the city population. Look for the city population. If you tell me, Rahul, the house is taken before August, the income tax says that the provision is 15% of the salary for every month which you are having the house. 15% of the salary for every month which you are having the house. Rahul, so many city populations there. Exam Puerto Rico, last one will only come. So you need to focus only on the last one. Income tax says, Rahul, if you are going to have a house which is owned by the employer, 15% of your salary will become taxable. 15% of salary will become taxable if the house is taken up to August, meaning the first 5 months. For the first 5 months. If you have taken the house after August, for the current year, income tax says for the next 7 months you will be taxable at the rate of 10% of salaries. 10% of salaries. Clear? Yes. You tell me, Rahul, no, actually I did not take the house by ownership. Employer is saying my house is not owned, my house is hired. Income tax says the higher charges are 15% of salary for the first 5 months and higher charges are 10% of salary for the next 7 months. It got misplaced. First 5 months it is 15, second 7 months it is 10. In simple words, Rahul, if you have an RFA which is owned by the employer, the provisions are 15% of salary or 10% of salary. If the house is hired, it is 15% of salary or 10% of salary or higher charges, whichever is lower. Understand? For the first 5 months you will do 15. For the next 7 months you will do 10. Are you clear? Please be careful about the dates. This is the only attempt where they can test it. After that they cannot test it because next year everything will become 10. This year only they can test it, so they will try to play around. Please be extremely careful and extremely smart about this. Yes, if at all possible, I say in all practical sense, this year will not give you RFA for 12 months. They'll only give you RFA for after August. They'll only give you RFA for after August, which means they'll only ask you to remember 10. They'll only ask you to remember 10. This also becomes a complicated part now, because please to understand, if they're giving you only for a part of the month, RFA is also taxable only for part of the year. RFA is also taxable only for part of the year. Don't come and jump and do for the whole 12 months. It is wrong. Yes, if the question comes and says that the RFA is given only from November, you will tax only from November. You will tax only from November. You will not tax it prior months. You will not tax in prior months. Are you clear? Yes. Now, salary for the purpose of RFA is basic DA forming part. All commission, all bonus, all taxable allowances. It is basic DA forming part. All bonus, all commission, all taxable allowances. All taxable allowances. Clear? Not clear? Yes, this is what your provisions for RFA are. This is what your provisions for RFA are. Rahul, if you're doing RFA, after that you have something called as hotel accommodation. Income tax says, Rahul, if you're going to receive an hotel accommodation, the provisions are actual higher charges or 24% of salary, whichever is lower. 24% of salary. Salary here means same as RFA. Same as RFA. Then you have something called as concessional loans. If the employer is going to give you a loan at a discounted interest, income tax says the taxable perquisite is SBI as on the 1st April of the previous year minus the concessional loan of interest rate given to you. That will become your taxable perk multiplied by loan outstanding as on the last day of each month. Loan outstanding as on the last day of each month. Whatever transactions you do in the middle of the month is not considered. Do monthly basis interest, but only on the last day. But only on the last day. This loan will not be taxable if the loan is less than 20,000 or the loan is given for approved diseases. Loan is given for approved diseases. Then you have something called as subsidized food or food coupons. Income tax comes and says, Rahul, if you have any kind of food granting to you, it is exempt up to 50 per meal. It is exempt up to 50 per meal. Fully exemption if it is any kind of tea, coffee or beverages. No exemption if it is any kind of alcohols. No exemption if it is any kind of alcohols. Also exemptions if you are going to give this food in an offshore location. Also exemption if you're going to give this food in a offshore location. This is what the provisions are. Then you have something called as gift. Income tax says, Rahul, when you receive a gift under salaries, there can be two kinds of gift. One is cash gift, one is kind gift. If you're receiving a cash gift, it is fully taxable. If you're receiving a kind gift, it is fully taxable if it is more than 5,000. Not taxable if it is less than 5,000. Not taxable if it is less than 5,000. Then you have something called as ESOPs, employee stock option plan. Income tax comes and says, if you are going to receive any ESOPs from the company, the market price minus the issue price will become taxable as perk. Then you have something called as transfer of movable assets. Income tax says, Rahul, if you are going to sell the assets from employer to employee, tell me what kind of assets are you selling? Are you selling any kind of computers, motor cars or other assets? If you are going to sell any computers, it is cost minus 50% depreciation, WDV method for every completed years, ignoring any fractions. This item will become a WDV. If you have any money recovered from the employee, you can reduce this number in order to arrive at the taxable perk. If you're telling, no, Rahul, it is not computers, it is motor car, it is cost minus 20% depreciation, WDV for every completed years. And if you're telling, no, Rahul, it is not motor cars, it is any other assets, it is cost minus 10% depreciation, SLM method. Yes or no? Yes. Rahul, I'm saying, no, I'm not transferring, I'm using, meaning I'm giving it to my employee will use it. Again, split into three categories: computers, motor cars, others. Rahul, if you're going to give your employee computer for using, it is fully exempt. Rahul, the computer is being used for personal purpose, still exempt, doesn't matter. Rahul, you're saying, no, I'm actually giving any other assets to employee. Income tax says, tell me, where did you get the asset from? Did you own it or hire it? If you own the asset, it is 10% of cost. If you hired the asset, it is actual higher charges. Please understand, it is 10% of cost, not 10% of salary. It is 10% of cost. Full cost is 10%. And it is 10% of original cost, not 10% of WDV. It is 10% of original cost, which is going to be taxed for you. If you have been given this asset for only part of the month, then you can do 10% of the cost multiplied by the number of months. Divided by 12. Clear? I'm saying, no, Rahul, I'm actually been given a motor car. Income tax says, tell me, how did you get the car? Is it for fully official purpose, fully personal purpose, or partly official, partly personal? If you say me, Rahul, that it is fully for personal purposes, income tax says whatever you incur is fully taxable. Meaning any repairs and maintenance incurred is taxable. Any kind of car given is taxable. If it is hired, then it is higher charges. If it is owned, it is 10% of the cost. If you're going to give a driver, then salary of the driver is also taxable. Salary of the driver is also taxable. You say, Rahul, no, it is incurred fully for official purpose. Income tax says fully exempt. The question comes in exam which says, which is part official, part personal. Income tax says, tell me, Rahul, how is the model? How is the model? Is the employer owning the car? You say yes. Then they'll ask you, okay, tell me what is the employee doing? What is the employee doing? I will say employee is doing nothing. Employer is owning the car, employer is running and maintaining. Employer is owning the car, employer is running and maintaining. Income taxes provisions are 1,800 per month or 2,400 per month. It is 1,800 per month or 2,400 per month plus 900 per month if you are given a driver. If you are given a driver. Now what is this 1,800, 2,400? They will check for the CC of the car. If the CC of the car is less than 1,600, they will say 1,800 per month. If the CC of the car is more than 1,600, they will say 2,400 per month. Yes, I'm saying no, Rahul. Actually, what is happening is employer is owning the car, but employee is taking care of running and maintenance. Income tax says it is 600 per month or 900 per month plus an additional 900 for driver. You say no, Rahul. Actually, what is happening is it is employee's car. Employer is bearing R&M. Income tax says take the full R&M as taxable. From that you remove 1,800 per month or 2,400 per month depending on the CC of the car. And if you say, Rahul, employee is doing everything, car also, running also, then there is no perk itself. Leave it as it is. Yes or no? Yes. Finally, few items. I'm saying, Rahul, education facilities. Income tax says if you are going to get education facilities, ask yourself who's getting it. If the employee is getting it, it is exempt. If the children are getting it, income tax says, tell me, is the education facility given in employer's school? If it is given in employer's school and the cost of education of that school is less than 1,000, then it is exempt. If you say, no, Rahul, it is not employee's school, it is not employer's school, then it is taxable. If you say, Rahul, it is employer's school, but the cost is more than 1,000, then it is taxable. If you say, no, Rahul, it is not my children, it is not me, it is my family members, anyone else also, income tax says it is fully taxable. Next, you have any other perks? Perks are coming and saying servant, gas, credit card, club expenditures, all incurred are fully taxable unless and until it is incurred for official use. Other than that, if you receive any professional tax is fully taxable if the employer pays it. Any other expenses like telephone reimbursement, training expenses, allowances for government outside India, any kind of tax on non-monetary purposes, all these become fully exempt. Please be careful about this. Any kind of lunch allowance fully taxable. Lunch perquisite is 50 per meal. Medical allowance is fully taxable. Medical reimbursement has conditions. Telephone allowance is fully taxable. Telephone reimbursement is exempt. Correct, not correct? Yes, please be very careful about this. After all this is done, you will arrive at something called as gross salary. From this gross salary, you have to reduce 3 items. One is deductions of standard at the rate of 50,000 per annum. Second is your entertainment allowance only to government employees. Government employees is least of the 3. One is actual, one is 1/5 of basic pay. 1/5 of basic pay, meaning salary is here only basic salary. Next, 5,000 for the full year. Least of the 3 will become deducted. Finally, any kind of professional tax which is paid by the employer or by the employee. In simple words, Rahul, if the employer is paying professional tax, you will add it to gross salary, claim a deduction. But if your professional tax is paid by employee, you will directly remove it from gross salary. As a deduction. If you do this much efforts, you will arrive at income from salaries. Are you clear? This is what your chapter on salaries is. Any doubts? Any confusions? No? We're right on dot 9:45. Yes. Now, what is the highlights in the book? Highlights in the books are those cases which are not eligible if you are opting for default regime. Highlights in the books are those cases which are not eligible if you are opting for default regime, meaning items which are not highlighted is available in both default and alternate. Items which are highlighted are not eligible in default, only eligible in alternates. Only eligible in alternates. Rahul, what is the simple trick to understand this? Ask yourself, Rahul, if the benefit is going to be recurring and if the benefit is going to be huge. If yes, then income tax came and said not eligible in default. Not eligible in default. For example, if you notice, house rent allowance, recurring, huge, not eligible. Child education allowance, recurring, not huge, but exempted. Yes, child hostel allowance, recurring, not huge, remove. Any kind of tribal allowance, not allowed. Any kind of traveling allowance, helper allowance, research allowance, uniform allowances. In simple words, Rahul, when it comes to other allowances, only 3 items are allowed. One is transport allowance for disabled. One is traveling. Traveling illegal. Transport allowance for disabled, any kind of per diem allowance, and any kind of conveyance allowance. Any kind of per diem and any kind of conveyance allowance. These are the only 3 items which are exempted for default regime. Default regime. Other than that, all other items will become fully taxable. Apart from that, if you go to retirement, retirement will remain as it is. If you go to perk, leave travel concession, huge reduction, recurring in nature, therefore not allowed. Leave travel concession, not allowed. Then if you go to, hey, this is my highlight. This is my highlight. Yes. On the bottom, you see, notice very carefully, there is something called as food coupons. There is something called as food coupons. Income tax says, Rahul, if you give lunch in office, then it is exempt. But if you give a food coupon, default regime says taxable. Default regime says taxable. No more food coupons in default regime. No more food coupons in default regime. And finally, if you come to your deductions, understand very carefully, starting this year, standard deduction is granted in both regimes. Standard deduction is granted in both regimes. It was not there until last time. Now it is there in both. So this is an amendment for current year. This is an amendment for current year. You now have standard deduction under both the regimes. Default also will get 50. Alternate also will get 50. But the other two remain as it is. The other two remain as it is, meaning default cannot grant you entertainment or professional tax. Default cannot grant you entertainment or professional tax. Are you clear? Are you clear? Yes, no confusions. Please be careful about this. Standard deduction, default regime, this time 100% question. This time 100% question. You will get a question in default regime with salaries in it, where they will ask you to do standard deduction. And if you assume that standard deduction is not there, you will get assumed on marks. You will get assumed on marks. Don't do that. Don't do that. Clear? Yes. This is the end of your salaries. I'm assuming there is no confusions here. All good? Yes. In the cheat sheet, you have formats. You can see there are 3 columns created. How do you present your whole formats are given? You can follow the format sequence. You will be able to present it better in exams. Are you clear? Yes. Great. Let's cut for our break. It's 10 almost. We will come back at 10:30. We'll come back at 10:30 and then we'll start with the balance topics. ஹலோ, முன்னாடி என்ன பிரச்சனை? நீங்க அது கனெக்ட் பண்ணிட்டீங்க, நான் இதை வச்சு யூஸ் போட்டுட்டு இருக்கேன். இங்க இருக்கு மைக். ஹலோ,
Hello, 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 hello. Hello.
ಹಂಗ ಬಯಸಿದ್ರೆ ಸಾಕು ಹಿಂಗೆ ನಮ್ದು ಔಟ್ வரக்கூடாது.
Working in OBS போடலாம்.
ஹலோ 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 Hi, ma'am. Good. How are you? Everything is working fine in Saturday morning. I'm not sure what went wrong. Now, I mean, what you've done is making sense, but it's very sensitive. It's picking up all random voices also. No, it's not. See, I'm doing it right now. Now it's showing not so much. It's because of me talking. Otherwise, if I'm silent, if I tap it, it doesn't work. See. To restart the PC? Oh, the streaming will stop, right? That's not an issue. Okay, I mean, sorry, the recording will stop. The recording will stop. Should take it. I think because I'm able to hear everything now. I mean, I think the blur is gone, but the issue is the background noise is because the person when they open the door also is getting picked up with. That's creepy. Now I think you can hear it now. It's very creepy. Can we? Is the suppression? Can you delete the suppression? No, right? Okay. Hello. 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 Hello.
Hello, hello. Hello, hello, hello. Hello, hello, hello. Check, check. Hello, hello. Hello, hello. Check, check. Hello. The depth is okay now, right? Hello, hello. 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 Hello.
Ramadi Kola. Hello. Hello. Is there any fumble? Okay. If it doesn't work after this, I will throw this out. There was a time, when we used to come for physical classes. You don't come for classes, no class for you. Yes. Nowadays generation, you want recordings, you want this, you want that. OBS, you want green screen, you want projector, you want what nonsense. Anyway, nevertheless, we are looking at income from house property. Yes, two conditions to be satisfied. One condition is that you should have a house. Second condition is that there should be a owner to the house. There should be owner to the house. Rent received from the property is what is being taxed under the head income from house property. Income from house property. If you're going to have a rent received from a land, it is not taxable under house property. It goes taxed under PGBP or IFOS. It goes taxed under PGBP or IFOS. At the same time, if you are not the owner of the house, but someone else is the owner of the house, it becomes taxable under PGBP or IFOS, because subletting is not taxable under HP. Yes or no? Yes, this is what the conditions were in house property. Apart from this, you had something called as deemed ownership concept, where the deemed ownership came and said that generally you are the owner of the house. Generally, you are the owner of the house. But in some cases, I may make someone else as the owner. Yes, for example, if I am transferring my property to my spouse for inadequate consideration. If I am transferring my property to my spouse for inadequate consideration, income tax says I will continue to be the owner of the house. I will continue to be the owner of the house unless and until the transfer is happening with an agreement to live apart. Yes. Option number 2, I am coming and saying I am not transferring it to my spouse, I am transferring it to my son's wife. In that case also, I will still continue to be the owner of the house unless and until it is a minor married daughter. Unless and until it's a minor married daughter. Some other things were like any kind of holder of impartial assets, any kind of allotment of cooperative societies, any kind of lease happening more than 12 continuous years. Yes, all those things were there as a deemed ownership concept. Nevertheless, income tax came and said, Rahul, when you have a house property, classify them into 3 categories. Classify them into 3 categories. If you are going to tell me that the house is used for business, it will become taxable under PGBP. If you tell me, Rahul, the house is not used for business but for self-living, the house will become SOP. If you tell me, no, Rahul, the house is going to be let out, the house becomes LOP. When it comes to SOP houses, income tax also came and said that you can only have SOP houses to the extent of 2 at your options. You can decide which 2 houses can be treated as SOP houses. Apart from that, all houses will become DLOP. All houses will become DLOP. You cannot consider all houses as SOP. You can only consider 2 houses as SOP. Every other house will become DLOP. Yes. At the same time, income tax also did clarify to the fact that if you are going to hold an asset as a stock in trade and your business is not into letting out of properties, you will still be taxable under IFHP. You will still be taxable under IFHP with an exception that from the year in which you complete the house, for the next 2 years, the house will be assumed as nil. Because I am giving you additional time for you to sell your properties. So if you are going to hold an asset as a stock in trade, a house as a stock in trade, for the next 2 years, the house will not be taxable in your hands because you are in the phase of selling your house. After 2 years, all houses will become DLOP houses. Yes or no? Yes. Keeping that thought in mind, Rahul, what is the format of house property? The format is as follows. If you are going to have an SOP, DLOP and LOP houses, you need to come and tell me, Rahul, how is the consideration looking like? You start from something called as municipal rent versus fair rent, whichever is higher. Compare that with standard rent, whichever is lower. This number will give you something called as expected rent. Now, please understand, expected rent is only there for SOP. It is only there for LOP and DLOP. And after you get an expected rent, you have to consider that with actual rent for full year, ignoring vacancy. Whichever is higher. Please to understand, SOP at this stage will also be 0. In DLOP, you will not have an actual rent, so you will take expected rent directly as annual value. As annual value, this is only for LOP. This is only for LOP. Please do understand the fact that I'm saying you have to take your expected rent versus your actual rent for the full year, ignoring vacancy. Ignoring vacancy, that will be called as your gross annual value. But if you do have a vacancy, and you come and prove it to me that you're a good assessee, in the sense that your actual rent for the full year is more than expected rent, I will permit you something called as vacancy loss. But if you do come and tell me that no Rahul, actually my expected rent is higher than my actual rent, income tax will say take your expected rent as it is. I am not giving you any vacancy loss. At the same time, if you have something called as unrealized rent, income tax said you satisfy 4 conditions for me, I will let you the deduction of unrealized rent from your actual rent. Condition number 1, the tenancy should be bona fide. Condition number 2, you have taken steps to recover the rent. Condition number 3, if the person is not giving the rent, you have at least tried to vacate the premises, or he has vacated the premises. And condition number 4, if he has vacated the premises, you have not given him any other premises. These are all rule 3. If you satisfy all these conditions, I will permit this unrealized rent from your actual rent before comparing expected rent. So it will become expected rent versus actual rent for the full year minus unrealized rent. Whichever is higher. Are you clear? Yes, this will arrive at something called as gross annual value. From this gross annual value, you will now reduce something called as empty municipal taxes. Now, please do keep in mind, even though I use the word empty, ICI may use different words. They may use words like property tax, sewerage tax, and all those things. It does not matter. They are all empty. Income tax says if you're going to incur any property tax, sewerage tax, and all those things, municipal taxes can be claimed as a deduction by the owner, provided it is paid in the current year. Meaning, Rahul, last 5 years I did not pay. Current year I paid 6 years current municipal tax. I will get deduction of full 6 years. Anything you pay in the current year, fully allowed as deduction. Rahul, in this year, I paid municipal taxes for the next 5 years. I will get deduction of full 5 years current year itself. Whatever you pay, you can claim. Correct? Yes. So Rahul, what I will do, I will take my gross annual value, I will remove my municipal taxes, I will arrive at net annual value. Understand, SOP net annual value is still 0. LOP will have a net annual value, DLOP will have a net annual value. Good to go. Rahul, from my net annual value, I will remove 2 items. One is called as 30% of NAV. But before I do that, understand, if you have an unrealized rent which you have recovered now, income tax says if you have claimed it as a bad debt earlier, today you have to tax it as bad debts recovered. So when you're going to tax it as bad debts recovered, you are eligible for 30% of deduction, and therefore before you do 30%, add the unrealized rent or arrears of rent. In order to arrive at something called as total NAV. From this total NAV, you will reduce 30% of total NAV standard deduction in replacement of you removing rent, unrealized rent, any other expenses. In return of you removing any other expenses. Any other expenses like insurance, repairs, and all those things are not allowed as deduction because you're getting 30% deduction. Yes or no? Yes. You will remove that, and then finally you will remove something called as interest on loan. Understand, even when it is an SOP property, interest on loan can be claimed. Deductions are as follows. If the property is LOP or DLOP, any interest which you pay is fully allowed as deduction. If it is an SOP property, meaning that two properties, you need to satisfy 3 conditions. Loan should be taken after 1999. Loan should be taken for purchase or acquisition. Loan should be taken with a condition that house is completed within 5 years from the date of taking the loan. Rahul, you satisfy all the three conditions. The interest which you will be eligible is 3 lakhs, 2 lakhs per house per person, per house per owner. And if you don't satisfy the conditions, you will be eligible for 30,000 per house per owner. But overall also you can only claim only 2 lakhs. So for both the houses put together also you can only claim 2 lakhs. So overall it is 2 lakhs per owner. 2 lakhs per owner. Yes or no? Yes. Now understand it is 2 lakhs per owner. Meaning, Rahul, when the same property has more than one owner, each will get 2 lakhs. Each will get 2 lakhs. Correct or not correct? Correct or not correct? Yes, this is what your conditions are. This is what your conditions are. Please do understand the fact that when you're talking about interest, interest can only be interest pertaining to a loan taken for house. Yes, which means if you have taken a loan for paying your municipal taxes, if you have taken a loan for paying municipal taxes, interest on that municipal tax will be not allowed. Not allowed. Rahul, you have taken a loan for repaying the old loan which you have taken for house, interest will be allowed. Interest will be allowed. So loan taken for fresh loan taken for repaying old loan, interest coming on fresh loan is allowed. Interest coming on fresh loan is allowed. But if you've taken the loan for any other reasons which is not connected to the house, it is not allowed. It is not allowed. Please do understand the fact that when you're talking about interest, it is not just interest paid, it is interest accrued, payable, outstanding, whatever you call it. It is interest payable, accrued or outstanding also. That is also allowed as a deduction. That is also allowed as a deduction. The only condition to pay is in municipal taxes. The only condition to pay is in municipal taxes. Correct, not correct? Yes, yes. These are what your municipal interest on loan is. This is what your interest on loan is. At the same time, please do understand, if you are opting for default tax regime, if you are opting for default tax regime, SOP interest is not allowed. SOP interest is not allowed. You can only claim interest on loan from LOP or DLOP. LOP or DLOP. You cannot claim any interest on loan from SOP properties. Not allowed. Clear? Clear? Yes. When you do all this, you will arrive at your income from house property. You will arrive at your income from house property. At the same time, please do understand, if you have one building, part of the house is SOP and part of the house is LOP. Income tax says all common items will be split between SOP and LOP. Split between SOP and LOP. But if you have one property, part of the year is LOP and part of the year is SOP. Income tax says assume that the property was full year LOP. Assume that the property was full year LOP. Meaning in this case, actual rent will be taken for the actual period. Actual rent will be taken for the actual period. But against that, whatever interest you got can be fully claimed as deduction. Whatever MT you got is fully claimed as deduction. You don't need to proportions. You don't need to proportions. The one thing which has been tested frequently nowadays is called as composite rent. It's called as composite rent, where income tax is coming and saying that, Rahul, if you are going to give a house to someone along with facilities, to the extent the rent is pertaining to facilities will become taxable under IFOS, and the balance will be taxable under HP. The balance will be taxable under HP. The reason I'm putting so much efforts on this is because please understand, there was one question where what they'll do is they'll come and say, you know what, there is a person who is giving a house along with facilities. For the house he charged 30 lakh rupees, for the facilities he charged 10 lakh rupees. Totally he charged 40 lakh rupees. Now out of this, 30 lakhs will be taxable under HP, 10 lakhs will be taxable under IFOS. 10 lakhs will be taxable under IFOS. The question came and gave some expenses. The question came and said, for the facilities he incurred some light expenses. For the facilities he incurred some electricity charges. Rahul, allowed, not allowed? Allowed, not allowed? Allowed, not allowed? Allowed. Understand, it is going to be taxable under IFOS. IFOS like you can claim deductions. IFOS like you can claim deductions. I told expenses incurred for facility. Expenses incurred for facility. Next, he came and said, Rahul, I have appointed an agent to help me recover the rent, bodyguard. I have appointed an agent, recovery agent, for collecting my rent. Yes, this person has collected my rent and I have paid him 1 lakh rupee. I have paid him 1 lakh rupees. Rahul, amount allowable as deduction. Amount allowable as deduction. Amount allowable as deduction. 1/4 of the number. 1/4 of the number. Rahul, why? Understand, when he is putting his efforts, he is putting efforts to collect 30 lakhs, 10 lakhs or full 40 lakhs? Full 40 lakhs. What will you do? Rahul, his efforts 1 lakh rupees will be split into 3:4 ratio. 1:3 ratio. 1:3 ratio. Yes or no? Yes or no? That one which goes into IFOS is allowable because IFOS permits full deductions. The 3 goes to HP. HP you cannot claim deduction because you are claiming 30%. Because you are claiming 30%. You understand what I'm saying? You understand what I'm saying? Yes. Please understand that when you get questions like this where you have facilities involved, to a certain extent everything goes to HP, balance goes to IFOS. In that cases, you will have to look at the expenses and ask yourself, Rahul, what are these expenses pertaining to? What are these expenses pertaining to? If it pertains to HP, you will ignore. But if it pertains to IFOS, you will allow. You will allow because IFOS has no standard deductions. IFOS goes with the same logic. IFOS goes with the same logic. Are you clear? Are you clear? Yes, please be careful about these kind of questions. Please be careful about these kind of questions. I think I have given this question in... yeah, I later on released one PDF copy in the Telegram channel where I gave some 10 questions. Of the past. Yes, in that there is one of these questions. There is one of these questions where I have spoken about the fact that you have some house along with facilities given 30 lakhs, 10 lakhs ka number rahega. Please do try that question out. It's an interesting question and an important question. Yes, composite rent have become extremely famous nowadays. So please be wary about it. Yes or no? Can we go for it? Yes, sweet. We have done with what is called as HP. We are done with what is called as HP. Nothing else to discuss except for one last thing, not relevant for HP, but nevertheless, since we're doing it right now, you have this weird thing in chapter 6A called as 80EEA and 80EE. Yes, where 80EE and 80EEA comes and says that when you have a house property for which you're going to incur interest, if the interest is over and above the 2 lakhs, you can claim it as a deduction under chapter 6A. You can claim it as a deduction under chapter 6A. Now, ideally in all practical knowledge, you can go to chapter 6A only when you cannot claim it under HP. And when you say cannot claim it, you mean cannot claim it. It should be disallowed under HP for you to move to chapter 6A. But yes, this time the RTP came with a weird logic. In this time's RTP, ICA has made an assumption to make it whichever is beneficial. In a simple example, what happened is in the question, there was a LOP rent of 4 lakh rupees. And the person incurred interest of 5 lakhs for the LOP property. Technically, what will happen? LOP fully allowed. So what happened? You will end up in a loss of negative 1 lakh. Correct? Not correct? Yes. Now, negative 1 lakh ideally can be set off against other heads. Therefore, there is no problem. Scenario number 2, what they did is they said LOP rent is 4 lakhs. And the LOP interest is incurred is 8 lakhs. Now, loss will become 4 lakhs. Now, the problem with the 4 lakhs is that you can set off only to the extent of 2 lakhs under other heads. 2 lakhs against other heads. ICI made an assumption. They came and said, since we can only set off 2 lakhs against other heads, it is better to not use the full interest under HP. Because what will happen? Anyway, out of that 4 lakhs, how much you can use? Only 2 lakhs. Which 2 lakhs is getting wasted, which will go to the future years. Yes, income ICI came and said, do one thing. Don't claim full 8 lakhs under HP. Claim only 6 lakh 50. Why, Rahul? They took the balance 1 lakh 52 EA. And they came and said, you know what, Rahul, what we'll do, 2 lakhs you will adjust in HP and the balance 1 lakh 50 I'll adjust in chapter 6A. This is highly illegal. Straight up solidra. This is highly illegal because the provisions of 80EA comes and clarifies that you can only move something to EA provided it is not allowed under HP. Which means, which one is superior, HP or 80EA? HP is superior. When 80EA is not superior, they do not have authority to first allocate something to EA. Yes, which means you should have taken the whole 8 lakhs in HP and taken the balance to carry forward years. Just because you are not able to take the balance to carry forward years, you are coming and saying, no, I'll put it in EA so that I can adjust against other heads. Illegal. Straightforward illegal. You have misplaced provisions. But nevertheless, somehow ICF feels no new syllabus. We need to ask them consultant level questions, and they brought in this concept. Here they are now coming and saying 80EA is first priority. First give 1,50,000 there so that you can claim full deductions and reduce your income here. Practically should not be done. அவங்க சொல்றாங்க ஃபியூச்சர்ல கேரி ஃபார்வர்ட் பண்ணிட்டு ஃபியூச்சர்ல யூஸ் பண்றதுக்கு இந்த வருஷம் இன்கம் குறைச்சிருக்கும். நீ இந்த வருஷம் எவ்வளவு செட் ஆஃப் பண்ண முடியும்? 2 லட்சம் தான். நீ 1,50,000 அங்க போட்டதுனால என்ன ஆச்சு? இப்போ நீ 3 லட்சம் செட் ஆஃப் பண்ணிட்ட. புரியுதா? Yes, what you did, 2 lakhs you claimed in HP and 1,50,000 you claimed in EA. Totally you claimed 3,50,000. How much you should have claimed? Yes. Two issues. Issue number one, first of all, EE has only been introduced for SOP houses. It's not been introduced for LOP houses because LOP is fully allowed. It's only introduced for SOP houses. So, nee LOP ku first allocate kamanadhu tappu. It's already allowed. Adukapram you still telling no, I'll first allocate to EE is wrong. Definitely wrong. Cannot do that. Cannot do that. But nevertheless, since ICA has done this, my only warning to you is please read that question once. Please read that question once. See to that question once in RTP so that in case it comes in exam this time, you are at least careful. You're at least careful. ICI would love to play around these nonsense. Yes. Ideally, if you ask me, it is illegal. We will be writing notes against to ICI, but nevertheless, since you have given it in the paper, it is better you be careful. Yes or no? Yes or no? Some smart CA sitting on BOS portal and coming and saying, I know better income tax than ICI, it seems. Yes, some nonsense. Completely wrong, but nevertheless, yes, they were trying to just complicate life. Please be careful. Any kind of EE provisions, smart enough. If a question comes in exam, try to allocate something to EE also in case it is feeling more beneficial. In case it is feeling more beneficial. Only for exam purposes, not for practical purposes. People will put you in jail if you do all those things. Okay. Yes. Yes. Second, Rahul, if you are going for default regime, income tax comes and says, Rahul, the loss which you have from house property cannot be set off against any other head of income. Cannot be set off against any other head of income, which means if you have a loss from house property, you can only adjust against income from house property, if not carry forward for a period of 8 years. Which means, Rahul, if you are in alternate regime, the rules are as follows. If you have a loss from house property, you can set off against income from house property. If you are not able to set off against income from house property, you can set off against any other head of income up to 2 lakhs. Rahul, that is also not happening. Carry forward for a period of 8 years. Provided return filing is not mandatory for HP. Return filing is not mandatory for HP. Two things which are not mandatory for return filings: HP and unabsorbed depreciation. HP and unabsorbed depreciation. Also. Yes. We're moving on to the next head of income, the most important head of income for your compulsory question, called as profits and gains of business or profession. Profits or gains or business or profession. Yes. Now I know you might have read it from your books. Big things. This is PGBP completed in 3 sites. PGBP completed in 3 sites. We are going to look at this PGBP from 3 sites. Yes, it is all designed in section wise only. So we are going to read it from section wise level only. Before I start PGBP, just a word of caution. Yes, PGBP comes and says that, Rahul, what is taxable under the head PGBP is profits and gains of business or profession. Profits and gains of business or profession. But it also includes into its picture some items like salary received by a partner from his firm. Government granting you subsidies and all those things. Now, this is one thing which I've already told in my class, but nevertheless, I'm telling it once again for all of my friends. You have 4 kinds of words to be careful in PGBP. 4 words are disallowed, allowed, add, reduce, deduct, whatever you call it. Yes. Now, disallowed means it is there in accounts P&L. Tax does not allow. It is there in accounts P&L. Tax does not allow. Rahul, allowance is not there in accounts P&L. Tax allows. Yes. Addition is not there in accounts. Tax says tax it. And reduces there in accounts. Tax says remove it. There are 4 words you have to be careful about. Notice very carefully. Disallowance pertains to expenses. Allowance pertains to expenses. Addition pertains to income. Reduction pertains to income. Yes, these are your 4 words. Extremely careful about it, because in exam this is how they play. Why am I telling you this, Rahul? Because unless and until you understand what accounts does, you cannot understand what tax wants. You have to read the question very carefully and first figure out what exactly is happening in accounts then figure out what is happening in tax. Then figure out what is happening in tax. Yes or no? Yes. A simple example I'll give you. I'm coming and saying, Rahul, a person has debited interest on loan in P&L. A person has debited interest on loan in P&L, but has paid this money after the due date of return filing. But has paid this money after the due date of return filing. First of all, what has happened in accounts? You have debited in P&L. Profit has reduced or increased? Reduced. Profit has reduced. You have claimed a deduction. You have claimed a deduction. Now, income tax is coming and saying, boss, you can only claim such expense provided payment is happening within the due date of return filing. You made the payment after the due date of return filing. Income tax says this is not an expense in tax. This is not an expense in tax. Question, you have already made the expense in accounts. Tax is saying don't make the expense. This is disallowed. This is disallowed. There in accounts, not allowed in tax. There in accounts, not allowed in tax. Clear? Clear? Yes. Rahul, I am coming and saying you have paid interest on loan. You have paid interest on loan after the due date of return filing. After the due date of return filing, but forgot to put it in accounts P&L also. But forgot to put it in accounts P&L also. Rahul, accounts P&L net profit increased or decreased? Nothing happened because it is not even there. It is not even there. Now, you are saying interest on loan is paid after the due date of return filing. Tax also says it should not be there because you did not pay within the due date of return filing. Yes. Accounts is also saying not there. Tax is also saying not there, meaning you will ignore. You will ignore. You understand what I'm saying? You understand what I'm saying? Yes. Unless and until you understand what is happening in accounts, you cannot understand what is happening in tax. If the treatment in accounts is the same in tax, you will ignore. If the treatment in accounts is different from tax, is when you will do add or reduce. Add or reduce. You understand what is happening? You understand what is happening? Yes. In order to make life simple, what I've done is I've prepared the whole PGBP statement into 3 columns. One is items to be added, items to be reduced, and items to be ignored. Items to be ignored. This is in section format. This is in section format. Rahul, if you have to do your compulsory question, you always start with something called as net profit. You always start with something called as net profit. So the first thing is to do is to take a net profit. Then you will do all your adds. Then you will do all your less. Then you will put notes for your ignored. Put notes for your ignored, and you will find out your PGBP. And you will find out your PGBP. You understand what is happening? Yes. Which means, Rahul, all the 3 columns has to be done? Yes. Rahul, can I miss out any column? No. Yes. You understand what I'm doing? You have to start from net profit, add all your items, reduce all your items, ignore certain items with the notes. Ignore certain items with notes in order to arrive at your PGBP. Rahul, one miss out, full PGBP will go wrong. Full PGBP will go wrong. Be smart about it. Yeah. 3 columns, added, reduced, ignored. Items added, reduced, and ignored. I am coming and saying, Rahul, we start from section number 30 and 31. We start from section number 30 and 31. 30 and 31 comes and says, if you are going to incur expenses against a building or a plant and machinery, if you are going to incur any expenses against building or plant and machinery, rules same as accounts. Rules same as accounts, meaning if you have incurred some tax payments, allowed. If you have incurred rent payments, allowed. If you have incurred any insurance payments, allowed. If you have incurred any repair charges, allowed, provided it is not capital expense. It is not a capital expense, meaning in exam, if you see all these expenses, you will come and say ignore because same as accounts. Ignore because same as accounts. Correct? No. Correct? No. But if you see something called as capital repairs, if you see something called as capital repairs, you will ask yourself, Rahul, has the accounts capitalized or has the accounts debited to P&L? If you see that the accounts is debited to P&L, income tax will come and say you should have capitalized, therefore disallow or add. Therefore disallow or add. If you come and say no, Rahul, accounts has capitalized, tax is also saying capitalized, you will ignore. You understand what is happening? You understand what is happening? Yes. So I am coming and saying, Rahul, any capital repairs which is debited to P&L will get disallowed, and you will claim depreciation. You will claim depreciation. Clear? Yes. So I am coming and saying, Rahul, items to be added, capital repairs which are incurred on building and plant and machinery, if debited to P&L. If debited to P&L. Clear? Yes. What are the items to be ignored? Any kind of items which are not debited to P and L, which are not debited to P and L. What is to be ignored is also any kind of revenue expenses which is there in the P and L, because income tax also allows, accounts also allows. Clearer? Keeping that thought in mind, keep the balance topics. We are in the section number 32. Section number 32 being depreciation. Income tax comes and says, Rahul, when you want to claim depreciation, there are two conditions to satisfy. First condition, there should be an asset. You should be the owner of the asset, and asset should be first put to use. If you put to use the asset only, you can claim a deduction. If the asset is not first put to use, you will not claim a deduction, except for cases like passive use assets on fire extinguisher, machine spares and everything, where the depreciation can be claimed from the rate on which the asset is ready to use. You cannot claim depreciation on two assets, land, goodwill. You cannot claim depreciation on land and goodwill. When it comes to depreciation, income tax says there are certain ways to do depreciation. First is to understand which method of depreciation. Income tax says you can only follow WDV method. SLM can be followed provided you are power sector companies. Yes, if you're following WDV method, the format is as follows. Income tax says take opening WDV. Add additions being put to use for more than 180 days, put to use for less than 180 days, and not to put to use. Remove from this something called as sale value. Sale value of the asset. You will arrive at something called as cost of asset. On this you will do something called as depreciation. Depreciation will be done how, Rahul? It will be on opening plus more than 180 at the rate of full, and then it is less than 180 at half the rate. Yes or no? Please understand, in case you have a sale, sale normally is done on FIFO basis, meaning if you have a sale value, first reduce it from opening, then reduce it from more than 180, then reduce it from less than 180 based on FIFO method, so that you can arrive at the right depreciation. So I would also come and say it is opening plus 180 minus sale value. Yes or no? Yes. This is what the conditions are in order to claim depreciation. After you do that, you will arrive at something called as WDV, which is nothing but cost of the block minus depreciation actually allowed. You understand? Yes, this is what a WDV method is. This is called as block of asset concept. Now, what are the depreciations given in your syllabus? You have buildings. Quickly, rates. Rate 10, furniture and fittings 10, plant and machinery 15, plant and machinery is 15, motor vehicles is 15, intangible asset is 25%, computers is 40%, computer software is 40%, printers is 40%, UPS is 40%, mobile phone is 15%, mobile phone is plant and machinery 15%. Rahul, any kind of books, annual publications 40%, windmills are good for environment, income tax wants to promote, rate becomes 40%. Solar panels 40%. Life saving equipments 40 life saving equipments are 40%. Yes or no? Yes. Two rules to follow if you don't know what the depreciation rate is. Ask yourself, Rahul, will it depreciate faster? If yes, 40. Rule number 2, ask yourself, is it good for environment or is it important for India? If yes, then it is 40. Yes. So windmills and all are good for energy. Life saving equipments good for health. Therefore 40. Clear. Rahul, doctor equipments 15 only day. Life saving equipment is 40. Doctor equipment is his plant and machinery. Therefore, it is 15. Summathukku ellame. Yes. For a doctor, his equipments are his plant and machinery. General rate, therefore, 15%. Therefore, 15%. Clear? Clear? Yes, these are what your rates are. These are what your rates are. But income tax also comes and says that if you are into manufacturing, or you are into power sector, you can claim something called as additional depreciation at the rate of 20%, but it will become 10 in year 1 and 10 in year 2, provided asset is put to use for less than 180 days. Rahul, this 20 or 10 can be claimed only on new plant and machinery. New plant and machinery means all machineries which are not second hand, not for office purpose, not office appliances, not motor vehicles, except for forklift, and finally any kind of assets which are allowed full 100% deduction as scientific research, scientific specified business, etc. and etc. Yes, these are all your assets which are eligible, not eligible for additional depreciations, Yes or no? Yes. Income tax is coming and saying, Rahul, if you are having all these assets which are not eligible for depreciation, you can still claim normals. Additional depreciation can be claimed only for specified new plant and machineries, but whatever additional depreciation you are claiming is only for first year. 20 முடிச்சதுக்கு அப்புறம் no more additional depreciation, then you go back to normal depreciation. Yes or no? Yes. Now Rahul, if you are going to have an additional depreciation and normal depreciations, scenario comes in a way that what happens is you have sold your assets. And unfortunately you have sold it more than the opening plus additions. Current year you had additions of 100. Your opening was 500. Total block was 600. You sold it for 750. Rahul, you will stop depreciation, move to capital gains. This will become a short-term capital gains. Very good. This will become a short-term capital gains. Yes. So provisions are coming and saying, Rahul, if you end up selling your assets more than for your opening plus cost, stop depreciation, move to capital gains. If you sell it for lower than opening plus cost, continue depreciation unless all assets in the block are sold. If all assets are sold, then you have to move to capital gains and do short-term capital loss. But if not, then you will continue depreciations. Yes or no? Yes. These are what the provisions are. Then you have something called as SLM method for power sector entities. Not so important from exam, but nevertheless the provisions come and say if you are doing SLM method for power sectors, you have to follow the same accounts concepts. The only difference is I will give you the rates. These are the rates which will be going on. But yes, if you end up selling these assets, you will have loss being called as terminal depreciation, profit being called as balancing charge, and any profit over and above the cost will be called as capital gains. Yes or no? Yes, we discussed about all these concepts and logics in classes. Yes. After that, when you complete all these depreciations, you will arrive at the PGBP. If you so come to a scenario where the PGBP ends up in a loss, income tax comes and says first priority will be given to depreciation. It will be called as unabsorbed depreciation, will be carried forward for infinite years, will be set off against any head other than salaries, whether in the current year or in the future years. Return filing not mandatory on time. Yes or no? At the same time, income tax also comes and says that, Rahul, what you have to arrive at closing WDV is cost of the block minus depreciation actually allowed. Meaning, Rahul, if you have taken an asset and you have used it partly for business and partly for personal, what you will remove from the block is only that much of depreciation which is pertaining to a business. What you remove from the block is only that much of depreciation which is pertaining to business. Simple example, I am coming and saying, Rahul, there is an asset worth 100 There is an asset worth 100, 10% building rate, 10% building rate. Depreciation will be 10. Yes, but I'm coming and saying, Rahul, this asset 50% was used for business and 50% was used for personal, which means I will only allow 5. Rahul, when I'm clearing my block, when I'm closing my block, closing WDV will be 100 minus 5. Number becomes 95. Rahul, you should have removed full 10. No, because you claimed only 5, you will remove only 5. You will remove only 5. Clear up? Clear up? But if you are going to use an asset for business and agriculture, if you're going to use an asset for business and agriculture, Rahul, in that case, what you claim in the P&L will be fully removed, even though 40% of it would have been exempt from tax. It doesn't matter. Remove the whole number. Remove the whole number. Meaning, Rahul, let's say, for example, I have taken an asset for 100. The depreciation on that is 10. Number becomes 10. 10% ma. Number becomes 10. Number becomes 10. I am in T business. My rate will become 40 and 60, which means depreciation which I will claim is only 44. I'll claim only 40%, which is 4. I'll claim only 40%, which is 4. Rahul, in my block, I will reduce 100 minus full 10. I'll reduce 100 minus full 10, because please understand, the balance 6 was also claimed by you. The balance 6 was also claimed by you in the business itself. Just that it became exempt from tax. But did you claim it in the business? Yes. Therefore, you will remove the whole 10. Understand there is a difference between what is called as business and agriculture, and there is a difference between business and personal. Personal items will get ignored, but agricultural items will be considered. Same as partial integration. Yes or no? Clear with me? This is what your depreciation concepts are. Rahul, how do you do it in your P&L? You will ask yourself a question, Rahul, is there a depreciation debited in the P&L? If yes, then you will disallow. You will add back, disallow, whatever it is. You will add back and disallow, and then claim depreciation as per the computation which we spoke about right now. Then do depreciation as per the computation which we spoke about right now. Clear? Good to go? Yes. Rahul, after section 32, where something called as scientific research, where I came and told you, Rahul, when it comes to scientific research, the provision is very simple. Any expenses incurred, 100% allowed, except for cost of land, whether capital or revenue. Any expenses you incur will be 100% allowed as reduction, except for land. Obviously, if you are preparing accounts properly, revenue expenses already there in the P&L, therefore you will ignore. Capital expenses not there in the P&L, therefore you will allow. Clear? Yes. Now, Rahul, if you propose to sell this scientific research asset, again, I'll ask you a simple question. How are you planning to sell it? Are you planning to sell it inside your business itself, meaning to your factory or other entities, or you're planning to sell it outside in the market? If you're planning to sell it outside in the market, the concept will be same as SLM method, meaning you'll do balancing charge or capital gains. But if you're planning to sell it inside your business, then you will simply take the cost of the asset as 0. And proceed forward. Clear? Yes. Next, we have something called as specified business. Section number 35 AD. Specified business. Income tax comes and says there are some businesses which I personally like. Please work with this business. Examples are hospitals, 100 beds, hotels, more than 2 stars, warehousing for agricultural produce, sugar and agricultural produce, not eligible, edible oil. Not eligible is edible oil. Yes, 3 businesses for you to keep in mind. One is hospitals with 100 beds, hotels with 2 stars, warehousing facility for sugar and agricultural produce, not into consideration edible oil. For all these like key business, income tax comes and says whatever capital expense you incur will be 100% allowed, except for land. Yes or no? This is what the provisions are. Which means again you will ask yourself a simple question. Rahul, in the exam, if you see a like key business, you have to ask yourself, Rahul, should I opt for 35 AD and claim full deduction of the capital expense right now? If yes, then understand capital expense will not be there in the P&L. You will have to allow. You will have to allow. Correct? Correct? Yes. Revenue expense is already there in the P&L. You will ignore the expense. You will ignore the expense. Good to go. Good to go. Yes. Rahul. Now, if the specified business ends up making a loss, if the specified business ends up making a loss, income tax comes and says this specified business loss can be adjusted only against specified business income. If you're not having specified business income, you can carry forward for a infinite years. Carry forward for infinite years and adjust against any specified business income. Any specified business income. Correct? Correct? Yes. Now, Rahul, if I have a specified business asset, I again can decide to sell the asset. In that case, I will come and ask you, tell me, how did you sell the asset? Did you sell it to your other business or did you sell it to your market? Did you sell it to your market? How will you specify business sell to specified business? Yes, either you have sold it to the market or you have sold it to your other business or you have sold it to your other business. If you have sold it to the market, the rules are same as SLM, meaning you will do balancing charge or capital gains, balancing charge or capital gains. But if you are planning to sell it to your other business, if you are planning to sell it to your other business, income tax says, tell me when did you sell? Tell me when did you sell? If you sold it within 8 years or after 8 years. If you sold it within 8 years, if you sold it within 8 years, income tax is saying you have violated my conditions. You have violated my conditions. Tell me how much depreciation you should have claimed. Tell me how much depreciation you should have claimed. That much I will allow. That much I will allow. I will reverse the whole deduction. I'll reverse the whole deduction. So in simple words, I'm saying reverse the whole deduction, allow the depreciation. Reverse the whole deduction, allow the depreciation. Whatever you reverse will be added to the cost of the asset. Whatever you reverse will be added to the cost of the asset. Are you clear? Yeah, are you clear? Yes, this was 35AD. This was 35AD. We are done with 1, we are done with 2, we are done with 3, we are done with 4. Yes, yes, sweet. We're moving on to the next items, which is section 36. We're moving on to the next item, which is section 36. I'm reading out items from here, not much to understand. First item I'm noticing is something called as family expenses incurred by non-company. Yes, you have a provision called as family expenses. Income tax comes and says if you're going to incur family expenses, only company can incur family expenses, family planning expenses. Company can incur family planning expenses. Any other person incurring the expenses will get fully disallowed. In your inter, since only individuals are going to be tested, family planning expenses for you will be fully disallowed. Yes, if you are going to have any kind of preliminary expenses, income tax says preliminary expenses can be allowed over a period of 5 years. Can be allowed over a period of 5 years, which means if you're going to have any expenses which are debited to P&L, income tax will say disallow 4/5 of this. Disallow 4/5 of this and allow it over the next 4 years. Allow it over the next 4 years. Since we are at this, let me also discuss about the one topic which is there in HP and we have not discussed, something called as pre-construction interest. Something called as pre-construction interest. Income tax comes and says if you have taken a loan for building a house, and the house is not completed in the same year in which the house is loan is taken. The house is not completed in the same year in which the loan is taken, to the extent of the date of the loan, till the date on which 31st March of the preceding previous year, 31st March of the preceding previous year in which house is completed, meaning if I am coming and saying that the house is completed in the current year, don't take the current year, come back to 31st March, up to 31st March, whatever interest you incur will be called as pre-construction interest, will be allowed over a period of 5 years, yes or no? So if I am coming and saying, Rahul, that I am incurring expenses of interest worth 1 lakh rupees, income tax will say allow it over 5 years, every year you can claim 20,000. Please be smart about the fact that the 20,000 which is going to be claimed is not an over and above the current year interest. You will add it to the current year interest in order to check for the limit of 2 lakhs. If the limit of 2 lakhs is breached, then you are wasting the interest. You cannot come and say, Rahul, current year interest will be 2 lakhs plus pre-construction interest. It is current year plus pre-construction interest, overall limit of 2 lakhs. Is that clear? Is that clear? Yes. Next item on the screen is called as interest on loan. Interest on loan. Income tax comes and says, if you are planning to take a loan for purchasing an asset, income tax comes and says, Rahul, if you are going to take a loan for purchasing an asset, till the date on which the asset is put to use, the interest will get capitalized. This is similar to your borrowing cost. So any kind of interest on loan which is taken on an asset which is put to use, any interest up to the date on which it is put to use will be capitalized and depreciation will be claimed. Any interest after the date on which the asset is put to use will get allowed as deduction. In which case, in case you see a question in exam which comes and says, Rahul, you have incurred interest on loan. Asset was put to use in July, but the loan was taken from April. What will you do? You will disallow any interest between April to July. And from July you will let it be as it is because it is there in the P&L. April to July, the interest will be capitalized and claimed depreciation. Correct. Yes. So I am saying, Rahul, any interest on loan taken for capital asset up to the date on which the asset is first put to use will get disallowed if it is there in the P&L. Claim depreciation on this interest on P&L if it is not disallowed earlier, and any kind of interest on loan taken for capital asset after the asset is put to use can be ignored because it is already there in P&L. Next and the most important thing from exam perspective is called as contribution to PF. Income tax comes and says, Rahul, if contribution is happening to PF, tell me who is making the contribution. Is it employer or is it employee? If you are saying, Rahul, employer is making a contribution to PF, income tax says, please ensure that the PF contribution is happening before the due date of return filing. If you have made the contribution before the due date of return filing, it will be allowed in the year in which the expense is booked. If you say, no, Rahul, I have not made the payment before the due date of return filing, income tax says, no problem, you can claim it in the year in which the actual PF amount is paid. Correct. But Rahul, if it is employee's contribution, income tax says you should have made the payment on behalf of employee within the due date of respective act. PF Act. Rahul, if you make the payment within the due date of PF Act, income tax will say, good, no problem, because it was never your expense. So ignore it off. But if you say, no, Rahul, actually I forgot to make the payment before the due date of PF Act, income tax will say, treat it as income in your books permanently. No further deductions even if you make the payment in the future. Yes or no? Yes. So if I'm giving an example where I'm coming and saying, Rahul, a person is planning to make employer contribution of 100 and employee contribution of 100. Employer of 100, employee of 100. The person has debited this in the P&L. And has not done anything for this. In what? In accounts. Yes or no? Yes. I am saying, Rahul, what has happened is these both are pertaining to March. Should have been paid by 4th April. PF Act. But they have ended up making this payment on 30th June. Income tax will come and say, Rahul, when it comes to employer, yes, you have made a delay, but you have made it within the due date of return filing, which is 31st October. Therefore, you are having no problems. Since the payment has happened before the due date of return filing. What you paid is allowed as deduction. Rahul, have I already claimed? Yes. Therefore, I will ignore. I will not make any adjustment. Correct. Coming to employee. Income tax said you should have made the payment within the due date of respective act. You should have made the payment by 4th April. You made the payment on 30th June. Income tax will say, this is a permanent income for you. Rahul, is it there in the P&L? No. What will you do? Add. You will add the number. You understand what is happening? You understand what is happening? Yes, please be careful about this. Please be careful about this. Polama. Yes, yes. This is what your PF looks like. This is what your PF looks like. Next is your concept of bad debts. Next is your concept of bad debts. Income tax is coming and saying, Rahul, if you have a bad debt, you can claim it as a deduction provided you follow rules of accounts. Provided you follow rules of accounts. Rule of accounts says offer it to tax, write it off as debt, write it off as bad debts. So I am saying rule number 1, you should have offered it to income earlier. Rule number 2, you should have written it off as a bad debt. If you satisfy both the conditions, I will say bad debt is allowed as deduction, which means if you put it in P&L, I will leave it as it is. If you put it in the P&L, I will leave it as it is. Yes, Rahul, bad debt in the current year. 5 years later, the person is coming back and giving me money. 5 years later, person is coming back and giving me money. I will treat it as bad debts recovered, will be taxable under the head PGBP. Even if the business is shut down, the income will be taxable under the head PGBP. Yes or no? Yes or no? Yes. Now, Rahul, I am coming and saying what has happened is I proposed to claim a bad debt of 4 lakhs. Assessing officer came and said, no, you can only claim 1 lakh. Assessing officer said, you can only claim 1 lakh. Later on, when I got my bad debts recovery, I got 3.5 lakhs. Rahul, how much should I offer to tax in this year? How much should I offer to tax in this year? 0.5 lakhs. 0.5 lakhs. Rahul, what happened? Understand how much you proposed to claim. 4. How much did he allow? How much did he not allow? Which means, how much did you offer to tax earlier? 3. Current year, how much you got? 3.5. How much you have already taxed? 3. How much you have not taxed? How much will you tax? 0.5. How much will you tax? 0.5. Are you clear? Yes, please be careful about this. This is one pertinent question which ICI has been asking multiple times. Yes, please be smart about this. If you are going to have any bad debts which is being disallowed by the officer, to the extent of the bad debts which were disallowed by the officer will not be offered to tax in the subsequent year when the recovery takes place. Yes. Now in this, please understand, when your accounts is being prepared, you would have credited full 3.5. When accounts is being created, you would have credited full 3.5. Income tax is saying, I don't want 3.5, I only want 0.5. You will do. You understand my question? I'm saying, Rahul, accounts says you have credited 3.5. Tax is saying you should have only taxed 0.5, which means the 3 lakhs, what will happen? I will remove it from P&L. By allowing it as deduction. You understand what I'm talking about? Yes, because it's already offered to tax earlier, I don't have to offer it once again, so I will remove it from the P&L. Are you clear? Good to go? Yes. Next, Rahul, I'm talking about something called as balance adjustments. For example, if I have something called as undervaluation of opening stock. What will happen, Rahul? I have undervalued my opening stock in accounts or books? Accounts, mistaken. Accounts, correct. Accounts. If I have to correct accounts, opening stock will be increased. If opening stock is increased, P&L will decrease, which means I should claim. Correct? No. Rahul, undervaluation of closing stock. P&L will increase. Therefore, you should add. Correct? Yes. Rahul, overvaluation of opening stock. P&L has increased. You have to correct it. If you correct it, P&L will decrease, meaning you will reduce it. And overvaluation of closing stock. P&L is high. You will reduce. Therefore, claim it. Yes or no? Yes. So I am saying all these adjustments, these are not pertaining to income tax. These are more accounts related mistakes. Have the mistakes corrected in your accounts. Now, question comes and says, there is a person who has paid salary to a staff. And has forgotten to record in the books. You will record it now. What is the big deal? You will record it now, claim it as an expense. Claim it as an expense. Correct? No. Correct? No. Yes. So those are the items which we are discussing about. Next, any kind of STT which is paid as stock held in trade. As stock held in trade. STT paid on stocks in trade is allowed as a deduction. Insurance premium paid for stock or health of employees is also allowed as deduction. All these are general business expenses. Apart from this, Rahul, if you are going to have any other expenses, certain ground rules to follow under section 37. Expenses should be incurred by owner, should be incurred in the previous year, should not be capital, should not be incurred for other than business purposes, should be incurred wholly and exclusively for business, and should not be a payment for offense. Should not be a payment for offense. Yes or no? Yes. Any illegal payments are not covered. Any illegal payments are not covered. Yes or no? Yes. I'm giving some examples. Tell me, Rahul, disallowed, adhered, or ignored. Yes. I'm saying any kind of penalty compounding fees paid under a law. Disallowed. Any kind of interest fees paid under income tax. Disallowed, Rahul, because it is income tax payments. Income tax payments are fully disallowed. CSR expenses incurred for Companies Act. Disallowed. Donations given to political parties. Disallowed. Personal expenses incurred for family and self. Disallowed. Interest paid to MSME. Interest paid to MSME is disallowed, not under Income Tax Act, but under MSME Act. But under MSME Act. Any kind of gift, freebies, bribes given for a doctor. Disallowed. Expenses relating to income which are taxable under other heads of income. I am saying, Rahul, there is a house which I have given on rent. For that house I have incurred taxes. For that house I have incurred taxes. Can I claim it under PGBP? Can I claim under PGBP? No, because income is going to be taxed under IFHP. So tax also should be taxed under IFHP. Remove it from PGBP. Put it to HP. Put it to HP. Correct? No. Correct? No. Trial items on the right side. I am saying share of profit of HUF. Share of profit of HUF is exempt from tax. Is exempt from tax. Therefore, if it is there in the P&L, remove it from P&L. If it is there in the P&L, remove it from P&L. Any kind of dividends and income from UTI, reduce from P&L because IFOS, interest taxable under other heads of income, reduce from P&L, tax under other heads of income. Any kind of penalty compounding fees paid to third party under a contract will be ignored because it is not under a law. Because it is not under a law. Any penalties paid otherwise than by a law is allowed. Is not a problem. Is not a problem. Any kind of interest fees under any other law other than income tax will be ignored. Please understand. Please understand. Penalties are disallowed under any law. Penalties are disallowed under any law. Interest under any law is allowed except for two. Income tax, MSME. Very good. Income tax and MSME. You understand what I'm saying? Yes. Understand very carefully. I think this came in MTP number 1. This came in MTP number 1. The question came and said there is a GST payment which happened. 5,300 GST payment happened for penalty and 12,000 payment happened for interest on delay in filing taxes. Rahul, you will disallow both. Disallow only 5,300 because that is penalty. Second one was interest. Interest are compensatory, penalties are discretionary. Penalties are disallowed because that is for an offense payment. Interest are not disallowed because that is not offense payment. That is a mandatory levy because there is a default. There is a mandatory levy because there is a default. Any interest are allowed except for two. Income tax, MSME. Income tax and MSME. In question, if they come and say interest paid under any other act like GST, PF Act, any act for that matter, all those are allowed unless and until it is a penalty. Unless and until it is a penalty. Is this clear? Yes. Moving on forward. After 37, we have something called as section 40. Section 40. Under 40, we have something called as 40AI and 40AIA. Income tax comes and says, Rahul, if you are under an obligation to pay someone money with the TDS, you have two conditions to follow. Condition number 1, the TDS should be deducted within the previous year and the deducted TDS should be paid within the due date of return filing. Rahul, if you satisfy the conditions, great, expenses will be allowed. But if you don't satisfy the conditions, expense will be disallowed for 100% in non-resident, 30% for resident. Rahul, disallowed expense is permanently disallowed. False. It is allowed in the year in which the TDS is paid to the government. It is allowed in the year in which the TDS is paid in the government. Yes or no? Yes or no? Or the taxes are paid by the other person to the government and he files a return for it. So either you pay the TDS to the government or you ask that person to pay the taxes and file his return. In either case, I will allow it as deduction in the year of payment of TDS. Now, what will I allow? Expense or TDS? I will allow the disallowed expense. I'll allow the disallowed expense. 100% of the expense or the 30% of the expense which I disallowed will be allowed in the future years when I pay the TDS. Clear? Yes. After 40AI, you have something called as 40A2. 40A2 comes and talks about payments made to related parties. Payment made to related party. Income tax comes and says if you are going to make a payment to a related party, please ensure that the payments are happening as per market standards. If you are going to make a payment which is found to be unreasonable or excessive, payment will get disallowed. Rahul, related party here means spouse, parents, siblings, lenient ascendants, lenient descendants, and lenient descendants. In the simple words, left side of the family. Correct? Yes. Next is called as 40A3. Next is something called as 40A3, where 40A3 comes and says any kind of payment which is going to be made in cash other than account pay check, account pay draft, electronic clearing system, other prescribed modes. Income tax says if you are going to make payments other than by these four modes, payment should happen less than 10,000 per person per day. 10,000 per person per day. If you do make payments to these parties more than 10,000 per person per day, the payment will get disallowed if it is there in the P&L. If it is a payment made for asset, income tax says ignore the asset cost, so that depreciation will be reduced. So if it is incurred for P&L, you will disallow the expense. If it is incurred for asset, you will ignore it from the asset. Are you clear? Yes. Now, Rahul, what are the exceptions to this rule? Income tax comes and says if you are making a payment to a transport operator, limit becomes 35,000. If you are making payment to a bank, allowed. Payment made to a bank, allowed. Cash payments in banks, allowed. If you are making payment to a farmer, allowed. If you are making payment to a person going to an offshore location where he does not have a banking facility, allowed. Yes or no? Yes. If you are going to make payment to an employee for retirement benefits less than 50,000, and if you are sending an employee to somewhere else for a remote location more than 15 days, or if you are planning to do any kind of book adjustments and all those things, that will also be allowed as a deduction. Please do understand, I will only give deduction to you for payment made to farmers. I will not give you deduction for payment made to traders or middlemen. I will not give you any kind of deduction if you are going to make a payment on a bank strike or a bank holiday. That is not a condition anymore. The prescribed modes have been prescribed as debit card, credit card, net banking, IMPS, UPI, Beam Aadhaar Pay, NEFT, RTGS. Please understand, cross check and bearer check are non-permissible modes. Cross check and bearer check are non-permissible modes. Is this clear? Yes. After 40A3, we have something called as 40A7, which comes and talks about provision for gratuity. Income tax comes and says if you are planning to have any provision for gratuity, then the provision will get disallowed unless and until you make the payment before the due date of return filing. If you want, you can read 40A7. If you want, you can ignore 40A7 and directly read 43B. They both are the same provisions. Then finally, I am looking at the most important thing from exam called as 43B. 43B, income tax is coming and saying, Rahul, following payments will be allowed as deduction only if you make the payment on or before the due date of return filing. Items like tax, bonus or commission, interest on loan, employer's contribution, leave encashment, railway assets use, all these payments have to happen by the due date of return filing. If the payments are happening after the due date of return filing, the payment will get disallowed and allowed in the year of payment, with an amendment in the current year pertaining to only micro and small enterprises, medium is not covered. The amendment of the current year comes and says, when you are going to make a payment to micro and small enterprise, you need to make the payment as per the agreed due dates. I have promised you I'll pay you 10 days later. I have to pay it to you 10 days later. Rahul, I did not pay it on 10th day. What will happen? Payment will get disallowed and will be allowed in the year in which payment is made, Yes or no? Yes. Rahul, what is the timelines? The MSME comes and says there is no timelines. What you and I agree is final, but the timelines should not exceed 45 days if it is written, 15 days if it is oral. Yes or no? Yes. An amendment for current year, therefore please be extremely careful. This is extremely crucial and important. What is the amendment is as follows. I am coming and saying the payment should be micro and small. Do not consider any disallowance for mediums. I am coming and saying, Rahul, what is happening is I have taken an invoice. The invoice is taken on 1st February 2024. The type of invoice is written. I promised him that I will make the payment to him on 31st March 24. Rahul, I actually made the payment to him, maybe let's say 29th March 24. I actually made the payment to him on 31st March 24. Rahul, disallowance will happen in a previous year. Which year will you disallow? Which year will allow? 23, 24 you will disallow. Rahul, disallowance in. Why? No disallowance because even though 45 days ache. No disallowance because it is paid off in the same previous year, which means even though you will disallow it, you will allow it in the same year. Which means there will be no problems. Yes or no? Rahul, I am coming and saying 1st March 24, type of agreement written. Yes, I promised him that I will give it to him on 17th April 24. I gave it to him on 16th April 24. Rahul, disallowance will arise, not arise. It will arise because Rahul, he promised him 17th. Check 45 days is crossed or not crossed? Crossed. 45 days is crossed, which means this due date is wrong. Yes or no? What is the actual due date? 14th April. Due date is 14th April. He should have paid the money by 14th April. He paid the money by 16th April. Rahul, on 14th it got disallowed. 16th it will get allowed. 16th is in next year, which means you will disallow in 23, 24. You will allow in 24, 20. Hey, you understand what is happening? Are you clear? No doubts. No doubts. Rahul, same example. 1st March 24. 1st March 24. The promised due date is 14th April 24. I made the payment to him on 12th April 24. Rahul, disallowance will happen in because it is paid before the due date. It is paid before the due date. Therefore, the expense will be allowed in the year of accrual. The expense will be allowed in the year of accrual. Hey, are you clear? Any confusions? All clear? No doubts? No doubts? Yes. Rahul, last example. I am coming and saying I entered into a transaction on 31st March 24. I entered into a transaction on 31st March 24. Unfortunately, I did not promise him anything. I did not promise him anything, which means due date is not there. I did not promise him anything. I did not promise him anything. Correcta? Correcta? I made the payment to him on 17th April 24. Rahul, disallow, no disallow. Disallow, no disallow. Disallow because you have a 15 days gap, which means you should have paid the money by 15th April 24. You made the payment on 17th April 24. Payment becomes disallowed. Disallowed. You've paid it after due date. You have paid it after due date. Therefore, it gets disallowed. Therefore, it gets disallowed. Correct. Correct. Rahul, I entered into an agreement on 1st March 24. Oral agreement. Promised him nothing. Promised him nothing. Paid him the money on 29th March 24. Income tax says do nothing because paid off in the same year. You will disallow in the same year and allow in the same year. What is the difference? Understood? Clear? Someone wants to take a photo. Can we go? Yes. Please be extremely careful about this fact. Examples which I have given to you is only relating to micro and small, not for medium. Because if it is medium, I will not even look into this. I will come and say allowed. I will come and say allowed, no restrictions. Allowed and no restrictions. Clear? 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 Yes. Now I am coming and saying, imagine an example where what is happening. I am coming and saying, imagine an example where what is happening is there is a person who has taken a loan. There is a person who has taken a loan and is supposed to pay interest. 5 years he did not pay interest. 5 years he did not pay interest. All these years interest got disallowed. 6th year bank came and said, sir, please pay something. Please pay something. He said, you do one thing. You convert my interest into loan. I will repay the loan, not the interest. I will repay the loan, not the interest. So he converted the loan into, he converted the interest into loan. He converted the interest into loan. Into 30 loan installments. 30 loan installments and paid 10 installments. Paid 10 installments. He went to income tax department and come and said, sir, since there is no interest anymore, I want to claim fully as deduction. Income tax officer will say, allowed, not allowed. Allowed, not allowed. Allowed, not allowed. Because you repaid only 10 installments. I can only give you a deduction of 1/3. I cannot give you full deduction. Yes or no? Yes. So income tax is coming and saying, Rahul, if you end up in a scenario where you are converting interest into loan, I will not allow the interest fully. I will allow the interest when you repay the installments. Clear? Yes. This is your section number 43B. I think nothing else is there. Yeah, and the last items which is there is your share of profits for firm. Yes, we are looking at partnership firm. In case a question comes in exam relating to firms, income tax comes and says 3 kind of remunerations can be paid to a partner. One is share of profit, one is remuneration, one is interest. Income tax says share of profit for a partner exempt from tax. Share of profit for a partner is exempt from tax. Interest on loan to a partner is allowed maximum 12% per annum. Interest on capital allowed to a partner maximum 12% on capital. Yes or no? Provided it is authorized in the deed. Provided it is authorized in the deed. Provided it is authorized in the deed. Correct, not correct? Yes. Now, apart from this, if I am planning to give the partner salary, income tax comes and says, Rahul's salary will be allowed as reduction in the hands of firm and will be taxable in the hands of partner. Will be allowed as reduction in the hands of firm and will be taxable in the hands of partner only to the extent I permit. Only to the extent I permit. Which means if income tax comes and says you can pay 1 lakh salary. If income tax says you can pay 1 lakh salary, partner is asking I want 5 lakhs. Partner is saying I want 5 lakhs. Income tax will say allow only 1 lakh. Rahul, in the hands of partner got 5 lakhs in hand. Partner got 5 lakhs in hand. He will be taxable only for 1 lakh because 1 lakh is what firm has allowed. 1 lakh is what I will tax. 4 lakhs firm paid the tax. So I will not pay the tax. I will not pay the tax. Clear? Yes. How will you do this, Rahul? For whatever methods we did till now. We will arrive at something called as book profit. Basically, in simple words, find out your whole PGBP until salary. Find out your whole PGBP until salary. Disallow the salary and find out my PGBP number. On that PGBP number, first 3 lakh rupees, you will allow salary of 90% of book profits or 1,50,000, whichever is higher. For the any book profit above 3 lakhs, you will allow 60% of book profits. Get a number. Yes, get a number. This number is what I told us, 1 lakh. This number is what I told us, 1 lakh. This number you will compare with the actual salary, whichever is lower. That is what I am going to allow. And that is what will be taxed in the hands of partners. The 1 lakh, if you allow, you will now arrive at your PGBP as per normal provisions. PGBP as per normal provisions. Are you clear? Yes, Rahul. After this, I have some special things which come up, which is called as presumptive taxation. I have some new things which is coming up, which is called as presumptive taxation. Very critical for current exam because amendments are there. Income tax is coming and saying, Rahul, when it comes to business or profession or transport operator, if you are found to be a person who is not liable for audits, I will tell you how to find out your incomes. Rahul, how will that work? Income tax comes and says, tell me what are you doing? Are you doing business, profession, transport operations? If you are doing business, income tax comes and says your turnover should be less than 2 crores. If you are into profession, your gross receipts should be less than 50 lakhs. And if you are into transport operator, you should have less than or equal to 10 vehicles at any point of time. Yes or no? In this comes the amendment. The amendment comes and says, Rahul, if you tell me that 95% of the turnover was permissible modes, if 95% of the turnover was permissible modes, then you will check for the limit of 3 crores. If you say 95% of the turnover was by permissible modes, gross receipts will become 75 lakhs. Basically, add 50% extra. 50 has become 75, 2 has become 3. Right side. 10 to 15 podum. Nothing will happen on the right side. I am saying Rahul, 2 becomes 3, 50 becomes 75. Yes, this scenarios income tax comes and says, find out how the presumptive works. Income tax said, if you are doing a profession, if you're doing a profession with such limits, I will tell that your PGBP income will be assumed to be 50% of gross receipts. Your PGBP will be assumed to be 50% of gross receipts. In business, income tax will say your PGBP will be assumed to be 8% of turnover. 8% of turnover. But if you tell me that the turnover is received by permissible modes, then it is 6% of turnovers. Which means if you have received 1 crore worth of turnover, 20 lakhs is by permissible, 80 is by non-permissible. Income tax will say 20 will be at the rate of 6, 80 will be at the rate of 8%. Clear? But Rahul, assuming I have done some sales, I have not received the money yet. Income tax says I am giving you time until due date of return filing. Get it by due date of return filing. In permissible modes, I will make it 6, if not 8. So it is turnover is received by the person within ROI, return of income due date, within ROI, return of income due date. Yes or no? This is what the conditions are. Rahul, this is what your presumptive income will become. This is what your PGBP will become. Meaning what you did till now versus this number, whichever is beneficial, meaning in the simple words, whichever is lower. Now understand, Rahul, because I am using the word PGBP, it means no further changes will be made. You will not do any disallowance, any addition, any depreciation, any additions, any reductions. No, nothing will be done. It will be assumed that this is what your PGBP is. Clear? Yes. Rahul, so take this number versus the normal regime, whichever is lower becomes your final PGBP. But Rahul, if you are asking that you want to do presumptive, great. Income tax says no maintaining books, no getting audit. But if you come and say no, I want to declare as per normal. Income tax says get books, do audit. Rahul, if you go for presumptive, the due date for return filing becomes 31st July. But if you go for normal, due date becomes 31st October, because you have to go for audits. Is that clear? Yes. Now there are additional things like maintaining books and getting them audited. Maintaining books comes and says that if you are into profession or business, a professional will have to maintain books of accounts provided his gross receipts goes more than 1,50,000 in all the last 3 years, in which case I will tell you how to maintain books. IS, income tax. Books to be maintained are like cash book, journals, ledgers, bills, and daily case register, inventory, logbook, and only in case of medical professions. All books are to be maintained same as Companies Act, meaning 6 years from the end of the assessment year or 7 years from the end of the previous year. In your new syllabus, penalties have been notified. The income tax provision comes and says penalty will be 25,000 for non-maintaining books. 25,000 for not maintaining books. This was not there in old syllabus. This is now newly introduced in new syllabus. New syllabus people, please be careful. You have penalties coming in now. Not maintaining books of accounts will be liable for a penalty of 25,000. Rahul, if you're getting your books done, you also have to get an audit done. Provisions of income tax comes and says you will be liable for audit in case of profession if the turnover goes more than 50 lakhs. You are liable for audit in case of business if your turnover goes more than 1 crore. But if you come and tell me that, Rahul, 95% of the receipts are by permissible mode and 95% of the payments are by permissible modes, I will tell the turnover limit as 10 crores. If you are getting an audit done, the tax audit report which you have to file has to be submitted by 30 September, 1 month prior to your due date of return filing. 30th September is when you will have to submit the tax audit report. Failure to furnishing your tax audit report on time will levy a penalty of 0.5% of turnover or 1,50,000, whichever is lower. Yes or no? Yes. This is what your PGBP looks like. This is what your PGBP looks like. Yes, yes, yes. Now, Rahul, in this, if you are going for default regime, what are the changes to be made? Very small changes. One change is that you will not be eligible for additional depreciation. You will not be eligible for additional depreciation. So, no additional depreciations are coming to you. Second, if you are going for scientific research, anything you do in-house is allowed. Anything you're doing is in-house is allowed. But if you start making donations, to outside people for scientific research, that is not allowed. That is not allowed. Finally, if you are going to have any kind of specified business, income tax says no more like a business. No more like a business. That business is also treated as normal business, meaning you'll do normal depreciation. You'll do normal depreciation. Don't come and give full deductions, only give depreciations. These are the small changes to make in this chapter. Otherwise, your PGBP remains as it is. PGBP remains as it is. Is that clear? Same now. Clear? Yes. Yes, this is what your provisions of PGBP looks like. Any challenges? No. The one thing before I go to the next chapter which I wanted to give you a warning is, please understand, in income tax, there is no restriction to the fact that PGBP should happen only by accrual system of accounting. PGBP can happen by cash system of accounting also. Please notice the question very carefully. If the question comes and says that the person is following cash system of accounting, do not come and show off saying let's do accruals. No. If the person is following cash system, you will follow cash system of accounting. A simple example I'll give you. If the question comes and says the person is following cash system of accounting and has current year debited to P&L motor car expenses, worth 1 lakh rupees. The breakup is as follows: 20,000 pertains to previous year, 40,000 pertains to previous year, and 60,000 pertains to next previous year. You understand what I'm saying? Yes, I have debited to P&L 1 lakh rupee, breakup of which is 40,000 rupees pertains to 40,000, 20,000, 20, 40, 60. Okay, 20 pertains to previous year, 40 pertains to current year, and 60 pertains to next year. 20 for last year, 40 for current year, and 40 for next year. Rahul, how much will I allow as deduction? 40. I will allow full as deduction because it's cash system of accounting. Mercantile has no logic here. When you have put the cash basis of accounting, it means when you incur is when you pay. You don't care whether it is last year's, current year's, or future years. It is okay. You will allow everything in the current year only. Yes or no? Yes. Now, Rahul, why am I telling this is because understand these provisions which you learned. Due date of return filing, where you came and said current year or expense, you can claim in the current year if the due date is paid, if the payment is made in the next year by the due date of return filing. If I give you a question where I come and say, Rahul, interest on loan pertaining to current year has been paid on 5th April of next year. Person is following cash system of accounting. What will you do? Should I repeat the question? I am saying, Rahul, previous year 23-24, interest on loan has been paid on 5th April of next year, assessment year. Within the due date of return filing. Rahul, what will I do in P&L? I will. Can't get a disallow. Why?
Next year,
சரி, இந்த வருஷத்துக்கு என்ன பண்ணுவீங்க? Ignore the data because person is following cash system. அவன் P&L போட்டிருக்கான், எப்போ போட போறான்? Next year. அப்போ என்னத்துக்கு இந்த வருஷம் பார்க்க போறோம்? You understand what I'm saying? Even if the payment is happening within the due date of return filing, you will still not do anything in the current year because he is following cash system of accounting. அவனுக்கு பொறுத்த வரைக்கும் expense அடுத்த வருஷம் தான் வர போகுது. Yes or no? Rahul, I change the example and I come and say, Rahul, current year oda interest on loan next year December la pay பண்ணிருக்காரு. He has paid it on 31st December of assessment year after the due date of return filing. Current year, what will you do? You obviously Current year, what will you do? Nothing, because again his expense is going to come in the next year only. So I don't care. Yes or no? In simple words, Rahul, all these accrual concepts which you learned, 43B, employer's contribution to PF, all those things have no relevance when you do cash basis of accounting. All those things have no relevance when you do cash system of accounting. And the expenses you can only give something when it is done on payment. Done on payment. Clear? No confusions. Rahul, question. I am saying, Rahul, there is a person to whom I made a credit sales. There is a person to whom I made a credit sales, 5 lakh rupees. 5 lakh rupees. Person said, I will not pay. Person said, I will not pay. Yes, 5 years over. 5 years over. Current year, I received 3 lakh rupees. Current year, I received 3 lakh rupees. This 3 lakh rupees is mine. This 3 lakh rupees is mine. Is mine. Sales day cash basis la inge credit sales account agum. When you are doing cash system of accounting, will you ever account for credit sales? No. Which means, did you pass an entry when you did credit sales? No. Did you pass an entry when you did not get money? When did you pass an entry? When you got the money. What is the entry you will pass? Cash account debit to sales account. Is there any bad debts recovered? Is there any bad debts recovered? Will you pass an entry then? Do you have to worry about it? No, you don't have to worry about it. You understand what I'm saying? You understand what I'm saying? Please be very careful about what is happening. Please be very careful about what is happening. Small things can make an impact. Small things can make an impact. I can also give you one more example. Take an example where I'm coming and saying, Rahul, the person has purchased an asset. The person has purchased an asset. Yes, asset is worth 10 crores. Asset is worth 10 crores, but he is going to make payments in installments. He is going to make payment in installments. Person is following cash system of accounting. 10 crores worth of payment. He is going to make payments in installment. This year he's made a payment of 1 crore. He's made a payment of 1 crore. 9 crores pending to pay. 9 crores pending to pay. I have to give depreciation to him. Correct? No. Depreciation will be given on. Depreciation will be given on. Will be given on 1 crore. Hey, cash system of accounting la asset recognize panna poram. How much will he recognize in his books? 1 crore. What do you mean by cash system of accounting? Cash system of accounting means kaila kaasu vanda revenue, kaila kaasu pocha expense. Evlo pochu? Appo evlo da expense? Evlo asset poda poraru? 1 crore. Is he going to account something called loan account pending? Is he going to account something called outstanding loan? Is he going to account something called outstanding dues? No. That is what the whole concept of cash is. When accounts itself does not have any entry, why will tax bother? Yes or no? Yes, you understand what is happening? Yes, please be careful. Multiple times cash system of questions have come in exam. And people have failed miserably on those kind of questions because they don't simply understand what do you mean by cash. Yes. Look at the word cash very carefully. If it is a cash system of accounting, it is a cash system of accounting. Our income tax has nothing to do unless accounts recognizes it. When accounts itself is not bothered, income tax is least bothered. Yes or no? You understand what is happening? Yes, please be very careful about it. If you do get time, I think the ICA study material itself has a question on cash system of accounting. Compulsory question. Yes, you have something called computation of tax liability, last chapter. Yes, in that you have a question relating to cash. For the students who have learned from me, you have a comprehensive questions. There you have one question relating to cash. Please do read that question once again and play carefully. Clear? Everyone? Yes. Can we go forward? Yes. Great. We are moving on to the next chapter called as capital gains. Now, yes, I have received a lot of complaints relating to capital gains. That Rahul chapter hai. Puri. Yes. I will try my best to make sense of the chapter, but nevertheless, for some reason, this is one of the easiest chapters, but yeah, maybe more for me, more for you. More for me, more for you. Yeah. Yes. Let's make it simple, people. Let's make it simple. If I have to teach you capital gains, my question is very simple. Imagine that you are a person who's selling a land. And I'm coming to and asking a simple question. Tell me what is the profit from the land. How will you tell me what is the profit? First, you'll tell me what is mine. You'll tell me what is your sale price. From that you will reduce what cost? What cost will you reduce? Hey, I am asking you a simple question. Tell me what your profit is. You will first reduce your selling expenses. You may incur some registration charges and all those things. Yes, then you will reduce any kind of other selling expenses. Next. Hey, simple question, ma. You are planning to sell a land. You are planning to sell a land. You are planning to sell a land. I am asking you how much profit did you make from selling this land? How will you tell me? Rahul, I sold for 5 crores. I sold for 5 crores. 10 lakhs government is asking a stamp duty, which means in my hand I got 4 crore 90 lakhs. I am asking profit. Tell me what will you reduce? உனக்கு index na தெரியுமா? நான் உனக்கு என்ன கேட்டேன்? Profit தானே கேட்டேன். You will reduce the price which you paid for the land. I want profit. So you will reduce cost of acquisition. You will reduce cost of acquisition. Correct? Not correct? Yes. So you are coming and telling me, Rahul, I incurred 2 crores for buying the land. I had 4 crore 90 from sale. 2 crores I bought the land. My profit is 2 crore 90 lakhs. Correct? No. Correct? No. But I came and told you, hey, wait, but what happened is 2 years back, you actually did some changes in the land. No. You did some changes in the land. You did some cleaning, storing and all those things. All those cleaning and all you did. For that also you incurred expense. That is also a cost for you. Will your profit not include that? Should include, which means you have also reduced your cost. Number is cost of improvement. Arrive at something called as capital gains. Idudamba capital gains. Yes, your sale price is called as full value of consideration. Your selling expenses is called as transfer expenses. Your cost of acquisition is cost of acquisition. Before that, what number you get is called as net consideration. You remove your cost of acquisition, you remove your cost of improvement, you arrive at your capital gains. You arrive at your capital gains. Yes or no? Yes. Keeping this in mind, we will prepare the format. Keeping this in mind, we'll prepare the format. Work with me. If you don't understand, let me know. Yes, I'm saying you, Rahul, we are doing capital gains, and the provisions of capital gains come and say that if you want to do capital gains, the provision is very simple. You should be transferring a capital asset. You should be transferring a capital asset, in which case you will get a capital gains in the year in which the transfer takes place. In the year in which the transfer takes place. Now, income taxes come and told capital asset means any asset. Means any asset except for stock in trade, except for personal movable assets, except for personal movable assets. But in personal movable assets also there is an exception, which is BA pass DJ, bullions, archaeological collections, paintings, any work of art, shares and securities, sculptures, drawings, jewelry, all these items are taxable even if it is personal and movable. Even if it is personal and mobile. Third item, rural agricultural land, because agriculture income taxation, because agriculture income taxation. And point number 4, any kind of notified bonds. Any kind of notified bonds. What you don't understand is exempt. What you don't understand is exempt. Notified bonds. Clear? Yes. These are your capital assets which are not covered. Every other item is covered. Every other item is covered. Meaning, Rahul, I am selling my personal house. Taxable, not taxable? Taxable, not taxable? Hey, quick, taxable, not taxable? Taxable. Rahul, I am selling my business fridge. Business fridge irukda. Taxable, not taxable? Taxable. Taxable, not taxable? Taxable. Rahul, I am selling my personal iPhone. Not personal iPhone. Not taxable because no BA pass DJ. No BA pass DJ. I am selling my personal car. I am selling my personal car. Quickly. Not taxable. Not taxable. I have a truck. Personal car use panna truck. Taxable, not taxable? Hey, truck will be used for business. Therefore, taxable. Therefore, taxable. I don't know which person is having a personal truck in house. What are you transporting inside it? I don't. Yes, yes, yes. Rahul, I bought a personal gold ring. Taxable, not taxable? Taxable. Falls in BA pass DJ, jewelry. Therefore, taxable. You understand what I'm saying? Yes or no? Yes or no? Yes, this is what the provisions of capital asset is. This is what the provisions of capital asset is. Can we go forward? Yes. Now, income tax is coming and telling Rahul, if you want to do capital gains, you need to first tell me what kind of asset are you holding. Are you holding a long-term capital asset? Are you holding a long-term capital asset or a short-term capital asset? How do you decide, Rahul, whether something is long-term or short-term? Tell me what kind of asset it is. Tell me what kind of asset it is. It is a listed security. Rahul, period of holding more than 12 months, less than or equal to 12 months. I am holding 0 coupon bonds more than 12 months, less than 12 months. Yes, I am holding immovable property more than 24 months. Yes, I am holding equity oriented funds 12 months. Equity oriented funds, mutual funds. I am holding UTI units 12 months. I am holding unlisted securities 24 months. I am holding debt oriented funds. Debt oriented funds is fully short term from current year as an amendment. Fully short term as a current year amendment. Market linked debentures are fully short term. Market linked debentures are fully short term as per current year's amendment. As per current year's. Yes, I know. Yes, market linked debentures are nothing but debt oriented funds. Both are always short term. Always short term. Yes or no? Yes or no? Yes or no? Rahul, I am selling my slump sale. I am doing a slump sale. Sale of my business. Sale of my business. Period of holding. Period of holding. Period of holding. Period of holding. 36 months. Period of holding 36 months. Yes, yes, yes. Rahul, I am planning to sell jewelry. Same, others. Yes, the last one is a garbage. Put everything there. Put everything there. Everything is 36 months. Everything is 36 months. If you classify them as long term, you will end up in something called as long term capital gains unless specifically excluded. Unless specifically excluded. But if you tell something as short term, then it is always short term capital gains. It is always short term capital gains. Correct, not correct? Correct, not correct? Yes. Now I am coming and saying, Rahul, you have an asset which you have classified into long term or short term. You have classified them into long term or short term. Income tax comes and says there are some items which are transfers, but I am saying it is exempt. There are some items which are transfers and taxable, but I am saying it is exempt. Examples are as follows. I am coming and saying, Rahul, there is a preference share which I have. There is a preference share which I have converted into equity. Nothing. I just gave the company back preference shares and the company gave me equity shares. Conversion of preference into equity. Rahul, taxable, non-taxable? Not taxable because asset gone, asset came. Asset gone, asset came. I had a debenture converted into equity. Rahul, not taxable because asset gone, asset came. Yes, Rahul, my father prepared a will, told when I die, all assets of mine will come to you. All assets of mine will come to you. Unfortunately, he passed away. All his assets came to me. Rahul, transfer took place, not took place. Took place, not took place. Took place. Rahul, taxable, not taxable? Not taxable because same assets, different owners. Correct. Rahul, I am sitting here, went to my brother and came and said, dear brother, I have a land in my name. I want to give this land to you as gift. I give this land to you as gift. Rahul, transfer took place, not took place? Took place. Taxable, not taxable? Not taxable because same asset, different owners. Correct, not correct? Correct, not correct? Yes. Rahul, I have an antique jewelry. I went to museum and I came and said, sir, this is antique jewelry, very prestigious, will increase India's worth. I don't want to keep it with myself. I think it is better if it is safer in your hands. So I donated to my museum. Museum is telling, I am very happy that you have given me this donation. As a token of appreciation, here is 1 crore rupees. Rahul, transfer took place, did not take place? Took place. Taxable, not taxable? Because taxable or not taxable? not taxable because you are promoting Indian culture. You're promoting Indian culture. Any kind of jewelry, scriptures, antiques, all those things, paintings, drawings and all given to museum, government, all those archaeological areas which are going to display it and research about it is all exempt from tax. Is all exempt from tax. Correct, not correct? Correct, not correct? Yes, these are your examples of exemptions. These are your examples of exemptions for which income tax is coming and telling, boss, if you are going to tell me that it is exempt from tax, if you are going to tell me that it is exempt from tax, the rule is as follows. The rule is as follows. The cost of acquisition in the new owner's hand will become cost to previous owner. The cost of acquisition in the new owner's hand will become cost of the previous owner. Owner father brought for 1 crore, gave it to me as an inheritance. Gave it to me as an inheritance. I have now sold it for 5 crores. I have now sold it for 5 crores. Rahul, my sale value is 5 crores. My cost is father's cost. My cost is father's cost. Number becomes 1 crore. Therefore, my profit in the family is 4 crores. My profit in the family is 4 crores. Correct, not correct? Correct, not correct? So income tax is coming and saying when a transaction is exempt under capital gains, when a transaction is exempt under capital gains, the cost of acquisition for the new owner will become cost to the previous owner. The period of holding of new owner will become period of holding of previous owner. Previous owner. Yes, yes. Rahul, if I am converting my debenture into shares, my cost of acquisition for the shares will become cost of debentures. My period of holding of equity share will become period of holding from debentures. Correct, not correct? Correct, not correct? Rahul, two companies decide that they want to amalgamate. They want to amalgamate, enter into a merger. Enter into a merger. Vodafone, Idea, come together, become V. Come together, become V. Rahul, Vodafone will sell assets to V. Idea will sell assets to V. Transfer took place, did not take place? Took place. Rahul, capital gains liable, not liable? Liable, not liable? Not liable because same assets, different owners. Same assets, different owners. Correct, not correct? Part of a family. Part of a family. Correct, not correct? Yes. Rahul, ITC has two divisions, hotels, FMCG. Hotels and FMCG decide that they don't want to keep FMCG anymore. They don't want to keep FMCG anymore, but they want to be in the family. They want to be in the family, enter into a demerger. Enter into a demerger, split off the FMCG and make it into a new company. And make it into a new company. So now there are two companies, ITC Hotels, ITC FMCG. Owners of both the companies, same parent, same parent. Rahul, transfer took place, did not take place? Took place. Rahul, taxable, not taxable? Not taxable because same parent, different legal entity. Same parent, different legal entity. You understand what I'm saying? Yes, yes. Rahul, for all these cases, cost of acquisition for new owner will be cost to previous owner. Period of holding of new owner is period of holding of previous owner. You understand what I'm talking about? Yes or no? Yes. Now this is what the whole product is. This is what the whole product is. Any confusions? No. Now Rahul, I'm looking at the scenarios where you told me the format. You said it is sale price minus selling expenses, net consideration, cost of acquisition, cost of improvement and capital gains. Cost of improvement, capital gains. Now, I am asking a simple question. Imagine a scenario where what happened is you bought a land 50 years back for 1 lakh rupee. For 1 lakh rupee. Today you will sell it for 1 lakh rupee. Correct? Huh? No, you will sell it for kodi. Big numbers you will sell. You will sell it for big numbers. Why, Rahul? There is an inflation element. So if you come and tell me, Rahul, I am selling for 1 crore when I purchase for 1 lakh, will you come and tell someone 99 lakhs is my profit? No, you will come and tell, no, 99 lakhs is not my profit because technically 1 crore is an inflated number. If I had to sell it at my original market price, maybe I would have got only 5 lakhs ka profit. How did you decide? Because you have an inflation, which is where income tax comes and says, Rahul, if you are going to talk about inflation will only come into picture when it is a long-term asset, short-term asset? Long-term asset. Income tax says in that case, the assets will now not be called as cost of acquisition, it will be called as index. It will be called as indexed cost of acquisition. it will be called as indexed cost of acquisition, and it will not be called as cost of improvement, it will be called as indexed cost of improvement. Income tax came and said, Rahul, how to do indexed cost of acquisition and improvement? It is cost of acquisition into CII in the year of transfer, the year in which you are selling, divided by CII in the year of acquisition or improvement, depending on your case, yes or no. So I'm coming and saying, Rahul, 1 lakh I bought 50 years back, tell me what was the inflation rate that day, tell me what is the inflation rate today. I will do today divided by that day multiplied by my 1 lakh in order to get my inflated figure, and then I'll pay the tax on the balance. Correct, not correct? Yes or no? Yes. Now Rahul, CII for current year has been notified as 348. Very good. CII for current year has been notified as 348. CII for 1-2 has been notified as 100. So two things which I asked you to remember. One is of 23-24, which is 348, and for 2001 and 2, which is 100. Rahul, apart from that, ICI will tell you. If it's any other years, ICI will inform it to you. Correct. Yes, this is what your inflation rates are. Any confusion still now? No. Now Rahul, I'll give you some special scenarios. Tell me what is happening. I am telling you, Rahul, the company has issued me bonus shares. Price of the share is 0. So cost of acquisition is 0. Yes. I have proposed to issue right to shares. Meaning company will give shares to its own owners. Company is proposing that I will give the share to the shareholder. At 10 rupees. Rahul, cost of acquisition for the owner is 10 rupees. If he buys, Rahul, owner is coming and saying, I don't want the share. I want to renounce it to someone. He will renounce for free. He will take a charge. So he went to another person and came and said, you give me 1 rupee for renunciation. Now, understand, I had the right in the share, gave it to you for 1 rupee. Sale value is 1 rupee. Cost is 0 because I did not incur anything. My profit is full 1 rupee. Yes or no? From your side, you now have to pay me 1 rupee. You have to pay company 10 rupee. Your cost is, yes or no? So in your case, rights will be cost of purchase plus renunciation price. You understand what I'm talking about? Yes, this is what your whole example scenarios are. Following up, I'm saying, Rahul, you have an immovable property. You plan to sell it to someone. But you told him, boss, if you want to buy the property from me, give me advance. I told, okay, I will give you advance. I paid you advance. You told me, yes, I will give the property to you when you pay the balance number. 1 year I kept following up with you. 1 year you did not pay me the balance. I came and said, boss, now I cannot give you the property anymore. I came and said, okay, if you're not giving me the property, give me back my advance. I said, get lost. I have forfeited your advance because you made the delay. Income tax comes and says, Rahul, if the forfeiture is happening before 2014, you will reduce from the cost of acquisition after indexation, before indexation. Before indexation, you will reduce it from the cost of acquisition before indexation. Rahul, if you are going to forfeit this after 2014, directly tax it under IFOS in the year in which forfeiture takes place. Yes or no? Clear enough? No confusions? Yes. Now, Rahul, I am coming and saying, you are planning to have a building. Work in the building. Unfortunately, what happened is, when you were working in the building, there was a fire and the building got burnt. Building got burnt. Luckily, before the building got burnt, you took a insurance. You took an insurance. So you went to the insurance company and you came and said, boss, I took a building is burnt. You pay me compensation. You pay me compensation. Insurance will come and say, if I pay you compensation, I will take over the building. So technically what you have done, you have sold the building to insurance company. You sold the building to insurance company. Correct, not correct? Yes, Rahul, sale value is money which you received from insurance company. Cost of acquisition is price at which you bought the building. Price at which you bought the building. Period of holding will be date on which you bought the building till the date on which you damage the place, till the date on which you damage the place. Correct, not correct? Correct, not correct? Yes. Question. Rahul, my insurance company, today I make a claim, tomorrow will give me the money. No, insurance will take time. Rahul, when I don't have money, can I pay tax? When I don't have money, can I pay tax? Income tax said, Rahul, you can tax this number in the year in which compensation is received. Compensation is received. Correct, not correct? Yes. So I'm giving an example where I'm coming and saying, Rahul, my building I bought in 2010. My building I bought in 2010. 2020 building got fire. 2020 building got fire. 2020 I made a claim. 2024 company gave me the insurance. 2024 company gave me the insurance. Rahul, my period of holding starts from 2010 to 2020. 2010 to 2020. Correct, not correct? Correct, not correct? Yes. Rahul, my period of holding will be from 2010 to 2020. My tax payable will be in the year 2024. Rahul, my indexation will be from the year 2010 to 2020 will be till 2020. Please understand, sale happened in 2020. Indexation stops on 2020. Deferment of tax is happening to 24. Deferment of tax is happening to 24. You cannot come and say, I will take indexation till 24 because your tax was computed in 2020. It just was paid in 24. It was just paid in 24. Clear, not clear? Yes. So I'm saying, Rahul, insurance compensation provision is full value of consideration will be the consideration received. The cost of acquisition will be the price which you paid. Period of holding will start from the date of purchase till the date on which the asset is destroyed. But the tax will be paid on this money in the year in which the compensation is received. Indexation will stop on the date on which the asset is destroyed. Will stop on the date on which the asset is destroyed. Are you clear? Any confusions? No. Second, I am coming and saying, Rahul, what is happening is I am having an asset. I am having an asset. I am planning to convert this into stock in trade and sell it as business income. Income tax is coming and telling, Rahul, if you are going to convert your capital asset into stock in trade, that is also a transfer. That is also a transfer, which means the date on which you convert will become taxable. The date on which you convert it will become taxable. Question: what did I purchase? What did I purchase? Capital asset. What did I sell? Stock in trade. Similar to your agriculture business. What will I do? I'll create two separate units. One unit is called as capital asset. One unit is called as stock in trade. Rahul, what did I sell? Stock in trade. So I have my full value of consideration for stock in trade. What did I buy? Capital asset. So I have my cost of acquisition for capital asset. What I don't have my sale value of capital asset. What I don't have my purchase value of stock. Rahul, my sale value of stock is my purchase value of capital asset is my purchase value of stock. In simple words, Rahul, what will I do? I will sell my capital asset in the market and I will buy from market stock and trade. What price, Rahul? Fair market value. Yes or no? We did the same thing in agriculture income. So income tax is coming and saying, do one thing, Rahul, on the date on which the conversion took place, tell me what the fair market value is. That is the price at which you will sell as capital asset, and that is the day on which you will purchase it back as stock in trade. So your cost of acquisition will become again fair market value. You will arrive at what is your capital gains. You will arrive at what is your PGBP income. You will arrive at what is called as your PGBP income. Correct, not correct? Question: Rahul, period of holding will be from the date of purchase till the date of conversion. But do I have money in my hand? When will I get money? When I sell my stock, when will I be able to pay my tax? When the stock is sold. So when will I like to tax? When the stock is sold. Income tax came and said, Rahul, the tax will be computed in the year of conversion, but the tax will be paid in the year of sale of stock in trade. Rahul, indexation will be from date of purchase till date of conversion. Very good. Will be from the rate of purchase till the rate of conversion. You understand what is happening? You understand what is happening? Yes. In this case, what I'm coming and saying is, Rahul, when you're going to sell your asset as a stock in trade, before that you'll have to convert. Before that, when you convert, the FMV on the rate of conversion will become your full value of consideration. And the same FMV will become the cost of stock in trade. Cost of stock in trade. Are you clear? Are you clear? Rahul, what if I'm doing ulta? What if I'm doing ulta? I'm first having stock in trade, then buying capital asset. Then buying capital asset. Income tax says first you bought stock in trade. You will first sell stock in trade. You will get PGBP. You will get PGBP. Then you will buy capital asset and sell capital asset to arrive at capital gains. To arrive at capital gains. Rahul, at what price will you sell stock in trade? FMV. At what price will you buy capital asset? FMV. Find out your stock in trade, find out your capital gains. Rahul, stock in trade got converted. Stock in trade got converted. Taxable, not taxable? Taxable. Rahul, on taxability, do I have money? Do I have money? No, I don't have money. Can I pay tax on PGBP? Can I pay tax on PGBP? Yes. Yes. Income tax says deferment of tax is only there for capital gains, not there for PGBP. Meaning, even though PGBP you don't have money to pay on conversion, you will still have to pay tax in the respective year. You will have to still pay the tax in the respective year, because now capital gains is what you're going to sell. Capital gains is what you're going to sell. So I will tax the stock in trade in the year of conversion, and I will tax capital gains in the year of sale. In the year of sale. You understand what I'm saying? Yes. So Rahul, if I'm converting capital asset into stock in trade, both will become taxable in the year of stock in trade sale. But if I'm converting stock in trade into capital asset, stock in trade will be taxable in conversion, capital gains will be taxable in sale year. You understand? You understand? No confusion. No confusion. Next is called as compulsory acquisition. Next is called as compulsory acquisition, where I am coming and telling Rahul, government is forcefully buying my house, forcefully buying my property, house, whatever you call it, forcefully buying my property. Rahul, if government is forcefully buying a property, government will buy it for free of charge. Government will give you compensation. Government will give you compensation. What happened is 2010 I bought the house. 2020 government came to me and said, give me your house. Give me your house. Here is 1 crore rupees. Here is 1 crore rupees. 1 crore is my full value of consideration. Full value of consideration. Rahul, my sale value is 1 crore. My purchase price will be 2010 purchase. Period of holding will start from date of purchase, date of compulsory acquisition. Date of compulsory acquisition. Yes or no? Yes or no? Question. Rahul, will government give you the 1 crore right away? No, government will take time. Rahul, will government give it in 2020? Government will come and say, I'll give it in installments. I'll give it in installments. Income tax says, if government is planning to give it in installments, tax it in the year in which you receive the first installment. You receive the first installment. Understand, you will not tax it in installments. You'll tax it in the year in which the first installment is received. Meaning, if government comes to you and comes and says 1 crore is your compensation, I will pay it in 2021. I'll pay it in 2021. Capital gains will be taxable in the year in which first installment is received, which is 21. Rahul, indexation will stop on 2020 itself. Indexation will stop on 2020. Tax will be paid in 2021. Correct. Correct. Yes. Rahul, I am not happy with 1 crore. I am expecting additional compensation. I will go to court. I went to court and I said, dear court, I want more money. I want more money. I want 5 crores. I want 5 crores. But at this point of time, at least give me 2 more crores. At least give me 2 more crores, because I want to build a new house. I want to build a new house. This 2 more crores is called as interim compensation. It's called as interim compensation. Yes or no? I'm going to court and coming and saying, give me 2 crores right now, so that I can build a new house. Build a new house. Correct. Yes. Rahul, this is called as interim compensation. Question. Rahul, when I went to court and I came and said, give me 2 crores right now, court will direct to give 2 crores right now. meaning I will get the money right now. Will I pay tax on it right now? No, because I don't know what will happen in the final outcome. In the final outcome, court may come and say, no, you are not eligible for 2 crores, give it back, which means it is not final. Should I tax it right now? When is it better to tax? When I know what the final outcome is, meaning in the year in which the final order is received. Final order is received. Yes or no? Yes. Rahul, final order is passed. I received compensation of 2 crores. 2 crores will be my full value of consideration. Rahul, what is my cost?
The cost of legal aid.
I incurred only legal charges. Did I incur any land purchase? No, because that already got in my original compensation. Did I incur any additional cost? I only incurred legal charges. So what will I do? I will come and say my sale price is my compensation received. My transfer expenses is my legal expenses. I will arrive at my capital gains. I will arrive at my capital gains. Question. Rahul, capital gains ka period of holding? No. Capital gains ka period of holding is the same as original. Is the same as original, because please understand, why did I get the 2 crores? Why did I get the 2 crores? Because I went and I fought. Assuming I would have not fought. Government itself would have directly given me 3 crores. If government would have given me 3 crores, I would have taken the full 3 crores as my consideration. And my period of holding would have been from 2010 to 2020. What changed? Nothing. Yes or no? Yes or no? In simple words, Rahul, when you receive an interim compensation, the nature of capital gains will be same as original compensation. Nature of capital gains will be same as original compensation, because there is no cost, and you can only have a period of holding when there is a cost. So you will assume the same cost as original. So same period of holding as original. Same period of holding as original. You understand? Now Rahul, I made a claim for 5 crores. I got from government 1 crore. I got an enhanced interim for 2 crores. Left office 2 crores. Correct, not correct? Yes. I went to court and I came and said, sir, I expect for 5 crores. 1 he has given me already. 2 you promised me right now. 2 is pending. Court passed the judgment and court came and said, no, I can promise you 4 crores. In that 4 crores, what happened? 1 government already gave. 2 I got interim. How much is pending? 1 crore is pending. This is called as enhanced compensation. Here is where court will come and tell government, dear government, pay this extra 1 crore. Yes or no? Rahul, court will tell today, government will pay tomorrow. No, government will take time. Taxable in the year in which final compensation is received. Government will not come and do installments for court decisions. Government will only do installment for their own compensation. So it is taxable in the year in which the amount is received. Rahul, sale price 1 crore. Expenses 0. You already claimed everything in interim. Expenses is 0. Capital gains will be full 1 crore. Rahul, nature of capital gains same as original. Yes or no? Rahul, if I am going to receive compensation from government after I fight in court, government will not give it right away. So I will go to court and come and say, sir, government should also pay me interest for delay. Government is saying, okay, no problem, I will pay it to you next year along with interest. Now next year I get compensation also, interest also. Compensation taxable under capital gains. Interest is taxable under IFOS. Income tax comes and says, if you are going to receive any interest on enhanced compensation, will become taxable in the year in which interest is received. Obviously, government is not going to give that also on time. It is taxable in the year in which the interest is received, with the condition that only 50% of it is taxable, balance 50 is exempt. So any interest on enhanced compensation will be taxable fully in the year in which the compensation is received, with an 50% tax, with a 50% taxability. Balance 50 is exempt from tax. Clear? No confusions? All clear? Yes. This is what your special scenarios are. Leaving you with the last thing, which is called as depreciable assets. Income tax came and told that if you are going to have a depreciation asset, If you're going to have a depreciation asset, normally you should sit silently in PGBP. You should sit silently in PGBP. But if you come and tell me, that you have made the sale, more than the cost of the block itself. If you have made a sale more than the cost of the block itself, I cannot give you negative depreciation. In that case, I will come and say, ignore the block, move to capital gains, and pay tax under capital gains. Yes, Rahul, your full value of consideration will be the price which I got for asset, meaning sale price. Yes, Rahul, my cost of acquisition will be the cost of the block, meaning the WDV today. Rahul, will I go for original cost and all? No, because you have claimed depreciations. So which means I will take the WDV today. In simple words, Rahul, full value of consideration is the price which you got. Cost of acquisition is the WDV which you have in your books. Rahul, nature of capital gains will always be short-term capital gains. You cannot call it long-term. Are you clear? No doubts? Yes. Now, Rahul, there can be a scenario where you have sold it for a price lesser than cost. Assuming that the cost is 1 crore. In my books, my WDV is 1 crore. I have sold it for 80 lakhs. Normally, what will I do? I will come and say continue depreciation. But assuming you have sold all the assets in the block. Is there a block now? When there is no block, income tax will say move to capital gains. Here what will happen? My sale value is
less than
80. My cost is 100. 80 lakhs, 1 crore. 80 lakhs and 1 crore. My difference is called as short-term capital loss. Are you clear? No confusions. Yes, great. Moving on to the last item, which is called as immobile property. Income tax came and said, boss, when it comes to immobile property, here is where people play hard. Because they are not smart. Income tax came and said, boss, if you're planning to sell your immobile property, please sell it for stamp duty value. If you sell it for a price lower than stamp duty value, I will say stamp duty value is your assumed sale value. So I am coming and saying, Rahul, my sale value is 100. Stamp duty value is 110. Stamp duty value was, let's say 115. Income tax will come and say, boss, why did you sell it for 115? Why did you sell it for 100 when you should have sold it for 115? I will assume that you have sold it for 115. So your full value of consideration becomes stamp duty value. In simple words, Rahul, it is stamp duty value or actual consideration, whichever is higher. Clearer? Yes. Now, Rahul, I am coming and saying there was a reason why I had to sell it for lower price. There were various conditions. In order to help you with those conditions, income tax came and said, I will not do this provision. If your stamp duty value falls within 110% of consideration. So I am coming and saying, Rahul, let's take an example where your actual consideration is 100. Stamp duty value is 109. Income tax says, see, stamp duty value is more, but it is within 110% of consideration, meaning I will still call you genuine. I will assume your full value of consideration as 100. I will still call your full value of consideration as 100. Yes or no? Yes. Rahul, if my actual consideration is 100, my stamp duty value is 121. Income tax will say, day, I could have given you this benefit only if it was within 110. It is 21% more. No benefit for you. Take your full value of consideration as 121. Are you clear? Now I am saying my consideration is 100. My stamp duty value is 95. Income tax will say, take 100. Emma, if you are coming and saying that you have sold it for a higher price than government is happy only, no? Will government come and say, no, pay me lower tax? Government will say, good for me, take it as 100, take it as 100. Understand the provision only applies in case stamp duty value is more than consideration. Here stamp duty value is lesser than consideration. That is what a normal transaction will look like. Yes, obviously in market no one will like to pay more tax. So what they'll do, they'll always sell more than stamp duty value. Adhikaga you cannot come and say, government will say, yes, I'm happy with you paying lower tax. That's not happening. Yes or no? Yes or no? Yes or no? Yes, the last condition is just a not applicable case where you're saying it is higher of the two. Where you're saying higher of the two. Are you clear? Are you clear? Are you clear? Now, Rahul, in scenarios, you may get scenarios where they come and say, Rahul, there are two SDVs. There are two SDVs. In exam, they may come and tell you there are two SDVs. There are two SDVs. One is on the date of agreement. One is on the date of registration. Yes, one is on the date of agreement. One is on the date of registration. Rahul, which one is earlier? Which one is earlier? Agreement is earlier. I will agree with you today and I will register tomorrow. I'll register tomorrow. Yes. Now income tax is coming and saying, Rahul, normally you should take SDV on the date of registration. Normally you should take the SDV on the date of registration because that is the day when you sell. That is the day when you sell. But you can also take agreement. You can also take agreement provided two conditions are satisfied. One, you pay advance. Second, you pay advance by permissible modes. You pay advance, and the second condition is there should be an advance paid by permissible modes. Meaning, I am coming and saying, Rahul, on 15th June, I promised him that I will buy his house. I promised him that I'll buy his house, but I paid nothing to him. Income tax will say, how the hell will I know that you promised? For me, what will I take? Date of registration. If you say, no, Rahul, on 15th June, I promised him that I'll buy the house and I gave him 1 lakh rupees in cash. Government will say, how the hell did I know that you got it on 15th June? Who is to say otherwise that you got it on 31st March? Yes, therefore I will take registration. I am saying, no, Rahul, I gave it to him 1 lakh in account pay check. Now government knows, yes, it is there in the bank statement. I got it by account pay check. Meaning government will say, okay, take agreement date. Take agreement date. This is only to check which SDV to take. This is only to check which SDV to take. Correct. Correct. Rahul. There is an SDV given in the question. There is an SDV given in the question, but the question says assessee is not happy. Assessee is not happy with the SDV. Assessee can refer to valuation officer. Assessee can refer to a valuation officer. He went to a valuation officer and came and said, dear valuation officer, the number is showing 121. The number is showing 121. It is not 121. Actually, the market value is very bad. Valuation officer has two options. He says, okay, maybe it is 115. Maybe it is 115. You will go and say, sir, valuation officer is saying 115, therefore take 115. He is saying, no, actually it is 135. You will come and say, parala 121 hai poro. Yes or no? Yes. In simple words, Rahul, it is SDV or valuation officer, whichever is beneficial, lower. Whichever is beneficial, whichever is lower. Are you clear? No doubts. Yes. This is for your full value of consideration. No confusions. Yes. Rahul, after that you will reduce your transfer expenses. After that you will have something called as cost of acquisition. The question came up is, Rahul, what if I purchase this asset before 2001? Why, Rahul? Because my indexation stops on 2001. My indexation starts only from 2001. So what if I purchase an asset before 2001? I will make a loss because you have not given me the inflation benefit. Income tax says, Rahul, if you are going to purchase an asset before if you are going to purchase this asset before 2001, income tax says you can take the actual cost or FMV on 2001, whichever is beneficial, meaning higher. Correct. So I am saying, Rahul, if you are going to purchase an asset before 2001, do one thing. You can take the FMV on that date. If you find that FMV is higher, so that you can claim lower tax. Correct, not correct. But income tax came and said, Rahul, if you are going to tell me that this is an immobile property, it is not FMV on 2001, it is FMV or SDV on 2001. It is FMV or SDV on 2001, whichever is lower. So first you will compare FMV and SDV, whichever is lower, then take it with the cost, whichever is higher. Then take it with the cost, whichever is higher. Correct. Understand? I'm doing cost. Meaning I am trying to find my cost, which is more better, so that my profits are lower. Correct? Yes. I'm giving an example where I'm coming and saying, Rahul, imagine an example where I'm saying there is a cost FMV and SDV, all for immovable properties. I'm coming and saying, Rahul, the cost is 100, the FMV is 120, the SDV is 110. You will do 110 FMV or SDV, whichever is lower, versus the cost, whichever is higher. Rahul, I'm saying the cost is 100, the FMV is 110 and the SDV is 120. You will do 110. Rahul, you are saying my cost is 110, my FMV, my cost is 110, my FMV is 100, my SDV is 120. You'll do 110. Rahul, my cost is 110, my FMV is 120, my SDV is 100. You'll do 110. You'll do 110. Are you clear? Yes. Understand? These are my cost. Meaning the price at which I will claim from my capital gains. Correct? No confusions. Yes, this is what your provisions are. The amendment of current year comes and says that, Rahul, if you are going to have a house property, on which you have incurred interest cost, income tax is coming and saying, Rahul, if this interest cost was claimed as a reduction under HP, don't come to me and come and say, I want to add it to my cost also, because you already claimed. No, why can you put it again? Yes or no? Yes. Understand? I'm saying, Rahul, the house was not ready. I incurred some interest cost. This is called as pre-construction interest. Yes, this is called as pre-construction interest. Now, borrowing cost standard comes and says pre-construction interest should be capitalized. Correct? Not correct? So what you'll do? You will come and say, Rahul, pre-construction interest capitalized. Put it to my cost of acquisition. But separately you'll go to HP chapter and you'll claim 1/5. Can you do that? Income tax says, if you're claiming it as 1/5 there, cannot claim it here. Correct? No. Yes. Now the one thing which, if I say wants to play this year, can play, is that, please understand, if you have a pre-construction interest, I told you pre-construction interest 1/5. What will you do? You will add it to the current year interest and then check for the 2 lakhs ka limit. If I say wants to play with you, what they'll come and do? No, they'll come and find out that the current year interest itself is 2 lakhs. Tell me, in that scenario, will you like to claim pre-construction interest, not claim pre-construction interest? Will you like to claim, not claim? Not claim, because already it's going beyond 2 lakhs. You cannot claim more than 2 lakhs. In that case, you will come and tell that pre-construction interest should not be claimed. Put everything in cost of acquisition. You understand what I'm saying? This is similar to your 80EA. Whatever is more beneficial. Since it's an amendment, expect a question around this. If it comes, bad luck for you. Yes, nevertheless. Yes, it's a weird question because you are talking about pre-construction interest, at the same time you're talking about sale of the asset. It's a weird combination. I would probably come and say these kind of questions should not come, but yeah, you never know. Saddest people are sitting in the exam institute, same as me only. Yes, so let's be safe. Yes, my point what I'm trying to make is, please understand, if you find out a scenario where your current year interest is 2 lakhs and more, and the property is SOP property, do not come and take a chance with the pre-construction interest. Tell that the pre-construction interest is not allowable and put everything in cost of acquisitions. Are you clear? No confusions? Yes. This is what your capital gains looks like. I don't think I forgot anything, but do let me know. 50 CA. That is later. Format. Anything missed out in the format? No? Fairly okay? Yes. One thing which I probably missed out, and I purposely missed out because it's not important, is that income tax comes and says, when you talk about immovable property, you have to sell it at least at stamp duty value. A similar provision like that is there in unquoted shares. Where it comes and says, if you're planning to sell it for less than fair market value, then the unquoted shares FVOC will also become fair market value. FEOC will become fair market value. The reason I missed it out is because there is a lot of amendments in this current year and it is all final level syllabus. It is all final level syllabus, so you're not expected to get questions around it. Nevertheless, yes, this is what your provisions are. This is what your provisions are. Any confusions? Any confusions? The one thing which I probably want to let you people know is that when you're talking about indexations, assume a scenario where I'm going to gift my property to B. I'm going to gift my property to B. Capital gains will come and say it is not taxable. It is not taxable. Period of holding for the B will become period of holding of A. Cost of acquisition of B will come cost of acquisition of A. Indexation of B will start from indexation of B will start from date of acquisition by no, it will start from date of acquisition by B. It will start from date of acquisition by B till the date on which B holds the asset. Manjulasha case. I told you not to write an exam. If you tell me it is from A, then it is Manjulasha case. Which means if you're telling me it is not from A, then it is normal case. Act comes and says do from B. Manjulasha comes and says do from A. So if you want to do from A, then you have to write story. And I know how much stories you write. So better B. Yes or no? Yes. In simple words, Rahul, when a transaction is not regarded as transfer, cost of acquisition will be from previous owner. Period of holding will be from previous owner, but indexation will be from current owner. Are you clear? Yes. This is what the whole format which we discussed about right now is. Yes, if you have to look at capital gains, I'm saying, Rahul, capital gains first start from full value of consideration. I've given you examples. First one is immovable property, how to do it. Second one is unlisted shares, how to do it. Third one is slump sale. We'll discuss slump sale and liquidation later. Insurance compensation taxable in the year of insurance received. Conversion of capital asset into stock in trade will be taxable in the year of sale of stock in trade. Any kind of compulsory acquisition, original will be taxable in the year of first installment. Enhanced will be taxable in the year of final order, and any enhanced after the interim will be taxable in the year of receiving the money. Any kind of full value of consideration, after that you will reduce cost of transfers, you will reduce cost of acquisition. If the acquisition is purchased before 2001, you will take cost or FMB, whichever is higher. But if it's an immovable property, it is FMB or STB, whichever is lower, then cost whichever is higher. In case of any kind of loan taken for house property, if you have claimed it under HP, then you cannot claim it in the cost of acquisitions or cost of improvements. If you are going to have an asset which is not regarded as taxable, then the cost will be cost to previous owner. And if you are going to make any forfeiture of advance money, then any forfeiture happening before 2014 will be reduced from cost. If it is after 2014, it will be ignored for capital gains. And finally, if you have any kind of depreciable assets, then the cost of acquisition will be the WDV of the asset. You will reduce your cost of improvement and you will arrive at your gross long-term or short-term capital gains, thereby removing something called as exemptions in order to arrive at your capital gains. Are you clear? Yes. Rahul, if I have to teach you what is exemptions, I always tell in my class there are only 3 exemptions which are important. One is 54, one is 54F, and one is 54 EC. Income tax is coming and telling Rahul, if you are going to buy a house by selling an house, income tax says your exemption will be under section 54. But I'm saying you buy a house by selling a house. You will get an exemption under 54. How will you get this exemption, Rahul? First of all, the asset which you are planning to sell should be a long-term capital asset. Meaning should be held for more than 24 months. The asset which you are planning to purchase should be an house property in India. And you can only buy one house property. But if you come and tell me that your capital gains is less than 2 crores, I will permit you to buy 2 properties, provided this is done only once in a lifetime. If you've done it earlier, I will not give it again. Yes or no? Yes. Recapping once again, I'm saying selling house, buying house in India. Sale can be of any house. Buying should be of Indian house. Indian house. Buying should be of Indian house. I should buy only one house, but I can buy two houses provided I am doing it only once in a lifetime and the consideration is gains is not more than 2 crores. Gains is not more than 2 crores. Rahul, how should I do this? I am coming and saying you should invest your capital gains into the new house. Should invest your capital gains into the new house. So I'm saying whatever you invest is what I will exempt. Whatever you invest is what I will exempt. So I'm saying my capital gains is 10 crores. I invest 10 crores. I will get exemption of 10 crores. I get exemption of 10 crores. Correct? Rahul, my capital gains is 10 crores. I invest 5 crores. Income tax will give exemption only of 5 crores. Correct? Not correct? Correct? Not correct? Yes. Rahul, I have a capital gains of 15 crores. I invest 12 crores. I invest 12 crores. Capital gains will now come and say, starting current year, you can only invest up to 10 crores. You can only invest up to 10 crores, which means income tax is now coming and saying, Rahul, if you sell for 15 crores and you get a gains of 15 crores and you get a gains of 15 crores, even if you invest 12 crores, even if you invest 12 crores, I will assume that you have only invested 10 crores. I will assume that you have only invested 10 crores and therefore I will only give you an exemption of 10 crores. I will only give you an exemption of 10 crores, meaning now there is a limit. Now there is a limit. In the house, you cannot put more than 10 crores. In the house, you cannot put more than 10 crores. Are you clear? Are you clear? No doubts? Yes. Be very careful about it. It's an amendment and therefore will come in MCQs. Will come in MCQs. I am coming and saying, Rahul, imagine an example where I'm saying I have sold a house for 20 crores. I have sold a house for 20 crores. Yes. The capital gains coming from this house is 13 crores. The capital gains coming from the house is 13 crores. I have invested 12 crores. I have invested 12 crores. Income tax will give me exemption for only 10 crores. Income tax will give me exemption only for 10 crores. Are you clear? Are you clear? Yes. Rahul, how should I make the investment? Income tax comes and says the new house property which you're planning to buy should be bought within 1 year before or 2 years after from the date of transfer. 1 year before or 2 years after from the date of transfer. But if you're planning to construct the house, you can start whenever you want. You can start whenever you want as long as you complete it within 3 years from the date of transfer. 3 years from the date of transfer. You start 10 years ago also, I don't care. But complete it within 3 years from the date of transfer. 3 years from the date of transfer. Yes or no? Yes or no? Rahul, I sold a house, I bought a house. I sold a house, I bought a house. Everything is going normal. Everything is going normal. Income tax is coming and saying, Rahul, if I'm telling you that you have to purchase a house within 2 years, obviously you are going to put the money 2 years later only. How will income tax know today that you are going to invest in the house? Income tax says, create a new fund called as capital gains account savings scheme and put the money in that fund within the due date of return filing. I will take that money as assumed to be used for house. I will take that money assumed to be used for house. But yes, in the future, if you play shenanigans and you remove it from the account and don't put it in the house, the year in which you remove it, I will tax it off. The year in which you remove it, I will tax it off. Correct? Correct? Finally, Rahul, if I've bought the house, income tax says, please hold the house for at least 3 years. Please hold the house for at least 3 years. If you sell the house within 3 years, income tax is saying, then whatever is the exemption which you claimed earlier will be removed from the cost of acquisition. Whatever exemption you claimed earlier will be removed from the cost of acquisition. Why am I doing that, Rahul? Because the asset which I transferred is house, the asset which I bought is house, same asset, therefore club it together. Same asset, therefore club it together. Whatever exemption I claimed earlier will be removed from the new cost. Are you clear? Are you clear? Yes. So in my example where I'm coming and saying, Rahul, I bought the house for 15 crores and I sold it for, let's say some number, my capital gains is 10 crores. I invested 10 crores. My exemption is 10 crores. My capital gains was 0. I have this house of 10 crores now. In the future, I will plan to sell this house. If I sell after 3 years, no problem. But if I sell within 3 years, let's say I sold it for 16 crores. Income tax will say your sale value is 16 crores. Your cost was 10. But unfortunately, full cost you took as exemption. So I will remove the whole exemption. Your cost becomes 0. Your taxable gains becomes full 16 crores. Taxable gains becomes full 16 crores. Are you clear? Are you clear? Yes. This is section 54. Next is 54F. 54F comes and says, Rahul, now I am not planning to sell house. I am planning to sell anything other than house. But what I am buying is the same, which means house. So I am saying, Rahul, if house to house, then it is 54. If it is anything else than house, then it is 54F. Then it is 54F. Income tax is saying you have sold something else in return of buying a house. In return of buying a house, income tax, I'll give you an exemption under 54F. I'll give you an exemption under 54F if you are planning to buy one residential house in India. You're planning to buy one residential house in India. Yes, Rahul, what I need to invest here, I need to invest my net consideration. Here I need to invest my net consideration. Net consideration means sale minus transfer expenses. Sale minus transfer expenses. So in my example, I'm saying, Rahul, I've sold 15 crores ka house. My gains is 10 crores. My gains is 10 crores. In the earlier example, I asked you to invest 10 crores. In this example, I'm asking you to invest 15 crores net consideration fully. I'm asking you to invest net consideration fully. So I'm saying, Rahul, let's take a scenario where I've sold shares. I've sold shares. Shares I've sold for 6 crores. Shares I've sold for 6 crores. My cost of acquisition is 4 crores. My gains is 2 crores. My gains is 2 crores. Income tax is saying if you plan to buy an house, you have to invest. You have to invest full 6 crores. You have to invest full 6 crores. You have to invest full 6 crores. Meaning income tax is saying if you invest 6 crores, I will give you exemption of, hey, 2 kodi dana income hai. I will give you exemption of 2 crores. People, notice this carefully. Notice this carefully. How much is your gains? 2 crores. How much do you want to exempt? 2 crores. For exempting 2 crores, I am asking you to invest the whole 6 crores. Invest the whole 6 crores. You understand what I'm talking about? You understand what I'm talking about? Yes. Now, Rahul, assuming I invest 8 crores. Assuming I invest 8 crores. Income tax will say, you will still get an exemption of only 2 crores. You will still get an exemption of only 2 crores. Problem is, if I invest 4 crores, income tax is saying, if you had invested 6 crores, I would give you 2 crores. You invested 4 crores. How much will I give you? I will proportionally reduce. How? By cross multiply. Cross multiply. 8 by 6. Number is 1 point. I will give you only exemption of 1.33 crores. Hey, you understand? You understand? Yes, understand. I am asking you to invest net consideration. I'm asking you to invest net consideration. If you invest in net consideration, I give you full exemption. But if you don't invest in net consideration, I will proportionately bring it down. I'll proportionately bring it down. Clearer? At the same time, current year amendment comes and says, in the house, you should not put more than 10 crores. In the house, you should not put more than 10 crores. Meaning, Rahul, I am saying my sale consideration is 15 crores. My cost of acquisition is 12 crores. My cost of acquisition is 12 crores. My gains is 3 crores. Ideally, you should invest 15 crores in order to get exemption of 3 crores. But income tax is coming and saying you cannot invest 15 crores. You can only invest 10 crores. So which means income tax is coming and saying, had you invested 15 crores, I would have given you 3 crores. But I am only permitting you to invest 10 crores. Therefore, you will get exemption of only 2 crores. You understand what is happening? Income tax is saying, in a house, you cannot invest more than 10 crores. But at the same time, income tax is also coming and telling, if you invest the full consideration only, I'll give you full exemption. Yes or no? So I'm telling, if you invest 15 crores, I'll give you 3 crores. You invested 15 crores. Income tax will say, no, you can only invest 10 crores. Which means I'll give you exemption of only 2 crores. Tax. Yes or no? This is what the new amendment is. Please be careful about it. More than 54, I'm expecting this to come in exam. I'm expecting 54F to come in exam because this is something critical where you have to do proportionate changes. Please be very careful about this. Are you clear with this? Any confusions? All clear? Yes, great. Now I'm coming and saying the same rules. Rahul, you have to invest in net consideration. You have to put it in CGAs, invest it within 1 year before or 2 years after or 3 years of construction. If you're not able to do that, I will tax it off fully. If you're going to buy a house, you have to have the house within 3 years. If you're going to sell the house within 3 years, hey, now the assets are different asset, house property. Therefore, I am saying, Rahul, do one thing, whatever exemption you claimed earlier, tax now. Whatever profit comes from new house, tax separately. So I'm saying take the tax separately. Take the tax separately. Clear? Yes. Moves you to the last exemption called as 54 EC. Income tax comes and says, Rahul, if you're having an immovable property, if you're having an immovable property which you plan to invest in NHAI, REC, notified 54 EC bonds, in that case I will again give you an exemption. Provided you invest capital gains. Yes. So what do I have to do? I have to sell a immovable property. I have to buy NHAI, REC or other notified bonds by investing capital gains. Same as 54 with the restriction that you cannot put more than 50 lakhs. You cannot put more than 50 lakhs in the bonds. Rahul, I'm planning to put 75 lakhs. Income tax will only give you 50 lakhs. They will not give you more than 50 lakhs. So they're telling you, you can only invest 50 lakhs in the bond. How will you do it? By investing your capital gains. When should you invest? You should invest within 6 months from the end of the month of transfer, or 6 months from the rate of transfer. 6 months from the date of transfer. Rahul, when you're going to anyway invest in 6 months from the rate of transfer, do you have to do CGS? No, you don't have to do CGS. Clear? Yes. Now, Rahul, if you have bought a bond, income tax says keep the bond with you for 5 years. If you sell the bond within 5 years, then assets are same or assets are different? Which means what you'll do? Exemption claimed earlier, taxed. Now, this sale will be taxed separately. Correct? Now, apart from this, if you get any other question in exam, ask yourself smartly. Rahul, what am I selling? What am I buying? If you see a question where someone is selling and buying also, there is 99% an exemption. Take the number, exempt it off fully if you invest that money. In simple words, Rahul, there is a follow-up question which comes and says, if you sell industrial undertaking and buy industrial undertaking, you get an exemption. My question is very simple. Why would an exam question come and give you a buy when it has no relevance other than exemptions? So in simple words, Rahul, if you see a question in exam which comes and says you have sold an industrial undertaking and then he's bought an industrial undertaking, you will come and say, great, take exemption. How much to take exemption? Capital gains. Take the exemption of capital gains. Full stop, khatam. Leave it off there itself. Yes, don't worry too much about other exemptions. Are you clear? Yes, great. In order to close the chapter, the last topic which is there in this chapter is called as your capital gains taxation, where it comes and says there are 3 kinds of capital gains which are supposed to be taxed. One is 112, one is 112A, one is 11 money. Rahul, 112A and 11 money are the same, which comes and says there are 3 assets which are covered here. One is listed equity shares, equity oriented funds, units of business trust. Any other asset which you have will be called as 112 or will be called as others. Correct, not correct? Yes. Now, income tax is coming and telling if you are going to have units of business trust, equity oriented funds or listed equity shares, if you sell any of these items by paying STT, securities transaction tax, then in that case I will treat it as short term 11 money or long term 112A depending on the period of holdings, and therefore tax it at the rate of 15% for 11 money or 10% in excess of 1 lakh for 112A. Rahul, if it is not paid STT, or if it is any other asset, you will tax it as short term others Finance Act or long term 112 20%. Correct, not correct? Rahul, rebate can be claimed by 112. Yes, rebate can be claimed by 111A. Rebate can be claimed by 111A. Yes. Rahul, rebate can be claimed by STCG others. Yes. Rahul, rebate can be claimed by 112A. No, cannot claim rebate there. Yes or no? Rahul, kaju katli can be done by 112A. Patya. Yes. Exemption of basic exemption limit can be adjusted by any capital gains. Provided you are resident. Correct, not correct? Yes. Rahul, enhanced surcharge of 25 and 37 will apply on 112A. Enhanced surcharge of 25 and 37 will apply on 112A. No. 111A. No. 112. Others.
Yes.
Yes. It will apply on that. Yes. Yes. Rahul, leaving you with the last topic, which is your cost of acquisition in case of 112A. Income tax comes and says, Rahul, if you are going to have a 112A asset, if you're going to have a 112A asset, meaning
Is that
long-term capital asset, which is of three natures, income tax came and told, Rahul, tell me whether you bought the asset before 2018 or after 2018. Tell me about it before 2018 or after 2018. 2018 Feb. So 1st Feb 2018. Income tax says if you bought this asset before 1st Feb 2018, the formula is as under. They are coming and saying you have to do lower of FVOC, full value of consideration, or FMV on 2018, whichever is lower compared with the actual cost, whichever is higher. That will become your new cost. I'm repeating it once again. It is full value of consideration or FMV on 2018, whichever is lower compared with the actual cost, whichever is higher. This is your new cost. But Rahul, if you bought the asset after 2018, then you will take the actual asset as it is. Correct? No confusions. This is what your capital gains looks like. Any confusions? No change in default regime and alternate regime when it comes to capital gains. What you said is as it is. No change in the regimes. Any confusions? No? Great. This is what your topic on capital gains is. The miscellaneous topic which I spoke about is amalgamation, demerger. I already told you it is exempt from tax. You have two more items which is called as buyback. Where income tax comes and says, Rahul, if there is a buyback happening, company will pay the tax, individual will not pay the tax. If the company is going to pay the tax, the company will pay tax at the rate of 20% tax plus 12% surcharge plus 4% cess, 23.296. If the company is paying the tax, the employee, the shareholder is exempt from tax. It is 20 plus 12 plus 4. MCQ question, nothing else. Clear? Leaves you with the final item, which is your slump sale. Where income tax comes and says, Rahul, the format is the same. What is the format? It is full value of consideration minus transfer expense minus cost of acquisition. Rahul, when it comes to slump sale, will you have an index improvement? No, you will not have any improvement. Therefore, you will arrive at long-term capital gains or short-term capital gains. Income tax said, Rahul, full value of consideration is the actual consideration or fair market value of assets transferred, whichever is higher. So income tax is coming and telling the same logic as immovable property. Please ensure that you are selling your assets at least at fair market value. If you are selling it lesser than fair market value, I will assume the fair market value. Minus transfer expenses, you will get the net consideration. From this, you will reduce something called as cost of acquisition, which is nothing but net worth of the company or undertaking. Rahul, what do you mean by net worth? Net worth means assets minus liabilities. Rahul, assets minus liabilities as per accounts or as per tax? As per accounts or as per tax? As per tax. I hate accounts. As per tax. Meaning what, Rahul? When you talk about depreciable assets, you will take WDV as per income tax. When you talk about 35AD assets, specified business assets, you will take the cost as 0 because fully claimed. You talk about 35 assets, scientific research assets, you will take the cost as 0. Rahul, you are talking about land. You will take the cost as original book value. Rahul, accounts is saying let's revalue. Income tax will say no revalue. Because you paid only original cost. Revaluation is only account stupidity. I don't care. I don't care. I'm not taking it. I'm not taking it. Yes or no? Yes. So in simple words, it's assets minus liabilities. Assets being all your tax assets and liabilities being all your tax liabilities. If you don't know the answer is book value. If you don't know the answer is book value. Otherwise, the tax is as per tax. The tax is as per tax. Clear? Now, question: if the asset is ended up being a long-term asset, can you claim indexation? Can you claim indexation? Can you claim indexation? No. Slump sales are not permitted to have indexations. Slump sales are not permitted to have indexations. Apu Rahul, will there be a long-term slump sale? Yes. There will be a long-term slump sale. If the undertaking is held for more than 36 months, the slump sale will be assumed to be a long-term capital gains. If the undertaking is held for more than 36 months, the asset will be called as long-term capital asset and therefore long-term capital gains. Understand, I'm talking about the undertaking. So which means I'm coming and asking, when did you create the undertaking? When did you create the undertaking? Inside the undertaking, whatever happened is different. But when did you create the undertaking is what the question is. Clear up? No doubts? Yes. Rahul, at the same time, I'm also coming and telling, please be careful about the fact that when you're talking about undertaking, you have other items also like debtors, current assets, inventories, current liabilities and all those things. Those things will be taken directly at book value because they will not change between accounts and tax. Are you clear? Yes, this is what it is. Rahul, are there any other assets on which you cannot claim indexation? You cannot claim indexation on foreign exchange assets. Very good. Next. Any short-term assets? Next. But book kya? Depreciable assets. Unlisted? No. Final level syllabus. Next. 112A. Very good. Yes, you are not eligible for indexations on 112A. You're not eligible for indexations on 112A. Be very careful. Which means there is only one asset which is eligible for indexation, which is 112. Which is only 112. You're only eligible for indexation on 112. You're not eligible for 112A. You're not eligible for 111A. You're not eligible for others also. Only 112 is eligible for indexation. In that 112 also, if it is a depreciable asset, no indexation. If it is a slump sale, no indexation. If it is a slump sale also, no indexation. Are you clear? No doubts? No. Sweet. This is your end of capital gains. We are cutting out for lunch. We will come back, do IFOS, dividends, miscellaneous topics, set off and all. I'm not teaching. Yes, we are doing IFOS, dividends and then miscellaneous topics. Yes. Sweet. Let's take a break. Half an hour. We'll do 1 hour. 1 hour. We're coming back at 2:40. Hello. All right. We're starting with the balance topics of your miscellaneous levels. Yes, we're looking at the first topic called as IFOS, a fairly simple, straightforward and easy topic. We're looking at IFOS. Yes, put it in a very simple terms. I don't have anything much to discuss about IFOS as well, but nevertheless, IFOS is basically telling that if you have any kind of incomes which are not taxable under the first 4 heads of income, it becomes taxable under IFOS. It becomes taxable under IFOS. The first and the predominant one which is taxable under IFOS is called as dividends. It's called as dividends. Now, if I have to clarify dividends to you, dividends are of 5 types when it comes to IFOS. Dividends are of 5 types when it comes to IFOS. One is where they're saying if you're planning to transfer any asset, in lieu of giving the profits of the company to your shareholders, then it becomes dividend. Point number 2 is where they're coming and saying if you're planning to give any bonus shares to preference shareholders, or if you're planning to give any debentures to any shareholders, then is also dividends. Point number 3 is where they're coming and saying if you're planning to give any liquidation proceeds to your shareholders, then it's also dividends. Point number 4 was talking about reduction of share capital, and point number 5 being the most important one called as deemed dividend, where they come and say if you are a shareholder holding more than 10% voting power and I am going to give you any loans or advances, then the money which I give to you is also called as dividends. The money which I give to you is also called as dividends. For all the 5 things to take place, the condition is very simple. The condition is that any kind of money given to you as dividends will only be called as dividends if it is having, if the company is having accumulated profits. If the company is having accumulated profits, you need to have an accumulated profit in the company for the company to be issuing something called as dividends. For example, if I come and tell you, Rahul, what is happening is there is a person giving loan to a shareholder, holding more than 10% shares. Yes, so I am going to give you a loan of 5 lakh rupees, whereas in the company there is only an accumulated profit of 4 lakh rupees. There is only an accumulated profit of 4 lakh rupees. Income tax will say deemed dividend is to the extent of 4 lakhs. Deemed dividend is to the extent of 4 lakhs. You will not be taxable for the full 5 lakhs because only profits are there for 4 lakhs. So dividend can only be 4 lakhs. Yes. Assuming the question comes and says, Rahul, the company is incurring losses forever. The company is incurring losses forever. In that case, deemed dividend becomes 0 because profit is 0. So dividend will also become 0. Correct? Not correct? Yes. So please be careful about it. This is one deemed dividend concept which is coming in again and again, biting you very hard. It comes and says that when you are going to issue any loans and advances to your shareholders holding more than 10% voting power, any loans and advances which you give to the shareholder will be deemed as dividend to the extent of accumulated profits. Nevertheless, income tax is coming and saying if any dividend is issued to the shareholder, these dividends are taxable under the head IFOS. From this dividends, you can only claim one expense, which is interest on loan. So income tax is coming and saying if you've taken a loan for buying the shares, or if you've taken a loan for buying the mutual funds, any kind of interest which you incur in this is only allowed as a deduction. That too has an overall limit subject to 20% of the dividend income. So in simple words, income tax is coming and saying if you are going to have any dividend income, the dividend income is fully taxable, but out of the dividend income you can claim a deduction of 20% of the dividend income if you pay something called as interest. Rahul, if the question comes and says that you're paying something called commission, brokerage and all those things, those expenses are not allowed. If you're going to pay any interest, that is also going to be allowed only up to a maximum of 20% of the dividend income. Are you clear? Yes. Looking at the balance items, Rahul, quickly, it says casual income. We already discussed about casual income. You're not going to get any kind of expenses, deduction, losses and all those things. All casual incomes are taxable under IFOS. We spoke about interest on enhanced compensation, where I came and told you any enhanced compensation is taxable in the year in which it is received. You can claim a deduction of 50% of the compensation. If you are going to have any advance money forfeited, then it is taxable after 2014 under IFOS. If you are going to have any income tax refund, please understand the fact that if you are going to have an income tax refund, the whole refund is not taxable. It is the interest on such income tax refund which is taxable. So if the question comes and says that Rahul, the P&L has a 30,000 worth of income tax refund. In this 30,000 comprises 5,000 rupees of interest. What will you do? You will first under PGBP reduce full 30,000. You'll first under PGBP reduce full 30,000 because that should not be a part of PGBP. When you go to IFOS, you will come and say, no, I cannot tax 30,000 because that is my refund got back. That is my refund got back. What I can tax in IFOS is only 5,000 of interest. You understand what I'm doing? Yes. So first remove the full 30,000 from PGBP and then tax only 5,000 under IFOS. Clear enough? Yes. Next, what other items are there? Interest on savings, FD, RD or loans. Any kind of interest which you're going to have. Next, any kind of interest on post office savings, provided you claim an exemption of 3,500 for an individual account. You claim 3,500 for an individual account. Any kind of amount received under a family pension will be fully taxable under IFOS with an exemption of 1/3 of the family pension or 15,000 rupees, whichever is lower. And then finally your new items which are there, you are having something called as any kind of premium on issue of shares. Any kind of premium on issue of shares, where income tax comes and says, if you are a closely held company or a private company planning to issue your first shares as premium, if you plan to issue the shares at a premium and you receive money more than the fair market value, whatever excess you receive will become fully taxable in the hands of company. So in simple words, I'm coming and saying any kind of consideration minus the fair market value of the shares which are issued by a closely held company, provided the shares are issued at a premium. For all of my friends who are from a previous attempt, please understand, in this provision earlier it was only residents, now it is any person. Yes, so if the company issues shares to any persons, it is fully taxable. Earlier it was only to residents, it doesn't matter anymore. Now if you issue the shares to any person at a premium, it is fully taxable. Correct. Next is your amendment of current year. The amendment of current year comes and says that if you are planning to issue any life insurance policies, if you're planning to buy any life insurance policies, please ensure that you don't buy life insurance policies having premium more than 5 lakhs. If you end up buying life insurance policies with the premium of more than 5 lakhs, the policy will become taxable. Under the head IFOS in the year in which the policy is withdrawn. It is not taxable in the current year, it is taxable in the year in which the policy is withdrawn. Since it is an amendment of current year, it only talks about those policies which are taken after 2023. When I say 2023, I mean April 23. Yes. Now, Rahul, I am smart. I am coming and saying, Rahul, you know what I'll do? I will not take one policy more than 5 lakhs. I will take multiple policies. Income tax says if you take multiple policies also, the current year premium should not go more than 5 lakhs. In any of the years, if the premium goes more than 5 lakhs, you will now have to make a choice as to which policy you want to tax and which policy you want to exempt. The exemption can only be taken for those kind of policies, total of which becomes less than 5 lakhs. If I have to give you a simple example, take a scenario where I'm coming and saying, Rahul, a person is having 4 policies. Or let's say maybe 5 policies, whatever it is. Where is it? Yes. Take a scenario where I'm telling that the company has 5 policies. Yes, a person has gone ahead and he's taken 5 policies. LIPX, LIPY, LIPA, LIPB and LIPC. Yes. If the 5 policies you notice, all the policies are after 2023, 1st April 2023, which means all policies are to be considered. Now, if I notice the policy, 2 policies were taken in 23 and 3 policies were taken in 24, which means in 23 I only paid premium on first 2 policies, which is totaling to 4 lakhs. Rahul, 4 lakhs permitted, not permitted? Permitted. You can pay up to 5 lakhs. Yes. Now in 2024, Rahul, I am paying total premium of ABC or XY to ABC. XY to ABC. It's an annual premium, which means I'll pay every year. Yes. So in 2024, I'm going to pay how much? 2 plus 2 plus 2 plus 3 plus 6, total 15 lakhs. Rahul, can I pay 15 lakhs? No, I cannot pay 15 lakhs. Here is where income tax will come and say you cannot pay 15 lakhs. Please decide which policies are taxable and which policies are exempt. Now, if I look at the policies, I look at policy number C. It looks like the premium on the policy number C is 6 lakhs, which means policy standalone itself is taxable. So I will decide that policy C is going to be taxable. I'm looking at the balance policies 2, 2, 2 and 3. Nothing is going more than 5. So which means policies can become exempt. But the combination should be in such a way that the policies do not go more than 5. So I now need to decide, Rahul, which policies are taxable and which policies are exempt. The best way to do that is to check for what is my income from each policy. Yes, if I'm looking at policy number A, I have redeemed the policy in 27, which means I have paid premium for only 4 years. I have paid premium for only 5 years. I have paid premium for 5 years. Yes, 23, 24, 25, 26, 27. So I paid for 5 years, which means I have paid total premium of 10 lakhs. I have paid total premium of 10 lakhs. I have surrendered it for 12 lakhs, which means my profit is 2 lakhs. Correct. Next policy, I took the policy for 2 lakhs annual premium. I am paying it for 10 years. I am paying it for 10 years, which means totally I paid 20 lakhs. I am redeeming it for 24 lakhs. Number is 4 lakhs. Third policy, total 10 years, 2 lakhs policy, which means again 4 lakhs. Third policy, 3 lakhs, 10 years becomes 30 lakhs. Redeeming it for 6 lakhs. Number is 6 lakhs. Redeeming it for 6 lakhs. Question to you. Now looking at the policies, which policy has a higher income? B has a higher income. You like to tax it or you like to exempt it? I like to exempt it. So I'm coming and saying let's exempt B. Let's exempt B. Rahul, which policy would I like to tax? I would like to tax X because X will only give me tax of 2. So therefore I'll say let's tax X. Let's tax X. Yes or no? Yes or no? Which means, Rahul, I now have a policy which is exempt, which is LIP B, and the premium used on the policy is 3 lakhs. I can still use a policy premium of 2, which means now I have to make a choice whether I need to do A or B. A or B. Yes or no? I can either do one of the two. I cannot do both, because if I do both, number becomes 7. I can only take 5. So I have to decide whether I have to take A or I have to take B. Correct? Not correct? Yes. Now if I am looking at the policies, A will mature in 33. Y will mature in 33 and A will mature in 34. A will mature in 34. 1 year gap is there. Yes. Now tell me what is happening in 34. Tell me what is happening in 34. I am already taxing C. I am already taxing C. Yes or no? So my income is already having 10 lakhs ka tax. I already have to pay tax on 10 lakhs. Yes or no? Yes or no? So if I treat this 33 as exempt, 34 becomes taxable. Correct? Not correct? If I treat 33 as exempt, 34 becomes taxable. If I take 34 as taxable, my total income becomes 14 lakhs. Correct? Not correct? I'll have to pay tax on 14 lakhs. Agreed? Not agreed? Rahul, if I treat A as taxable, A as exempt. If I treat A as exempt and Y as taxable, what happens? Y will be taxable in 33. C will be taxable in 34. Correct? No?
Yes, sir.
Y will be taxable in 33 and C will be taxable in 34 because A has become exempt. A has become exempt. Now, if I am taxing Y in 33, my income is 4 lakhs. Tax will be 0. Rebate. Tax will be 0 because rebate. And this number of 10 lakhs will be taxable for 1,12,500. 1,12,500. Yes or no? Yes or no? But in the earlier example, what happened? I taxed full 14 lakhs in 1 year. I taxed full 14 lakhs in 1 year. Will I get rebate? No. I will end up paying more tax. Rahul, which one is beneficial? Choosing to tax 4 lakhs in 33 and 10 lakhs in 34. Which means I'll say, let's do one thing, Rahul. LIPY becomes taxable. LIPX becomes exempt. Rahul, which of the policies I have treated exempt now? I have treated A and B as exempt. Balance are taxable. Balance are taxable. Yes or no? Yes. I have tried a combination in which my total premium is not going more than 5 lakhs and therefore the policies have become exempt properly. The policies have become exempt properly. Now this is the smarter way. This is the smarter way. If you want to do stupid ways like I say will come and say, let's do FIFO. Let's do FIFO. What is FIFO? What matures first? Exempt first. What matures first? Exempt first. Rahul, if you're maturing first, what is maturing first? 27. So they are saying first exempt this off. First exempt this off. Next exempt 33. Rahul, if I'm exempting these two off, my exemption is 2 plus 2, 4 lakhs. Rahul, can I have any more policies? No, because every other policy is more than 1 lakh. More than 1 lakh. Which means what will happen? A will also become taxable. B will also become taxable. C will also become taxable. That too same year. That too same year. A will be taxable for 10 lakh. A will be taxable for 4 lakh. B will be taxable for 6 lakhs. C will be taxable for 10 lakhs. You are totally now paying tax on 20 lakhs. You're now paying tax on 20 lakhs. Where in my example, you're paying tax only on 10 lakhs. Here you're paying tax on 20 lakhs. Rahul, are you smart? Let's not do I say. Let's not do I say. Nevertheless, in exam, if they come and tell, assuming X is treated as exempt, which other policies will be taxable, or they'll say assuming X and Y is exempt, which other policies are taxable. Those kind of questions may come. It came in this time's RTP. First time when they gave a question in RTP, they came and said, tell me what is the smarter way. Second time they gave a question, they came and said, tell me if I exempt X, then what is the smarter way. Then they said third time, assuming I'm exempting X and Y, tell me what is the smarter way. After that, there is nothing smart. Correct, not correct? Yes, so they can play all combinations. If they have given you to make an assumption that way, don't come and disturb. Yes, don't come and then don't defy and come and say, no, who are you to say me otherwise? If they're telling you to do something, you do something. Yes or no? Yes. But practically, if they come and ask you, tell me the most beneficial manner will be to exempt A and B. Are you clear? Yes. This is what your maturity proceeds are. This is your current year's amendment. Please also note the fact that when you are looking at the current year's amendment, income tax said the 5 lakhs of premium is excluding GST. Meaning in the question, if they come and say, Rahul, premium, GST, total premium, GST and total premium, don't check the total premium for 5 lakhs. Check the premium without the GST for 5 lakhs. Check the premium without GST for 5 lakhs. You have to only compare with the GST without premium without GST. Clear? Yes. Coming to the last topic of this IFOS, we are looking at gifts. Where income tax is coming and telling, boss, if you are going to receive any gift, you have to follow a sequence. Step number 1, identify the person. Identify the asset. You have money, specified movable, immobile. Specified movable means BA, pass, DJ, bullions, archaeological collections, paintings, any work of art, shares, sculptures, drawings, jewelry. Yes, these are the only items which are going to be taxable under the head gifts. Yes, so step number 1, identify the assets. Step number 2, check for exceptions. Exceptions being dirt, min, clot, D for death, I for inheritance, R for relative means, Rahul, self along with spouse, siblings, her siblings, my parents, her parents, my linear ascendants, my linear descendants, her linear ascendants, her linear descendants, my parents, siblings, and that's all. Everyone's a spouse. When I say everyone, persons defined as a spouse. Suddenly come and say all Indians are my brothers and sisters. Yes, all persons covered or a spouse. These people are your relatives. But if you are an HUF, the members of the HUF become a relative. Rahul, how do you become a member of HUF? By birth or by bringing into family. How to create an HUF is by marriage. Okay. After you create an HUF, how do you become a member of HUF? By birth or by bringing into the family. That is how you will become a member of the HUF. Are you clear? Yes. Rahul, who are the people who are not covered? Any niece, nephew are not covered. Meaning my siblings or the kids are not covered. That is how it is. Clear enough? Good to go. Yes. Now Rahul, exception number 2 was dirt, min, clot. R is done. T is trust, meaning receiving or giving to trust. M is marriage, not covered. Not covered is anniversary. Any kind of birthday is also not covered. Any other person getting gift on your marriage is also not covered. Next is I stands for individual having private trust. Then N stands for non-profit organizations, giving and taking from NPOs. C stands for COVID. L stands for local authority. O stands for others which are not there for syllabus, and T stands for transactions which we discussed in capital gains as exempt. Except for gift. Yes or no? Yes. Now income tax is saying, Rahul, if step number 2 is also not satisfied, you will now come to step number 3, which is checking for limits. Where the limits are as follows. Income tax says if you are going to receive money more than 50,000 per annum, it is taxable as gift. If you are going to receive any kind of specified movable property, tell me how much is the gift element. Gift element meaning FMV minus actual consideration, FMV minus actual consideration. If the FMV minus actual consideration goes more than 50,000 on each property, all properties, on all properties, then the item again is taxable as gifts. Only the gift element is taxable. Only the gift element is taxable. Correct? Yes. Finally, moving on to the last item, which is your immovable property. Income tax is an immovable property also. If the stamp duty value minus the consideration goes more than 50,000, then also the immovable property is taxable. Rahul, here it is stamp duty value minus consideration for all property, each property. It is stamp duty value minus consideration for each property, but it will not be taxable under gifts if you can prove it to me that the stamp duty value is within 110% of consideration. And how to do stamp duty value, we already discussed in capital gains. Yes, if you have two stamp duty values, you will take the date of registration, but you can also take agreement if there is an advance, and advance is by permissible modes. Clear enough? Good to go. Yes. Now the one thing which income tax is coming and telling is, Rahul, if you are going to tax something as gift, whatever is the amount of gift which you tax can be added to the cost of the asset. Meaning in capital gains, when we spoke about the fact that when you are going to give someone a gift, it is not taxable for seller, and for the buyer it becomes cost to the previous owner and period of holding to the previous owner. Those conditions will only apply in case you are not taxable under IFOS. Because if you are taxable under IFOS, then whatever is the differential, you will end up paying tax on it, and you will add it to your cost. In which case the cost of acquisition will be the new cost. What is the new cost? The consideration which you paid plus the gift element which you taxed, or in simple words, the FMV or SDV. That will end up becoming fully taxable in your hands. Since you now have a new cost, the period of holding will also start from today. Are you clear? Yes. Please understand the fact that when you're talking about gifts under IFOS, you are not talking about any kind of gifts which are received by employer, because those are taxable under salaries, and any kind of gift which is received under business, because those are taxable under PGBP. Also, you're not talking about any kind of gifts received in stock in trade format. Because those are taxable under stock in trade is PGBP. Correct? Clear enough? Yes. This is your IFOS. Yes. We are done with all the heads of income. People, any challenges, any confusions, any doubts? No. Good enough. Great. Moving on to the miscellaneous topics, the fairly easier ones. We are looking at something called as step number 6, which is your clubbing of income. Now in clubbing of income, in simple words, I have put it out to you. How does clubbing of income work, Rahul? Income tax is coming and saying, Rahul, when it comes to clubbing of income, there are 6 or 7 ways to do clubbings. First is called as transfer of income. Where income tax is saying, if you are transferring your income to someone without transferring the asset, the income becomes taxable in your own hands. In the hands of transferor. It will be taxable in the same head in which the other person would have paid tax. It will be taxable in the same head in which the other person would end up paying taxes. Yes, there is this one famous question which is always coming up in exams. It came in this MTB one also, where it comes and says, preference dividend of 5,50,000 was transferred to spouse. Preference dividend of 5,50,000 was transferred to spouse at an irrevocable condition, meaning the dividend will not be retained back even after lifetime of the persons. Question came up, is it taxable or not taxable? It is taxable because exactly what you transferred is the dividend and not the asset. Giving money on irrevocable nature has no difference. You should give the asset on irrevocable natures. Just because you give the money, it does not make it not clubbing. Yes, any kind of transfer happening of income, whether you do it for revocable nature or irrevocable nature, is fully clubbed. Are you clear? Yes. Which comes up to the second question, what is irrevocable transfers? Income tax is saying, if you tell me that you do not want to transfer income, but you want to transfer asset, You want to transfer asset. Income tax says, tell me, are you transferring the asset on a revocable condition? On a revocable condition. Revocable condition means whenever I want, I can take it back from you. Whenever I want, I can take it back from you. Income tax says if you're going to give an asset to someone on a revocable nature, then the income again becomes clubbed in your hands. The income again becomes clubbed in your hands. If you say, no, Rahul, I'm giving it on irrevocable nature, meaning it will not come back to me in my lifetime. It will not come back to me in my lifetime. Income tax says, then it is not taxable. Then it is not taxable. But if you come and tell me that, Rahul, I'm giving the asset to you, irrevocable transfer, but benefits of it will come back to me. Benefit of it will come back to me. Then in that case, income tax says clubbing will still apply. Clubbing will still apply. A very famous question which keeps coming in exam where they come and say that, Rahul, there is a person having a property. There is a person having a property, has given this property to you, irrevocable nature. Has given this property to you, irrevocable nature, will not ask it back from you. Will not ask it back from you. But the condition of this property comes and says that 10% of whatever rent comes, 10% of whatever rent comes should come to my wife. Should come to my wife. I am giving it to you. You will transfer 10% of the income to my wife. Income tax says, Rahul, it's an irrevocable transfer, but the benefit is coming back to me indirectly. The benefit is coming back to me indirectly, in which case clubbing will apply for 100% income, 10% income. For full 100% income. Rahul, only 10% came back to my wife. Does not matter. Does not matter. Full 100% is taxable. Full 100% is taxable. Are you clear? Are you clear? Yes. At the same time, please do understand the fact that because this question was relating to rent, it will be taxable under HP, which means you need to give 30% standard deduction. You need to give a 30% standard deduction. Do not confuse yourself to the fact that no, this will be taxable under IFOS. If it was taxable for her in HP, it is taxable for you in HP only. It will be taxable for you in HP only, which means you need to give all the deductions. You need to give all the deductions. One of the famous questions which ICA keeps asking is about salaries. It's about salaries, where they keep coming and telling that, boss, you know what, I've given him salary, which is going to be clubbed in my hands. This is going to be clubbed in my hands. If you take it as clubbing in your hands, great. But if you don't provide for 50,000 ka deduction, answer is wrong. Answer is wrong. Please understand, because it is taxable for her in salaries, it is taxable for you in salaries, and therefore you need to grant a 50,000 ka standard deduction. You need to grant ka 50,000 ka standard deduction. Yes or no? Yes. So the second thing which I spoke about is transfer of revocable assets, transfer of irrevocable assets with the benefit coming back to me. With the benefit coming back to me. Clear till here? Yes. Third item, I'm coming and saying any kind of remuneration which is given to a spouse. Any kind of remuneration which is given to a spouse from a concern in which I have substantial interest. I have substantial interest. So meaning I am having more than 20% voting power. I am having more than 20% voting power. From that entity, my spouse is getting salary. My spouse is getting salary. Income tax says the salary will be clubbed in my hands, the owner's hands, provided she does not have required qualifications. Provided she does not have required qualifications. Yes or no? Yes. At the same time, please do understand the fact that income tax is saying, Rahul, it is not just me holding 20%. It is not just me holding 20%. It is me along with my relatives holding 20%. It is me along with my relatives holding 20%. The example which came up in the exam is that it is a scenario where what happened is I am a person who along with my brother hold 100% shares in a company. I am a person who along with my brother holds 100% shares in a company. How, Rahul? I hold 2%. My brother is holding 98%. My brother is holding 98%. Who's the actual owner of the company? Brother. Brother is the actual owner of the company. From this company, my wife is getting salary. From this company, my wife is getting salary. Question, Rahul, this salary will be taxable in the hands of wife or husband? It will be taxable in the hands of husband. Rahul, because it is me along with my brother. It is me along with my brother having more than 20% shares. Income becomes clubbed. Income becomes clubbed. Are you clear? Are you clear? Yes. Yes. Sorry. Can we go forward? Can we go forward? Yes. This is what the clubbing provisions are. Next. I am saying, Rahul, any kind of income from transfer of assets to spouse or son's wife for inadequate consideration. So I am saying, Rahul, if you are planning to transfer any assets to your spouse or son's wife for inadequate consideration, then also income becomes taxable in your hands. The only exception to this rule is house property. The only exception to this rule is house property, because house property has been defined under HP as deemed owner, as deemed owner. So income tax said when anyway deemed ownership has been taken care of, I don't have to do clubbings. I don't have to do clubbings. So income tax is coming and saying any kind of transfer which is happening to my spouse or to my son's wife for inadequate consideration, income will be clubbed in my hands. Income will be clubbed in my hands. Please do understand the fact that inadequate consideration is a must. Is a must. If you do not have any inadequate consideration, income will not be clubbed in her my hands. Income will continue to be taxable in her hands. Yes or no? Yes or no? Next, any kind of income which is coming from proportionate profits of sole proprietorship concern in which the money gifted by the assessee has been deposited as a part of opening capital. So I am coming and saying, Rahul, I am going to give money to my spouse. I am going to give money to my spouse. My spouse is going to take this money and put it inside a business. Put it inside a business and start earning profits. Income tax is coming and saying whatever profit comes is coming because I have also put money, you have also put money. To the extent of my profits, to the extent of my money proportionately will be taxable in my hands. To the extent of her money, the income will be taxable in her hands. Please to understand the fact that if you want to do this proportionate model, it can only be done if the money which I have given to her is a part of opening capital. It's a part of opening capital, which means imagine an example where what is happening is wife has put 10 lakhs in the business. In the middle of the year, I am putting 1 lakh. Totally 11 lakhs capital. Totally 11 lakhs capital. Current year, company has earned 10 lakh ka profit. Company has earned 10 lakh ka profit. This full 10 lakhs will be taxable in the hands of wife because I am not a part of opening capital. I am not a part of opening capital. Yes or no? At the same time, Rahul, next year what will happen? Next year, her contribution is 20 lakhs. My contribution is 1 lakh. Next year, when a profit comes, this profit will now get split in the ratio of 1:20. 1:20. Correct, not correct? Correct, not correct? Yes or no? Yes or no? Yes or no? Why 20? Because she already put 10 lakhs and now profit of 10 lakhs. Yes or no? Yes. Please understand, this only will apply in case it's a sole proprietorship. This will only apply in case of sole proprietorship. It will not apply in case of partnership, Rahul, because share of profit from a partnership firm is exempt from tax. So even if it is going to be taxable in my hands, it is exempt from tax and therefore nothing can be taxed. Please understand the fact that just because clubbing happens does not mean everything becomes taxable. Because it is exempt already, nothing can be clubbed. Yes or no? Yes. In clubbing questions, please be very smart and careful about partnership related questions. Please be very careful about partnership related questions. This has happened in multiple exams where what they have done is clubbing questions, they have introduced partnership and they have suddenly tried testing you saying, Rahul, what is to be clubbed? You need to say nothing is clubbed because everything is exempt. Are you clear? Yes, can we go forward? Next, income from transfer of assets to any person for the benefit of spouse or son's wife. Like I said, if you're going to transfer assets to someone else and that benefit is going to come to spouse or son's wife, then also it is taxable in my hands. Correct. Next, any kind of income which is earned by minor child will be fully clubbed in the hands of the parent whose income is higher. But the following incomes will not be clubbed in the hands of parents. Income earned from labor or talent. Next, income earned by handicapped child. These two incomes will not be taxable in the hands of parents. It will continue to be taxable in the hands of child. Yes or no? Yes. At the same time, please do understand the fact that this whole chapter also says that if you have any kind of accretion of income, what is accretion of income, Rahul? What is accretion of income? Accretion of income is income on income. A simple example I'm coming and telling is, Rahul, 100 rupees my wife gave. I put it in an FD and FD gave me 10% interest. Number is 10. Rahul, this 10 will be taxable in the hands of wife because wife gave 100. Yes or no? Tomorrow what I'll do, I'll take this full 110 and I'll deposit in the fund. Again get a FD 10% interest. Number is 11. Now in this 11, Rahul, what will happen? 10 will be taxable for wife, 1 will be taxable for me. Income on income is not clubbed. Except if it is for except when it is for minor child. Except when it is for minor child. In the same example, if the child order income was being done, then everything gets clubbed, because child is not earning this income out of skills or talent or handicapped natures. Are you clear? Yes. So please understand that when this is an income, let's say a simple example, I'm coming and saying my child goes to Indian Idol. My child goes to Indian Idol, Saregamapa, whatever it is, the comedy shows which you have. Nowadays there is less singing than comedy. Yes, so you went to that show, and the child has earned 1 lakh rupees out of the show because of singing talent, or whatever you call it. Yes, the 1 lakh rupees will be taxable in the hands of child. Now this 1 lakh rupees is put in an FD, and 10,000 interest has come out of it, will be taxable in the hands of parent, because the 10,000 did not come from the child's skills. So 10,000 will become taxable. Rahul, is this accretion of income? Yes. Is it taxable? Yes. It is taxable. Please do be careful about it. But yes, if you are having a minor child and the income is getting clubbed in your hands, you are eligible for an exemption of 1,500 per child per annum. But this also has been taken away from you if you are going for default tax regime. In default tax regime, you cannot claim 1,500 also. Yes, this is your clubbing of income. Following up on clubbing is your next chapter called as set off of losses, where this chapter basically comes and says, Rahul, if you have any losses, you can adjust it against your incomes. The format is very simple. You need to start from intrahead, interhead, set offs of future. Yes, always as a ground rule, when it comes to losses, look from the perspective of loss, not from the perspective of income. So when I discuss this chapter with you, I will discuss from the perspective of loss. I am saying, Rahul, do you have a salary loss? No, so provisions are not applicable. Rahul, do you have an HP loss? Yes. Income tax says if you have an HP loss, you can first do intra-head adjustment, meaning against HP income. If you don't have HP income, set off against any other head except for any other head with the limit of 2 lakhs. Yes, if you are not able to set off, you will carry forward, set off against only HP income. Period of carry forward 8 years. Return filing not mandatory. Yes, Rahul, you're moving forward from HP, you're going to PGBP. Income tax says, Rahul, if you have a speculative loss, you can adjust against speculative income. If you're not able to adjust against speculative income, carry forward period is 4 years. Return filing mandatory. You have something called a specified business loss, 35AD, can be adjusted against specified business income. Not able to adjust, carry forward, adjust against specified business income. Period of carry forward unlimited years. Yes, you have unabsorbed depreciation. Income tax says adjust against PGBP income. If you're not able to adjust against any head other than salaries. Rahul, not able to adjust future year, any head other than salaries. Period of carry forward unlimited years. Return filing not mandatory. Rahul, I have a normal business loss, can be adjusted against business income. Not able to adjust against any head other than salaries. Rahul, that also not able to adjust, carry forward, adjust against only PGBP income. Adjust only against PGBP income. Rahul, period of carry forward 8 years. Return filing mandatory. Rahul, I have a loss from gambling. You cannot have a loss, first of all. If you are having a loss, ICA has made a mistake. Yes, the only place where you can have a loss from gambling is in ICA exams, nowhere else. Yes, the only place you can have a loss from gambling is in ICA exams, because technically from gambling you cannot claim any expenses. How the hell did you make loss? Yes, so you cannot ever have any loss from gambling, card games and all those things. Those losses are wrong. In ICA exams, if you see the losses, you will ignore the loss. Correct? Yes. Rahul, I have a loss from horse race owning and maintenance. I can adjust against income from owning and maintenance. Rahul, not able to adjust, carry forward, adjust against income from owning and maintenance. Period of carry forward 4 years. Period of carry forward 4 years. Rahul, I have other sources loss. I have other sources loss. In other sources, I have some other loss. In other sources, I have some other loss. Income taxes, you can adjust against other sources income. Not able to adjust against any head of income. If not able to adjust, no carry forwards. No carry forwards. Period of carry forward. Okay. Return filing. Doesn't matter. Yes or no? Yes. Please do understand the fact that I am looking only from the perspective of losses. Rahul, I have a short-term capital loss. I can adjust it against any capital gains. Any capital gains. Rahul, I am not able to adjust against any capital gains. Carry forward. Adjust against any capital gains. Same at the adjust against any capital gains. Period of carry forward 8 years. Return filing mandatory. Rahul, I have long-term capital loss. I can adjust against long-term capital gains. Not able to adjust. Carry forward. Adjust against long-term capital gains. Rahul, period of carry forward 8 years. Return filing mandatory. Return filing is mandatory. Correct? Not correct? Yes. Rahul, I am saying I have a business loss. I have a business loss of 1920. I have a business loss of 1920. I was not able to adjust, so I have brought it today. I brought it today. Current year I have a speculative income. Current year I have a speculative income. I want to adjust. Can I adjust? Can I adjust? Yes. Yes. Rahul, PGBP loss can be adjusted only against PGBP income. Speculative is a part of PGBP income. Therefore, adjustment permitted. Therefore, adjustment permitted. Yes or no? Yes. Rahul, I have a speculative loss of 1920. I want to adjust it in current year's PGBP income. Can you adjust? No, because speculative loss can only be adjusted against speculative income. You understand what is happening? Yes, always look from the perspective of loss. Don't look from the perspective of income. If you look from income, it is wrong. It is wrong. Are you clear? Yes. This is your GTI. This is your GTI. At this stage, what you get is your GTI. At this stage, what you get is your GTI. If you are going for default regime, the one rule is very simple. When it comes to SOP losses, there is no SOP loss anymore. There is no SOP loss anymore. If you have an LOP loss, you cannot do inter-head adjustments anymore. Meaning, when it is an LOP loss, you adjust against HP income, not able to adjust, carry forward and adjust against HP income. That is the only thing. Apart from that, the question comes and says, if you have any past year losses, if you have any past year losses, which is pertaining to items not under default regime, like additional depreciation, specified business, all those things, income tax says losses will get ignored. Losses will get ignored because you opted for default regime. Are you clear? Yes, yes. At this stage, what you get in your hand is called as gross total income. From the gross total income, you will have to reduce chapter 6A deductions. We're moving on to the next deductions called as chapter 6A. Yes, starting from the first deduction under chapter 6A, the first thing is section 80C. Income tax comes and says, Rahul, if you are going to have a gross total income, rule number one, you can only adjust this chapter 6A deductions against slab rate incomes. You do not have permission to adjust this against special rates, including capital gains. Capital gains also does not get any chapter 6A deductions. Rule number 2, yes, if you are going for default regime, most of the deductions are removed. The deductions which are available, I'll tell you. I will tell you, but most of the deductions are removed. Yes or no? Yes. The first section we are looking at is section number 80C. Income tax comes and says, Rahul, 80C has certain amount of deductions. The first deduction being life insurance premiums. Income tax says, Rahul, if you've taken a policy before 2012, you can pay premium up to 20% of the sum assured. If you're going to take a policy after 2012, you can pay 10% of sum assured. But if you've paid it for handicapped people, it is 15% of sum assured with an overall limit of 1,50,000. Rahul, 80C other items. Employee contribution to RPF, PPF, SPF. Next. Contribution to Suganya Samriddhi scheme. Next. Principal repayment of housing loan. Next. Tuition fees paid for 2 children, education in India. Next. 5 years savings, term deposits. Next. National savings certificate. All kind of contributions. Yes or no? Yes. Which means in exam, Rahul, if you see some item which you don't understand, ask yourself, Rahul, is it a donation or a contribution? Is it a donation or a contribution? If you find it as a donation, it is 80G. If you find it as a contribution, it is 80C. That is what the answer is. That is what the answer is. Yes or no? Yes. At the same time, please do understand the fact that you can only take life insurance policy for self, spouse, children, self, spouse and children. Parents not allowed. Parents are not allowed. This is for life insurance policies. Adu thavara, all these deposits you make, certificates and all you make can only be made for self, cannot be made for anyone else. Cannot be made for anyone else. If a question comes and says that you are making a deposit, for your son, income tax will say not allowed. Not allowed, because you should make deposits only for self, not for anyone else. Not for anyone else. Clear? Yes. Rahul, after 80C you have 80CCC. 80CCC says pension fund. Says pension fund. NTCCC comes and says if you are going to contribute to any pension fund, whatever you contribute is fully allowed as deduction, subject to a limit of 1,50,000. Then you have something called as 80CCD. Income tax comes and says if you are going to contribute to national pension scheme, two people can contribute. Self, employer. Rahul, if self is contributing, you can contribute first 50,000 free deduction. First 50,000 free deduction. After 50,000, you can contribute up to 10% of your salary. 10% of your salary. Rahul, if you are not contributing but employer is contributing, employer can contribute 10% of salary. 10% of salary. If the government employee, then it is 14% of salary. 14% of salary. Rahul, salary means basic plus DA forming part. Basic plus DA forming part. Yes or no? Yes or no? Please be careful about this fact. If you are going to contribute, employer can contribute 10% of salary. Employee can contribute 50,000 plus 10% of salary. 50,000 plus 10% of salary. Is this clear? This is clear. Rahul, also if employer contributes more than 10% of salary, income tax says it will be disallowed under PGBP. It will be disallowed under PGBP. You are not permitted to contribute more than 10% of salary. If you do contribute more than 10% of salary, income tax will say disallow it under PGBP for employer. Is this clear? Is this clear? Yes. Next, Rahul, you have an overall limit called as 80CCE. Income tax comes and says, Rahul, when you are contributing under CCC, CCD, employer and employee 10%. Overall, you can only pay 1,50,000. Which means, Rahul, if you want to contribute under these funds, you can contribute 1,50,000 overall, plus 50,000 of employee, plus employer. Yes or no? Yes or no? So you can contribute three components: 1,50,000 overall, plus 50,000 for employee contribution, plus 10% for employer contribution. Yes or no? Yes or no? Rahul, at this stage, if you are going to follow default regime, you will not get 80C, you will not get 80CCC, you will not get 80CCD 1B, meaning you will only get employer contribution. No 50,000, no 1,50,000, you will only get 10% of salary. Are you clear? Yes. Rahul, next amendment for the current year is your Agniveer Corpus Fund, where income tax comes and says if your government is going to contribute something to Agniveer Corpus Fund, whatever government contributes will be fully allowed as deduction. Whatever you contribute also will be fully allowed as deduction. If you are opting for default regime, you cannot contribute, government can contribute, which means government contribution will be allowed as deduction even under default regime, but self contribution will not be allowed as deductions. Clear? Yes. Next thing in the book is called as 80D, which is medical insurance. Understand, this is not life insurance, this is medical insurance. Medical insurance provision comes and says you can contribute for self, spouse, dependent children in one bucket. Self, spouse and dependent children in one bucket, and any parents dependent or independent in second bucket. Rahul, in one bucket you will get a deduction of 25,000 each. But if any bucket has a resident senior citizen, the bucket will get 50,000 each. Which means, Rahul, in my bucket there is no senior citizen. My parents' bucket there is a senior citizen. My bucket I will get 25. Parents' bucket will get 50. Total will become 75. Rahul, my bucket also has senior citizen. Parents' bucket also has senior citizen. My bucket I will get 50. Parents' bucket will get 50. Total will get 1 lakh. Clear? Yes. Rahul, how will this bucket work? How will this bucket work? Income tax said, Rahul, in this bucket you can put 4 items. You can put 4 items. Item number 1 is called as medical insurance premium. So any premium which you pay will be allowed as deduction. Bucket number 2, you can pay any contribution to CG health scheme. And finally you can pay something called as preventive health checkup, with the condition that you can only pay more up to 5,000 for both buckets. 5,000 for both buckets. Rahul, which bucket you want to utilize is your choice. But you can only pay 5,000 for both the buckets put together. Now Rahul, if you are going to pay medical insurance premium, you can only pay it other than by cash. If you are going to pay to central government health scheme, you can pay it anything other than by cash. But if you are going to pay preventive health checkup, you can pay it by cash also. Yes or no? Yes. Finally, you have something called as medical expenses. Notice this line very carefully. I am saying, Rahul, medical expenses provision says that if you are a senior citizen who does not have an insurance, you can claim expenses. Who are you? You are a senior citizen not having insurance, therefore you can claim expenses. Clear? Yes. Rahul, question came in exam where it came and said, I am a senior citizen. I have an insurance worth 50,000 rupees. But I have also incurred medical expenses of 60,000. So I have incurred an insurance premium of 50,000 and a medical expenses of 60,000. Rahul, the deduction which I will be eligible for is for which 50? This 50, that 50? You will only be eligible for insurance. You will not be eligible for expenses. It is not whichever is higher. It is not whichever is lower. It is because insurance irukana, expenses podu mudiyadu. You understand what I'm saying? Yes. This is one of the MCQ questions which came in November 23, where it came and said there is a person who's getting in medical insurance. He paid 20,000 rupees from his pocket for insurance premium, but he also paid 30,000 rupees as medical expenses. Yes, people jumped and they came and said, yes, 30,000 allowed as deduction. It is not because you have an insurance, you cannot take expenses. It is not whichever is higher, it is not whichever is lower. It is if insurance is there, you cannot claim expenses. Clear? All expenses also should be paid other than by cash. Are you clear? Yes. Now all, if I paid bulk premium, not for current year, for many years, income tax says for every year which the policy is alive, take a split. Meaning I am coming and saying, Rahul, if I have taken the policy on 1st April, and the policy will go till 31st March of 3 years later, I will divide the premium over 3 years. But if I am taking the policy on 5th April, and it goes till 4th April of 4 years later, in that case, I will take the split for 4 years. Understand? Policy may be valid for 3 years, but in financial year terms, policy is there for 4 years. So you will get the reduction in 4 years. Are you clear? Yes. Don't get intimidated by the question where the question comes and says, Rahul, the person has taken the policy in 5th April, valid for 3 years. You will still divide it by 4 years because financial year terms it is 4. Are you clear? Rahul, 80D, default tax regime, eligible, not eligible? Not eligible. We are moving on forward to 80E. We are moving on forward to 80E. We are looking at interest on loan. Income tax is saying if you are going to take a loan for higher education, whatever interest you pay is allowed as deduction. Whatever loan you pay is not allowed as deduction. Whatever interest you pay is allowed as deduction. Whatever loan you pay is not allowed as deduction. Rahul, loan should be taken for self, spouse, children, guardian children. Yes, children for which you are the guardian. You can claim the deduction for 8 years. No cap on the limit. Every number is allowed. Please be very careful in exams. You can only claim interest, cannot claim loan. Rahul, 80 default regime. Not eligible. Next is your 80EE and 80EEA. 80EE and EEA. With the new trend going on, EE is not being tested for exam, so I am more worried about EEA. The provision of EEA comes and says that if you are going to have a house property, for which you are going to incur interest, first park interest into HP, then whatever interest you are not able to claim, or in ICA terms, whatever is more beneficial, will be allowed as deduction under EA up to a limit of 1,50,000. Conditions to be satisfied are as follows. You need to take a loan from 2019 to 2022. You need to take a loan between 19 to 22. The stamp duty value of the property has to be less than 40 lakhs. 45 lakhs has to be less than 45 lakhs. Stamp duty value has to be less than 45 lakhs. Yes or no? Yes, yes. This is what the conditions are. In all practical sense, if a number is put in HP, you should not bring it to here. But ICA comes and says, let's put it here first in case it is more beneficial. So work with those logics. Yes or no? Yes. Next follow up is your 80EB. Which comes and says if you're going to take a loan for electric vehicles, whatever interest on loan which you have paid on the electric vehicle can be claimed as a reduction up to 1,50,000, provided the loan is taken between 19 to 23. Yes or no? This is what your conditions are. Rahul, EEA and EEB eligible, not eligible? Default regime not eligible. Default regime is not eligible. Clear? Yes. Moving on back, we have something called as 80DD. Along with 80U. Income tax says, Rahul, if you are going to have a handicapped person, and you are taking care of the handicapped person, or if you are itself handicapped, if you are going to incur expenses for treating the handicap, or you are going to incur expenses to maintain the handicap, either ways. So treating, maintain, whatever it is. If you are going to take care of someone, you will get a deduction of 75,000. Rahul, this deduction of 75,000 is a flat deduction. Flat deduction means I don't care how much you incur. Whether you incur 1 rupee or 1 crore rupee, I will only give 75. This is the only section in the whole Income Tax Act where it is not a maximum limit. It is a flat number. I will give you only 75. You pay 1 lakh rupees or 1 rupee or 1 crore rupees, you will only get 75. It's a flat deduction. But if you come and tell me, no, Rahul, the person who's getting treated is a seriously handicapped person, having disability more than 80%, in that case you will get 1,25,000. Correct? Yes, Rahul. Now this same rules will apply in case you are also handicapped. And you're treating yourself, you can claim a deduction of 75,000 or 1,25,000. The only difference is that if you are claiming your handicap, someone else should not claim your handicap. Anyone can claim. Rahul, this deduction, default regime, not eligible. Yes. Then you have something called as 80DDB. Where it comes and says if you are going to pay expenses for specified diseases, then in that case, if you are found to be a resident senior citizen, you can claim a deduction of 1 lakh rupees. But if you are found to be any other person, you can claim a deduction of 40,000 rupees. Only for specified diseases. Link this to your employees' medical reimbursement. If the employer pays this, then it is fully exempt. But if you pay it yourself, you can claim DDB. Clear? Now DDB, default regime, not eligible. We are moving on forward to something called as 80G. Income tax comes and says if you are planning to make any donations, let me know what kind of donations are you making. If you make a donation to national or minister funds, I will give you 100% without any limits. Starting current year, if you make donation to national prime minister drought relief fund, if you're going to make a donation to prime minister drought relief fund, you will get 50% without any limits. Until last year you had some Nehrus and some Gandhis and all. Forget all those people. They are gone. We are also not bothered. Yes. Now the conditions are, if you are going to pay any kind of donation to prime minister or national kind of funds, it is 100% without any limits. But if you are going to pay donation to prime minister drought relief fund, it is 50% without any limits. Please understand, if it is prime minister national relief fund, it is 100. But if it's prime minister drought relief fund, it is 50. Apart from this, if you are going to make any donations to family planning or Olympics, then it is 100 with limits. And if you are going to make donations to any charitable organizations, it is 50 with limits. Rahul, what the hell is this limits? Income tax comes and says, tell me what your total income is. Tell me what your total income is, excluding ATG. Excluding ATG. This total income you can donate up to 10%. This total income you can donate up to 10%. So I am saying, Rahul, tell me what my total income is. If you tell me my total income is 1 lakh rupees without claiming ATG, 1 lakh 10% is 10,000. This is what I can donate. This is what I can donate. If I am donating 15,000 rupees, income tax will say you can only donate 10,000 rupees, and if the donation of 15,000 has happened to charitable organization, income tax will say you can donate only 10,000 rupees. Deduction is 50%, therefore 5,000 rupees. Therefore 5,000 rupees. Are you clear? Yes, be careful about this. Your donations are important. It comes for exams. It comes for exams. Rahul, if you are going to make a donation, please ensure that the donation is made only in cash terms. It should not be in kind, because if it is in kind, then you cannot get any donation deductions. Second, donation should happen only by permissible payments more than 2,000. If it is less than 2,000, you can make by cash, but if it's more than 2,000, you have to do it by permissible payments. Yes or no? Rahul, donation of ATG, default regime, not eligible. Next is your GGB and GGC. GGB and GGC, which comes and says any donations. What is GG? Scientific research, your GGB and GGC. GGB and GGC comes and says that if you are going to make any kind of donations to political parties, then whatever donations you make to political parties can also be claimed as 100% deduction, provided no donations are made by cash. No donations are made by cash. Rahul, default regime, not eligible. Then you have GGA, which comes and says if you are not claiming scientific research expenses, but you still make donation to scientific research, whatever donation you make is also 100% allowed as deduction, provided less than 2,000 is by cash. Rahul, default regime, not eligible. Then you have something called as ATGG. I told you to not read for exam purpose because it is not important. Simple, straightforward. If you get no HRA, then ATGG comes into picture. You will not get a question without HRA, which means ATGG. Forget it off. Rahul, ATGG, default regime, not eligible. After G comes you are moving on to heading C. We are looking at this important thing from exam perspective called as ATJJA. Very, very important from exam perspective, because ATJJA is eligible under both default and alternate. Income tax is coming and saying, if you tell me that you are a person planning to employ new people in your company, I will give you deduction of 30% of their employee cost over next 3 years. I'm going to give you 30% of their employee cost over the next 3 years. Following conditions to be satisfied. Condition number 1, employee should not get salary more than 25,000 per month. Condition number 2, whatever salary you give to employee should not be paid other than by permissible modes. Condition number 3, employee should be participating in PF. And condition number 4, employee should be working in the company in the current year for more than 240 days or 150 days if you are going for footwear or leather industry. Rahul, employee work for less than 240 in the current year or less than 150 in the current year, no problem. You can treat him as employee in the next year. Provided he works for 240 in the next year and 150 in the next year. 240 in the next year and 150 in the next year. Yes or no? Please be careful. What I am going to give you as a deduction is the total salary cost multiplied by 30%. Total salary cost multiplied by 30% over next 3 years. Yes or no? In simple words, Rahul, it is additional employees into their salary eligible into 30% over the next 3 years. Clear? Yes. Please do practice such questions, because ATJJA is extremely important. You got this in MTP number 1 MCQ. Yes. By the way, MTP number 1 MCQ ATJJA number is wrong. Okay, if you're trying to figure it out and you're trying to not get the answer, it's because the answer is wrong. Okay, so don't worry about it. ATJJA would answer in your MTP number 1. You get an answer, it is 81,72,000 something. If you're getting 81,72,000, it is right. Yes, ICI would have come and put 75 lakh something, wrong answer. You try your head and tail, it will not come. Yes, sometimes I say also loves to confuse you people. Okay, it is not coming. It is a wrong answer. Yes, nevertheless, be confident on your own logics. Clear? Clear?
Yes, sir.
Can we go for? Yes. After ATWCW comes in your other items called as QQB and RRB. Income tax comes and says, Rahul, if you are planning to receive royalty, from two cases, either from books or from patents, each person can claim royalty deduction of 3 lakh rupees. Each person can claim a deduction of 3 lakh rupees. Some conditions to be followed. Condition number 1, if you are going to receive this royalty from foreign countries, you need to receive the royalty within 6 months from the end of the previous year. You need to receive the royalty within 6 months from the end of the previous year. Second, if you are going to receive the royalty in lump sum payments, then the royalty is actually allowed as it is. But if you are going to receive the royalty in recurring payments, you need to receive whatever it is, but you can only get a deduction of up to 15% of the sale value. 15% of the sale value. Yes or no? Yes. Please be careful about this. There is one question about this in your study material. Please to try that question once. It is something about 2,88,000, 40,000 remove panna, 2,40,000 maro and the mari question. Yes, those question is important because it comes in compulsory multiple times. Please to practice that question. Yes, Rahul, 80 QQB RRB, eligible, not eligible? Not eligible under default. Leaves you with the last section under your chapter 6A called as 80 TTA and TTB. Income tax comes and says, Rahul, if you are going to receive any interest on savings, you can claim a deduction under 80 TTA for non-senior citizens. Up to a maximum of 10,000. But if you are going to receive any kind of interest on all deposits, and you classify yourself as a senior citizen who is a resident, you can claim a deduction of 50,000 under 80 TTB. Rahul, will this be given in the question? No. You will be given the interest. You need to be smart to claim the deduction. These are all silent adjustments. Rahul, 80 TTA, TTB for default regime. Not eligible. Rahul, in simple words, if I have to tell you what is eligible for default regime, it is only 3 components. One is 80 JJAA, one is 80 CCD employer NPS, and one is 80 CCH government Agniveer scheme. These are the only 3 deductions which you can claim under default regime. Nothing else is eligible. Are you clear? Good to go. Great. Moving on to the next chapter called as 10AA. If you have to complete this chapter in a single line, I have to come and say you, Rahul, you need to be an SEZ. If you are an SEZ, Rahul, whatever unit profit you get, this profit will be allowed as a deduction for first 5 years 100%, next 5 years 50%, other next 5 years 50%. Is all the provisions are. Rahul, what can you claim as a deduction? You can claim 100% of export profits, 50% of export profits. Rahul, what is 150% of export profits? Export profits is profit of the SEZ multiplied by export turnover by total turnover. Yes or no? Yes. Now, all profits of the SEZ multiplied by export turnover of SEZ divided by total turnover of SEZ. If you get a question where they come and say, Rahul, DTA unit is also there. DTA is domestic tariff clearance unit. Yes. In that also there is some exports happening. You will say ignore. You only want profits of SEZ, turnover of SEZs. Yes or no? Yes. Now in this, Rahul, total turnover means all turnovers. But when it comes to export turnover, current year has an amendment. The amendment in the current year comes and says that when you have an export turnover, you need to receive this export turnover within 6 months from the end of the previous year. You need to receive this turnover within 6 months from the end of the previous year. Only then will you take it in the numerator. It will still be a part of denominator, but you will only take it in numerator if it is received within 6 months from the end of the previous year. Yes, one question which came in MTP number 1, your MCQs, which comes and says that, Rahul, there is a person who did an SEZ unit. In that SEZ unit, his turnover was 3 crore 50 lakhs from exports. Out of which only 2 crores was received by 30th September. You will in numerator take only 2 crores. You will take in numerator only 2 crores because that is what you received within 6 months. Clear? Yes. Now, Rahul, it is export turnover divided by total turnover. Export turnover is the money which you receive within 6 months from the end of the previous year. Total turnover means all turnover. But yes, if you have any expenses if you have any expenses like telecommunication expenses or any kind of freight expenses and all which you have paid outside India, this will be removed from both total turnover and from export turnover. It will be removed from both total turnover and from export turnover. You will remove it from both the places. Are you clear? Yes. At the same time, then the second amendment of the current section 10AA comes and says that if you want to claim 10AA deductions, you need to ensure that you file your returns on time. If you don't file your returns on time, no deduction under 10AA. At the same time, if you don't file your returns on time, no deduction under 80JJAA, QQB and RRB also. Those three deductions will also be taken away from you because these are important. Are you clear? Yes. Rahul, 10AA default regime. Not eligible. Yes or no? Yes. Rahul, from your gross total income, if you remove this 10AA and chapter 6A, you arrive at your total income. From your total income, you will multiply your tax rates, step number 9, 10 and 11, which is what we did. Yes. In your 11 leaves you with something called as AMT. Rahul, what is AMT, Rahul? Income tax is coming and saying, take a simple example. I am coming and saying, Rahul, you have computed your tax payable as 100. So you are telling as per your normal tax regime, your tax payable is 100. Government is saying, no, I actually have some expectations out of you. I want you to pay 120. This expectation is called as AMT. Rahul, in this case, you will end up paying 120. You have paid extra 20. Next year, what happened is you had a tax payable of 300. Government expected you to pay 350. You will end up paying 350. You have extra paid totally 70. In year number 3, you have an expectation of paying 400. Government is expecting you to pay 380. You will end up paying. Will you pay 400? No, because you will say, government, sir, when I was paying lesser, you expected me more. Now, when I am paying more, you have to give me back my advance. How much extra did I pay? 20, 50, totally 70. So I am saying, sir, I am not paying you 70. I am not paying you 70. So I am saying, Rahul, remove 70. Number becomes 330. Can you pay 330? Government will say, pay 380. So you have to end up paying 380. Rahul, how much have you still not paid? You have used off 20, which means you have still not used 50. Correct, not correct? Yes. In year number 4, I am coming and saying I am ready to pay 500. Government is saying pay only 100. You will say the government, sir, I have already paid extra 50. Remove the 50. I will now pay 450. Rahul, government is expecting only 100. I will pay only 100. No, you will pay 450. Yes or no? What you did right now is called as AMT along with AMT credit. In simple words, Rahul, income tax is coming and saying, when you are expecting someone to pay 100, but government is expecting to pay 150, pay whichever is higher. But when you end up paying higher, whatever higher you pay is becoming your advance. Payment to government, which is called as AMT credit. In the future, when you are ready to pay more, you can adjust this credit by ensuring that you don't pay anything lesser than what government is expecting. By ensuring that you're not paying anything lesser than what the government is expecting. At the end of the day, if you end up paying more to government is always happy. Yes or no? Yes. Now all this AMT credit which you have can be utilized for a period of 15 years. Meaning in 15 years, if you're not able to adjust the advance, government will say, my money, I will keep it forever. I'm not going to give you the adjustment. I'm not giving the adjustment. Yes or no? Rahul, how did you arrive at this 120? Income tax is, AMT is 18.5% of the adjusted total income. It is 18.5% of the adjusted total income. Rahul, what do you mean by adjusted total income? Adjusted total income means total income. Add any kind of heavy deductions like 10AA. Add 35 AD. Scientific is not heavy. 80 JJAA. QQB. RRB. RRB. Add all these items up. This is your adjusted total income. This is your adjusted total income. But please to understand, when I say add 35AD, when I say add 35AD, I told you to remove your capital deduction, which means I need to give you the depreciation on 35 AD assets. Depreciation on 35 AD assets. Depreciation on 35 AD assets. This number will arrive at your ATI, on which you will do 18.5%. On which you will do 18.5%. Please understand, after 18.5%, you also need to add surcharge and cess if applicable. You need to add your surcharge and cess if applicable. Yes or no? Yes or no? Rahul, default regime AMT is not applicable. So AMT credit is also not applicable. AMT credit is also not applicable. Clear, not clear? Yes. So I'm giving you an example where I'm coming and saying, take an example where a person is having an AMT normal default. Yes, as a smart CA, you are going to tell me, Rahul, which one should be paid? Which one should be paid? I'm saying my normal is, my AMT is 100, normal is 200, default is 150. You should pay. 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 You should pay 150. Rahul, why? Hey, under normal, you are supposed to pay 200. Under default, I'm asking you to pay 150, whichever is lower. Whichever is lower. Correct, not correct? Correct, not correct? Rahul, I'm saying my AMT is 100. My default is, normal is 150. My default is 200. I'm asking you to pay 150. But the problem is, since you paid 150, you will get 50 ka AMT credit. Correct, not correct? Yes. Rahul, I am saying my AMT is 200, my normal is 100, my default is 150. I will pay 150. When I know my default is asking me lower tax, why will I pay higher? So I'll pay 150. Correct? Yes. Rahul, I am saying my AMT is 200, my normal is 150, my default is 100. I will pay 100 because default is asking me lower. Default is asking me lower. Any combination else? 150, 200, 100. I will end up paying 100 because default is lower. Rahul, 150, 100, 200.
150.
I will end up paying 150. Hey, no, this is not actually AMT credit. Sorry, normal is higher, no? This one is AMT credit. This one is 150. Here you will get a 50 AMT. Here you will get a 50 AMT. Yes or no? Yes or no? Yes or no? Yes or no? Yes. In simple words, Rahul, it is step 10 versus step 11, whichever is higher, versus step 9, whichever is lower, versus step 9, whichever is lower. Yes. Or in simple words, Rahul, it is coming and saying, when it comes to your alternate regime, you have no options but to compare with the AMT, whichever is higher. But at the same time, when you are looking for default regime, overall tax is lower, so pay default tax off. Pay default tax off. Are you clear? Are you clear? No confusions. No confusions. Can we proceed forward? Can we proceed forward? Yes. Rahul, if you are done with AMT, if you're done with AMT, you have arrived at your tax liability. On this tax liability, you're now going to add your TDS credit, advance tax credit, self-assessment tax credit, AMT credit, AMT credit, AMT credit. Yes or no? Yes. We are discussing about what is called as payment of taxes. We are discussing about what is called as payment of taxes. Income tax came and told Rahul, if you are going to have a tax liability, you are liable to pay something called as advance tax. You're liable to pay something called as advance tax. Rahul, when will you pay advance tax? You will end up paying advance tax if your advance tax liability has gone more than 10,000 rupees. If your advance tax liability has gone more than 10,000 rupees. Rahul, what do you mean by advance tax liability? It means your total tax liability minus TDS minus AMT credit. Minus TDS minus AMT credit is your advance tax liability. Is your advance tax liability. Please do understand the fact that when you talk about TDS credit, it is TDS deducted. It is TDS deducted. It is not TDS estimated. It is TDS deducted. After deducting your TDS, whatever is the advance tax liability, if it goes more than 10,000 rupees, you are asked to pay advance tax. You are asked to pay. Yes, it will be advance tax payable. It will be advance tax payable. Rahul, how do you pay your advance tax? You pay it on 4 quarters. You pay it on 4 quarters. First quarter, 15th. April, May and June, 15th. June number is 15%. Then July, August, September you will pay on 15th. September 45%. October, November, December you will pay 15th. December 75%. And Jan, Feb and March you will pay 15th. March 100%. Yes. So it is 15th of the last quarter month. 15th of the last quarter month. It is 15, 45, 75 and 100. But yes, if you are opting for presumptives, there are 3 kinds of presumptives. If you are opting for business presumptive or profession presumptive, you can only pay the last installment. But if you are opting for transport operator presumptive, you need to do all 4 installments. Yes or no? Yes. Rahul, what if I don't pay advance tax? Income tax says I will levy something called as 234C. I levy something called as 234C. Yes, if you don't pay your advance tax installments, I will levy 234C. Rahul, how will it be levied? They come and say, Rahul, for every month which is defaulted, you have to pay interest at the rate of 1% per month or part thereof, until the next installment. Yes, so which means I am coming and saying, Rahul, for the first installment, you have to pay 15. Assuming I paid 10. Income tax will say balance 5 kamala, put 1% interest for the next 3 months, because next quarter is 3 months later. Yes, second installment I have to pay 45. I paid only 20. Income tax will say 25% kamala, 3%. Next installment I have to pay 75. I paid only 50. Income tax will say 25% kamala, 3%. And last one I have to pay 100. I paid only 90. Income tax will say 10% kamala, only 1%, because March is only left. So you will have to pay interest accordingly. Correct, not correct? In the same fashion, income tax has also given you special limits. Where they are coming and saying, for first quarter I was asking you to pay 15. If you pay at least 12 also, I am okay. I will not levy you interest. But if you end up paying anything lesser than 12, you will have to pay interest from full 15 to shortfall. Yes or no? Yes. In my example, when I told Rahul 15 is what you have to pay. If you end up paying 13, income tax will say no interest. If you end up paying 9, income tax will say full difference of 15 to 9 will become interest. Clear, not clear? Yes. Rahul, for the second installment, 45, they have given a limit of 36%. So if you pay 36%, I will let you go, no interest for you. But if you pay anything lesser than 36%, start from 45 till the shortfall. You have to pay interest. But Rahul, is it possible that every time you will know advance tax for every tax payables? No. Income tax has told some incomes it is enough if you pay the advance tax from the quarter in which you earned the income. Example: casual income, capital gains, first time earned business income, and dividends. So for all these 4 cases, income tax is coming and saying, I don't want you to pay advance tax from first quarter. You can start paying from the quarter in which you got the money. Pay YTD. So if you have got it in quarter 3, 75% you pay right now, and then you proceed forward. Yes or no? This is what the provisions are. When it comes to 234C. Now Rahul, is advance tax payable by everyone? Answer is no. Income tax came and told 2 conditions. Advance tax liability is less than 10,000, or second condition, you should be a resident senior citizen not having PGBP income. If you are a resident senior citizen not having PGBP income, also not required to pay advance tax, you can pay self-assessment tax. Are you clear? Yes. Now Rahul, if you are not paying your advance tax after 31st March also, income tax will now levy something called as 234B. Where income tax comes and says, after 31st March, whatever is pending in your payments, you will be levied interest at the rate of 1% per month, part thereof, for every month until you pay your self-assessment tax. Rahul, if you are going to pay your self-assessment tax, the order of set off is as: first adjustment against piece, second adjustment against interest, then final adjustment will happen against tax payments. Then final adjustment will happen against tax payments. Are you clear? Are you clear? Yes, yes, yes. This is what your provisions of tax payments are. This is what your provisions of tax payments are. Any kind of advance tax shortfall which you have, multiplied by 1% per month or part thereof. Multiplied by 1% per month or part thereof till the date on which you pay the self-assessment tax. But when you pay the self-assessment tax, please do ensure that you also pay first the fees, then the interest, then the tax. Then the tax. Second thing, income tax comes and says whenever you compute interest, whatever tax payment you have should be rounded down to nearest 100. Rounded down to the nearest 100. When you compute interest under any section, tax on which is to be calculated shall be calculated by rounding down to the nearest 100. By rounding down to the nearest 100. Only then will you compute your interest. Only then will you compute your interest. After you do all this, total income should be rounded off to the nearest 10. Final tax should be rounded off to the nearest 10. Final tax should be rounded off to the nearest 10. Clear? Clear? No confusions? All good to go? Yes, this is what your payment of taxes are. This is what your payment of taxes are. Assuming you pay your taxes on time, now comes up your return filing. Now comes up your return filing. Yes or no? Yes. The final 2 chapters of your syllabus comes and talks about your return filing. The first chapter of return filing comes and says, Rahul, if you are going to file your returns, who should file the returns? Who should file the returns? Income tax says, Rahul, if you are a company and a firm, mandatory filing of returns. But if you are any other person, if your gross total income, ignoring any capital gain exemptions, if your gross total income, ignoring any capital gain exemptions, is more than basic exemption limit, please file your returns. Please file your returns. Yes, what is it? My gross total income, ignoring my capital gain exemption. Yes, should be more than my basic exemption limit. Then in that case, you have to file your returns. But regardless of that, income tax has put in some special rules. Income tax has put in some special rules where they've come and told for all these special cases, you mandatory have to file a return even if all conditions are not satisfied. Even if all conditions are not satisfied. What are the exceptions, Rahul? If you're going to deposit more than 1 crore in current account, mandatory file return even if no conditions are satisfied. If you are going to deposit 50 lakhs in savings account, mandatory file return even if no conditions are satisfied. If you are going to incur 2 lakhs for foreign travel, mandatory file return even if all conditions are not satisfied. Incurred 1 lakh for electricity, mandatory file return even if no conditions are satisfied. Notice, it says incurred, meaning I am looking at the person who pays. I am not looking at the person who enjoys. If the father has paid 2,50,000 ka travel ticket for son, the person who will file the return is father, not the son. Yes or no? Yes. Please understand, the person who pays is the person who files. It's not the other way round. Yes or no? Yes. Next, I am saying any kind of total sales turnover or gross receipts is in business more than 60 lakhs and in profession is more than 10 lakhs. Please mandatory file your returns. Any kind of TDS or TCS which you are having in your books, any kind of TDS or TCS which you are having in your tax books, 26 years. If it is more than 50,000 for resident senior, file returns. More than 25,000 for others, mandatory file returns. And if you are none of this, but you are a resident or an ordinary resident having assets outside India, you have to mandatory file returns in India. No exceptions, no limits. Are you clear? Yes. Now, Rahul, if I have to file a return, tell me when to file a return. Income tax says if you are liable for audit, file by 31st October. If you are not liable for audit, file by 31st July. Rahul, if you are opting for presumptive, file by 31st July. Rahul, if you are liable for audit as a firm, partners will also file on 31st October. Rahul, which partner? Sleeping partner or active partner? Both the partners will file on 31st October. Yes, the provisions are coming and saying if a firm is liable for audit and is filing on 31st October, partner will also file it on 31st October. Whether you call him a sleeping partner or active partner does not matter. Rahul, company will file on 31st October. Company will file on 31st October. Salary person will file on 31st salary person will file on 31st July. Salary ki engada audit vanduchu 31st July. Yes or no? Yes or no? Rahul, these are what your due dates are. These are what your due dates are. Rahul, I forgot to file my return. I forgot to file my return. I have an option to file belated return. I have an option to file belated return by 31st December of assessment year. By 31st December of assessment year. If I file it by 31st December of assessment year, I can file a belated return. But if I am filing a belated return, some problems will come. Some problems will come. Problem number 1. No carry forward of losses. Problem number 2. I will not get 80 JJAA, QQB, RRB, 10 AA. Problem number 3. I have to pay interest under section 234A. Income tax comes and says, Rahul, if the due date is crossed and you have still not filed your returns, and you have a tax payable, whatever is your tax payable after the return filing due date, multiply by 1% per month or part thereof till the rate on which you file your returns. I need additional interest. Now this interest is over and above B. Because B is also not paid yet. Not paid self-assessment tax yet. Yes or no? So B will also levy, A will also levy, both will come until you file your returns from the date on which your return filing due date is over. Yes, and issue number 4. You will now get a late filing fee of 5,000 rupees. You will get a late filing fees of 5,000 rupees. But if you come and tell me that your total income is less than 5 lakhs, is it not there in the book? Ilya, tukidanglo.
Total income less than
Page 172. Page 172. If you don't file your returns on time, you will have to pay a late filing fees of 5,000 rupees. But if you end up being a total income less than 5 lakh rupees, meaning old regime rebate, you have to pay only a late filing fee of 1,000 rupees. Yes or no? Yes. These are your issues if you don't file your returns on time. Yes. Rahul, I filed a return, but by mistake there are mistakes. I can file a revised return. There are mistakes, so you can file a revised return until 31st December of assessment year. You can file a revised return. Rahul, I already filed a revised return once. Can I revise it once again? Yes. Unlimited revision until 31st December. Rahul, I filed a return late. I want to revise late return. Can I revise late return? Yes. Any returns can be revised, whether it is original or belated. But Rahul, just because I filed a revision for belated return, will revised return become original return? Will revised return become original return? No. Revised return will be belated return. Revised return will be called as belated return. In simple words, Rahul, whenever you file a revised return, the revised return assumes the characteristics of original return. So if you file a revision for original return, it is called as original return. If you file a revision for belated return, it is called as belated return. Yes or no? Rahul, can I revise a revised return? You can do any revisions. Clear? Yes. Sorry. Okay. Yes. Rahul, I filed a return and there are some mistakes. Income tax will assume this return to be a defective return. Income tax will give me time until 15 days to correct my mistakes. If I correct my mistakes in 15 days, income tax will say return is valid. But if the mistakes are not corrected in 15 days, income tax will assume return is not filed itself. Return is found to be void ab initio. Yes or no? Yes. This is what your defective return rules are. Post this came in an amendment 2 years back, which calls itself updated return, where income tax came and said, boss, if you are going to not file a return, or if you file a return but you did not disclose proper incomes, you are cheating government or you're trying to evade taxes. You are given an opportunity for the next 2 years to file an updated return. The due date for filing updated return is 2 years from the end of the assessment year. Understand, you can file updated returns only if there is a tax payable. Only if there is a tax payable. There should be mandatory tax payable. There should be mandatory tax payable. Something should be payable. Something should be payable. Rahul, I have a loss. I want to reduce my loss. Can I file a return? No, because tax payable will be 0. Yes or no? Yes. Rahul, I have a loss. I make it income. Can I file an updated return? Yes. Rahul, I have an income. I want to reduce my income. Can I file an updated return? No, because if I'm going to reduce my return income, it is going to end up in a refund. Can I file an updated return? No. Understand, you only can file a return if the return ends up in a tax payable. Why, Rahul? Because income tax comes and says, if you are going to file an updated return within the 1 year from the assessment year, within the 1 year from the assessment year, you have to pay total tax of 125% of the tax payable. You have to pay total tax of 125% of the tax payable. Meaning, Rahul, originally your return said you have to pay 5 lakh rupees. Originally your return had to pay 5 lakh rupees. Income tax says because you're filing it as updated return, you are trying to correct your mistake which you otherwise cheated me for. You're trying to correct your mistakes which you are otherwise cheating me for. You have to pay 125% of your 5 lakh rupees. You have to pay 125% of your 5 lakh rupees. So 5 lakhs plus another 25%. 5 lakhs, other 25%. Clear? Yes. Rahul, if you file a return after the first year, meaning you're filing it in the second year from the assessment year, income tax says it is 150% of the tax payable. It is 150% of the tax payable, meaning number will become 7,50,000. Number will become 7,50,000. Yes or no? Yes. In exam perspective, updated return is not so important except for MCQs. Except for MCQs. You may get a question in exam where it comes and says the person's tax payable is 5 lakh rupees. He is filing the return for AY 21-22. He is filing the return on AY 21-22 by 31st December 23. By 31st December 23. It is in the second year. It is in the second year. Therefore, you have to pay 150% of the tax payable. MCQ question. MCQ question. Keep that in mind. Yes or no? Yes or no? Yes or no? Yes. Great. Rahul, who can all file the returns? Who can all file the returns? If it's an individual, individual will file his own return. If the individual is a minor, filed by guardian. Filed by guardian. Rahul, if the individual is a non-resident, filed by authorized person. Authorized person. Rahul, individual is of unsound mind, filed by guardian. Rahul, person is an HUF, filed by Karta. Rahul, Karta is not available. Any non-minor. Any non-minor. If the person is a firm, partner not available. Agad. Yes. If it's a company, managing director. Rahul, managing director is not available. Any other director. Rahul, foreign company. Power of attorney. Rahul, if it is a LLP, designated partner. Rahul, designated partner not available. Any other non-minor partners. Correct. These are all the persons. Follow-up questions come and talk about how to get PAN number, who should quote PAN number and all. It is important. I'm not saying it's not important. It is important. It is coming for MCQs and all, but there's nothing for me to teach. There's all limits. So read it yourself. Those are all simple limits. If you can mug up, you mug up. If you can't mug up, you let it go. It's okay. Yes. What I have noticed at least is that PAN number related questions are coming in the theory 4th question. And luckily it is coming in OR. So which means if you know the first one, you can ignore the second one. Yes. So better read the first one, ignore the second one. Yes. I remember MTP number 1, it came for 4th question, last subdivision in OR. Either this PAN question came or the question came and asked, where should you file a return? In the sense that they came and asked, if you don't file the return on time, what losses will not come? Which is easy? Which losses will not come if you don't file returns? Anything other than HPN, unabsorbed depreciation, all losses will get lapsed if you don't file your return on time. Straightforward question. Yes, if you don't file your returns on time, which losses will not be eligible? Any losses other than HPN, UD, this is useless. Yes, better not read it. Better not read it. Yes or no? Yes. Finally, this chapter has something called as PAN and Aadhaar linking, where income tax comes and says, Rahul, if you are supposed to have an Aadhaar card and a PAN card, please ensure that both are linked to each other. Both are linked to each other. If you are not going to link your PAN with Aadhaar, the following are the consequences. You will not be able to get any refunds. You will have to pay interest for such. You will not be able to get any interest on such refund. Any TDS will be deducted at a higher rate. Any TCS will also be done at a higher rates, because it will be assumed that the PAN is inactive. You will only be able to get the PAN active after you link it to Aadhaar and pay a late filing fee. Now, what is the late filing fee? The late filing fee is up to 30th June 2022, it is 500 rupees. After 30th June 2022, it is 1000 rupees. You have to mandatory pay this late filing fee if you want to get them active again. Who are not required to get a PAN number? It is all people residing in Assam, Jammu and Kashmir and Meghalaya, non-resident, 8 years or more at any time in the previous year, and not a citizen of India, because a non-citizen of India cannot get a Aadhaar. PAN varum. Cannot get an Aadhaar. Clear? Yes. Your last chapter is TDS. Let's not spend too much time in TDS. I will probably discuss with you some topics, because I know there are good amendments, so I know which topics more likely will come. Yes, looking at the last topic called as TDS. Income tax came and said, Rahul, whenever a person is going to make a payment to another person, please ensure that before you make the payment, and if it is covered under the provisions of the law, you have to deduct TDS. The one good thing about inter-syllabus is that here in inter-syllabus, you only have TDS relating to residents. You don't have TDS relating to non-residents. So this is not coming into picture for TDS relating to non-residents. We are only discussing about TDS relating to residents. Yes or no? Yes. Now, coming to the TDS relating to residents, income tax came and said, Rahul, if you are going to have a TDS, please ensure the TDS is done before the previous year and paid before the due date of return filing. If not, you will get a disallowance under section 40I PGBP. 30% for residents, 100% for non-residents, disallowed and allowed in the year of payment of TDS or filing of returns by payee. Yes or no? Yes. Rahul, when should you do TDS? Income tax says TDS has to be done on payment or credit, whichever is earlier. Except for certain scenarios. Which we will discuss. Second, Rahul, should the payment of TDS happen for all scenarios, whether it is business or personal? Answer is yes. It should be done for all scenarios, whether business or personal, except for two sections, which is C and J. C for contract, J for professionals. Very good. J for professional services. Yes or no? Yes. Rahul, all these sections will have something called as threshold limit. Which means, Rahul, if the number is below this threshold limit, TDS will not apply. But if the number goes above threshold limit, TDS will apply from first rupee. Except for a few cases. The few cases being 194Q purchase of goods and withdrawal from bank, 194N. For all those cases, TDS will only apply from next rupee. Next, Rahul, is TDS applicable for everyone? Answer is no. Income tax comes and says, if you are an individual or an HUF, having a turnover less than 1 crore in business or 50 lakhs in profession in the previous year or preceding previous year? In the preceding previous year, meaning for your exams 22-23. In your exams 22-23, if the person has a turnover less than 1 crore in business or 50 lakhs in business profession, he will not be required to do TDS in hijacker. 194H, commission, I, rent, J, professional, A, interest, C, contract, R, business benefits or perquisites. These will not be liable for any kind of TDS, because all these sections are now covered in 194M. M covers C, J and H. IB covers I. Others are not covered yet. Yes or no? Now, Rahul, the provision says if you are liable to do TDS on someone, you need to get the PAN number from this person. If the person does not give you the PAN number, if the person does not give you the PAN number, the rate of TDS now becomes actual TDS rate or 20%, whichever is higher. Actual TDS rate or 20%, whichever is higher. At the same time, this provision comes and says, if the person is required to give you a return, if the person is required to, if the person is required to file a return, if the person is required to file a return and he has not filed his latest return on time, he has not filed his latest return on time and he has a TDS more than 50,000 in his return, he has a TDS more than 50,000 in his return. In that case also you will do TDS at twice the rate or 5%, whichever is higher. Twice the rate or 5%, whichever is higher. Assuming you end up in a stupid scenario where the person does not give you PAN also, he is not filing returns also. Income tax says do the highest of both. Do the highest of both. Is this clear? Yes. This is what your background is. This is what your background is. Any confusion in the background? No. I'm looking at the sections. I'm not going to read everything because I'm going to tell you which ones are important alone. Yes. 92 not important. 92 not important. It's a straightforward thing which is coming and saying, Rahul, if you are an employer going to do TDS on employee, do TDS at the rates in force. Do TDS at the rates in force. If a question is to come in exam, the question will come and say, as an employer, what should you verify? What should you verify? If a question comes in exam which comes and says, Rahul, employee is going to give you HRA claim. As an employer, what should you verify? You should look for rent receipt, rent agreement. You should look for rent receipt and rent agreement. Full stop. That's all. That is what you will ask for. That is what you will ask for, because what you will do, you look for least of the three. What was least of the three? Actual HRA, which you know. 50% or 40%, which also you know. Rent paid minus 10%, which means the only thing which you need from the employee is the rent paid. That is what you will ask. That is what you will ask. Are you clear? Are you clear? Yes. So this will not come in exam. This will only come more as an theoretical understanding knowledge. You know those things. You know those things. Yes or no? Yes. Follow-up 192 is 192A. Has never been tested in exam so much. You don't have to worry about it because it is talking about PF withdrawal within 5 years. PF withdrawal within 5 years. It's okay. Let it go. You have nothing important out of it. Next thing is 193. Again, interest on securities, not important from exams. Not important from exams. We have something called as 194A. We have something called as 194A. Income tax comes and says, if a bank is planning to give you interest, if a bank is planning to give you interest, bank will deduct TDS on your interest. Bank will deduct TDS on your interest. If the interest which the bank is going to give you is more than 40,000 rupees or more than 50,000 rupees in case of resident senior persons. More than 40,000 rupees or more than 50,000 rupees in case of resident senior persons. Yes. Rahul, what is the TDS rate? It is at the rate of 10%. It is at the rate of 10%. So I am saying, Rahul, bank will give interest to you after deducting TDS at the rate of 10%, provided the TDS amount is more than 40 or more than 50. More than 40 or more than 50. Yes or no? Yes. Now, Rahul, question which comes up is, I am going and getting interest from SBI Bank. I am going and getting interest from SBI Bank. How am I getting interest, Rahul? I am made a savings account in SBI Chennai. I have made a savings account in SBI Hyderabad, and I have made a savings account in SBI Ahmedabad. Which means I have 3 separate savings accounts. Same SBI. Same SBI. Question comes is, Rahul, 40,000 limit will be checked for all branches together or for each branch separately. Income tax says it is all branches together. If you are following something called as core banking solutions, CBS. If you are following core banking solutions, you will do all bank branch together. You will do all branch together. If not, you will do all branch individually. If not, you will do all branch individually. Are you clear? Yes. One thing which I wanted to extremely carefully understand and notice is that TDS happens between one person to another person. TDS happens between one person to another person. Meaning, I am coming and saying, Rahul, SBI has to give 40,000 to you and 40,000 to you. Yes. In that case, Rahul, both are within 40,000. Will bank deduct TDS? Will bank deduct TDS? No. Bank will come and say, from me to you is 40,000, from me to you is 40,000. Both are within limits and therefore TDS will not apply. TDS will not apply. Correct, not correct? Yes. There was this one question in MTP number 1, which is 194 IA related. 194 IA related, where they came and said, this person is going to sell to this person also, sell to this person also. Sale to this person was less than 15 lakhs, sale to this person was less than 50 lakhs, and people jumped and said TDS will apply. When both the persons are doing less than 50 lakhs, TDS was not applicable. TDS was not applicable. Always understand TDS is from one person to another person. One person to another person. Don't mix and merge people. Don't mix and merge people. Is that clear? Yes. This is enough in 194A. This is enough in 194A. You just need to know that CBS facility is there. Bank will do all branches. CBS facility not there. Bank will do per branch. Bank will do per branch. Clear? Yes. Next thing, you have something called as 194B and 194BB. We don't have to read this from exam perspective because you know the tax rate. Yes, income tax says TDS is the same as tax rate, number is 30. Leave it and go. Leave it and go. Next, you have 194BA, which we already discussed when we did online winnings. When we did online winnings, I told you what is the format. Yes, that format is what they're telling. That format is what they're telling. They're telling take the format, multiply by 30%. This is what the TDS rate is. This is what the TDS rate is. Clear? Yes. Next is your 194C. Next is your 194C. Here are some things which are important. Here are some things which are important. Where income tax is coming and saying, Rahul, if you're doing contract payments, if you're doing contract payments, income tax says TDS will happen if the contract payment goes more than 30,000 single payment or more than 1 lakh year payment. More than 30,000 single payment or more than 1 lakh year payment. Anyone satisfied, TDS will apply. Anyone satisfied, TDS will apply. Yes or no? Yes or no? Rahul, what is the rate they are saying? If you are going to pay the person as an individual or an HUF, meaning you are individual or HUF, I will do TDS at the rate of 1%. If you are not an individual or HUF, I will do TDS at the rate of 2%. I'll do TDS at the rate of 2%. In this, two things alone I want you to know. Two things alone I want you to know. One is that where they're coming and saying, if you are going to make a payment to a transport operator, if you're going to make a payment to a transport operator who is opting for presumptive, meaning he has less than 10 vehicles, yes, less than 10 vehicles, income tax is no TDS on this person. Income tax is no TDS on this person, provided he gives you a declaration along with the PAN card. He gives you a declaration along with the PAN card. So the question comes and says, Rahul, there is a transport operator for which I am going to make a payment. The transport operator comes and says that he is going to give me a declaration saying he does not have more than 10 vehicles, but he did not give me his PAN card. Rahul, TDS will come, not come. TDS will come, not come. It will come. Rate of TDS 20%. PAN card tarli hai. Rate of TDS becomes 20%. Yes or no? Yes or no? Please understand this carefully. I am saying, Rahul, the person has to give me declaration and PAN card. If he gives me declaration but no PAN card, rate becomes 20. He gives me PAN card but no declaration, rate becomes 1 or 2. 1 or 2. He gives me both, the TDS becomes 0. He gives me nothing, TDS becomes 20. TDS becomes 20. Correct, not correct? Second is that income tax is coming and telling if you enter into a subcontracting service. If you enter into a subcontracting service, meaning I will give you raw materials. I will give you raw materials. You make the final product. You make the final product. Then it comes under 194C. Then it comes under 194C. If you come and tell me that, Rahul, I will not give you raw materials. You buy from outside. You buy from outside and you make the raw, finished goods and you give it to me. That is 194Q, sale of goods. That is 194Q, sale of goods. In simple words, Rahul, I am coming and saying, if you are the person who is going to give me raw materials, Amanda, purchase sale. Yes, I am coming and saying, please understand, if I am giving you raw materials and you make the product, then it is 194C because it is subcontract. If I am not giving you the raw materials, I am asking you to buy it from outside and you make the final goods, then you are making a sale to me. Which means in 194C, what is covered is only giving of raw materials for making final product. Yes or no? Yes. So the provisions of 194C comes and says any kind of payment made for manufacturing or supplying a product as per specifications of the customer using materials given by such customer. So now materials sarno adukapro the product is engineering. In that case, it is 194C. It is 194C. Are you clear? Are you clear? No doubts. Can we go forward? Yes. After C comes, forget D, forget DA, forget G, H is a simple straightforward thing where I am coming and saying if you are going to pay a commission to someone, TDS will be at the rate of 5%. Limit is 15,000. That's all. Just read the table. The important thing which is normally being tested in exam is 194I, where income tax is coming and telling that, Rahul, if you are planning to make a rent payment, I am going to make a rent payment to you. Income tax is coming and asking, tell me for what are you paying the rent? If you are paying a rent for plant and machinery or equipments, TDS is at the rate of 2%. But if they are making the payment of rent for any other item, it is 10%. The limit given is 2,40,000. Now, Rahul, 2,40,000 is from one person to second person. It is not per asset. So I am coming to you and saying, give me a building and give me furniture. furniture and give me furniture. Rahul, building rent is 2 lakhs, furniture rent is 50,000. Rahul, TDS will apply, not apply. Building rent is 2 lakhs, furniture rent is 50,000. TDS will apply, not apply. Will apply because overall gone more than 2 lakh 40. Overall gone more than 2 lakh 40. Rahul, on building you will charge TDS at the rate of 10%. On furniture also you will charge TDS at the rate of 10% because it is furniture, it is not plant and machinery. It is not plant and machinery. I am saying, Rahul, give me building, give me laptops. Give me building, give me laptops. On building you will charge rent TDS at the rate of 10%. On laptops you will charge TDS at the rate of 2% because plant and machinery. Because plant and machinery. You understand what I am saying? Yes. That is the only thing I wanted to know. That is the only thing I wanted to know. Read the table carefully. Read the table carefully. No content, no notes. No notes. Next, you have 194 IA. This is relevant from capital gains perspective. This is relevant from capital gains perspective, where income tax is coming and saying, if you are planning to sell your property, you're planning to sell your property to other person, to an other person, and if the property selling value, meaning the stamp duty value or the consideration, either of the two goes beyond 50 lakhs, income tax says TDS will happen at the rate of 1%. TDS will happen at the rate of 1%. Yes or no? Yes. Please understand, either of the two, meaning either the stamp duty value or the consideration should go more than 50 lakhs. In that case, you will do TDS at the rate of 1%. 1% of what, Rahul? 1% of whichever is higher. 1% of whichever is higher. In simple words, Rahul, you have to do TDS on full value of consideration. 1% of full value of consideration. If the full value of consideration goes beyond 50 lakhs, TDS will happen at the rate of 1% on the full value of consideration. On the full value of consideration. This is the question which came for your MTP number 1, and most of the people ended up making a mistake because what happened is that person whom the sale was happening was a non-resident. The person to whom the sale was happening was a non-resident, and I told you we are only learning an resident, meaning 194 IA will apply, not apply. Will not apply, meaning in that question TDS was not applicable. TDS was not applicable because the person payment was to a non-resident. The person payment was to a non-resident. Are you clear? Are you clear? Yes. After IA comes IB. IB comes and says, Rahul, if you are a person who is not liable to pay rent under I, but you are taking a rent property from someone. You're taking a rent property from someone as an individual or an HUF, meaning you are an individual or an HUF taking property from you. If my rent to you is more than 50,000 per month, if my rent to you is more than 50,000 per month, I now have to deduct TDS at the rate of 5%. If my rent to you is more than 50,000 per month, Now I am paying you rent monthly basis. Will I deduct TDS every month? No. Income tax says deduct the TDS on the last month. TDS on the last month, meaning full year or TDS I'll deduct on March. But if I'm leaving the premises in December, I will deduct on December. Yes or no? Yes. At the same time, Rahul, imagine I had to deduct TDS on you and I asked you for PAN card. You said I will not give. I have to deduct TDS at the rate of 20%. Now, unfortunately, what happened is because I have to do 20%, year end, when I was doing TDS, I found out that the rent is lesser than the TDS itself. Meaning it so happened that the last month's rent is 10,000 rupees. But income tax is saying 20% of the full year rent is 2 lakh rupees. Yes, 2 lakh rupees. Now 10,000 rupees is what I'm going to pay as rent. 2 lakhs is what you're asking me to deduct. Can I deduct 2 lakhs? No, because I don't have money. In that case, income tax said, you deduct 10,000 and leave it off. You deduct 10,000 and leave it off. I will not ask you for balance. Don't pay him a single rupee for the last month. Give it fully to me as TDS and I will handle the balance. Yes or no? So in this section, the only thing which I want you to understand is that you have to do TDS at the rate of 5% in the year end. But if you don't get a PAN card, you have to do 20% in year end. But if the TDS in the year end becomes more than the rent itself, you do full rent as TDS. And you leave it there itself. Yes or no? Can we go for it? Yes. After IA comes your J being the next important section from exam perspective. I am looking at professional services, technical services, royalty and non-compete fee. Yes, royalty and non-compete fee. Finally being remuneration to directors. Income tax is coming and saying, Rahul, for every component you see here, FTS, FPS, royalty, non-compete fee, remuneration to directors, individually they have an each 30,000 ka limit. Individually, they have an each 30,000 ka limit, meaning they're coming and saying, Rahul, if each of these natures do not go more than 30,000, don't deduct TDS. But if they go more than 30,000, you will have to do TDS. Meaning now one person itself, Rahul is going and paying 25,000 as FTS and 26,000 as FPS. 25,000 as fees for technical service and 26,000 as fees for professional service. Rahul, will TDS apply? No, because each should be more than 30,000. Each should be more than 30,000. Yes or no? Rahul, what is the TDS rates? They are saying for fees for professional service it is 10%. For fees for technical service it is 2%. For royalty it is 10%. Except for royalty on cinema films, which is 2%. Call center charges 2%. Remuneration to directors 10%. Understand, remuneration to directors have no limits. Remuneration to directors have no limits. Meaning for remuneration to directors, 1 rupee is also fully TDS. 1 rupee is also fully TDS. Second thing, please understand, remuneration to directors, which I am talking about here, is not the employee of the company. I am talking about independent directors. I am talking about independent directors, because employee would have been 192. Employee would have been 192. This is your professional services sitting fees. I am doing 10% on this without any limits. I am doing 10% without any limits. Are you clear? Yes. So the only thing which I wanted to know from this section perspective is that 30,000 is per nature. 30,000 is per nature. Clear to go? Clear to go? Yes. After J, you can ignore everything else. Moving on to N. Straightforward provision. Income tax comes and says, Rahul, if you're a bank from which a person is going to withdraw cash. If he withdraws cash up to 1 crore rupees, no TDS. But if he's going to withdraw any cash after 1 crore rupees, do TDS him at the rate of 2%. Do TDS on him at the rate of 2%. But if you find out that the person is a defaulter, in the sense that last 3 years he's not filing his return properly, do TDS right from 20 lakhs, meaning up to 20 lakhs, no TDS. 20 lakhs to 1 crore will become 2%. After 1 crore will become 5%. Current year amendment talks about a cooperative bank. Where they come and say, if a cooperative society is going to withdraw money. If the cooperative society is going to withdraw money, wherever you saw 1 crore, now the number will become 3 crores. Wherever you saw 1 crore, now number will become 3 crores, which means for the first 3 crores, no TDS. After 3 crores, 2%. But if the cooperative is defaulting in return filing, for the first 20 lakhs, no TDS. 20 lakhs to 3 crores is 2%. After 3 crores is 5%. Yes. Amendment, if you have to test an exam, they will only test you on the limits. Clear? After N, you don't have anything else, I think. Yes. P and all is not coming for exam. Q was interesting up to a certain days. Now it is not interesting. No one wants to ask it. Yes, you have 194R. Where it comes and says that if you are going to get any business benefits or perquisites, then if you are going to receive a benefit more than 20,000 per annum, the person who's giving you the benefit will have to deduct TDS at the rate of 10%. Before he gives you the benefits. Yes or no? Yes. Now this is all from TDS. But more than TDS, this time I have a personal feeling that the questions will ask from TCS. Because rates have changed. Income tax has come and told, Rahul, when it comes to TCS, there are multiple TCS. One of the TCS comes and says, Rahul, if you are going to, by the way, what is TCS? TCS is the case where I'm selling you product and I'm asking you to give me money. When you give me money, I'll also ask you extra money. Which extra money I will deposit to government on your behalf. Yes. Income tax is coming and saying, Rahul, if you plan to sell liquor for home consumption, the person who buys from you has to pay you extra TCS at the rate of 1%. If you are planning to sell tendu leaves used for cigarettes, then in that case, whatever items you sell him, he has to pay you 5%. If it is going to be timber or forest produce, it is 2.5%. If it is scrap, then it is 1%. If it is coal, it is 1%. What is more important is the motor vehicles. Where income tax is coming and saying, Rahul, if you are planning to sell motor vehicles, more than 10 lakhs worth, then whenever a person buys any motor vehicles from you, he has to do TCS. He has to pay you TCS at the rate of 1%. He has to pay you TCS at the rate of 1%. Yes or no? Yes or no? Now understand, Rahul, this will only apply in case there is a final sales, meaning it should go from dealer to customer. It should not go from manufacturer to dealer. TCS is not applicable. From a manufacturer to dealer, TCS is not applicable. It is only applicable from dealer to customer. It is only applicable from dealer to customer. Are you clear? Yes. What is more important in the current exam is the liberalization scheme. You have multiple amendments in this, and therefore this is extremely important. Yes. What this provision comes and says is, Rahul, if you are planning to send money outside India, if you are planning to send money outside India, income tax comes and says, Rahul, the moment you send money outside India, now the person who's sending the money on your behalf, will now do something called as TCS. Rahul, how will it work? Income tax comes and says, first tell me, what are you giving the money outside India for? If you come and tell me, Rahul, I'm giving the money outside India for overseas tour package, meaning I'm planning for a holiday, and I'm going for an holiday trip. Income tax says, if the payment happened anywhere before 30th September, TCS will happen at the rate of 5%. But if the payment happened after 30th September, for the first 7 lakh rupees it is 5%. After that it becomes 20%. My question is very simple, Rahul. When you're doing after September, will the 7 lakhs start from September or will it start from April? Will it start from September or will it start from April? It'll start from April. Meaning on September, I will come and ask you, tell me how much payments have you made till now. If you tell me, Rahul, I've already made 7 lakhs worth of payment, he will say, now start doing full 20. If you say, no, Rahul, I've made only 4 lakhs, he'll say, okay, for the next 3 lakhs, I'll do 5. After that, I'll start 20. You understand what I'm saying? Yes, please be very careful. Again, this is the only year where they can test the difference in dates, because next year everything will become same. So the difference in dates is only important in the current year. Please be careful about it. Yes, the provisions are coming and saying, Rahul, if you're going to take an overseas tour package, for the first 7 lakh rupees, TCS will be at the rate of 5. After that, it will become 20. Only after September. Before September, it is 5 for everything. Correct? Rahul, assuming I'm not taking for tour sake, income tax says, Rahul, for the first 7 lakh rupees, no TCS. After 7 lakh rupees, I will now come and ask you, tell me, why did you take the payment outside India? You say, Rahul, I've taken the payment outside India because I've taken a loan from a bank. Which is being sent to someone there outside India for education purposes. What am I doing? I'm taking a loan from a bank for education purposes. Section number 80E. Income tax comes and says, in that case, 0.5% will be the TCS. Only if more than 7 lakhs. Yes or no? So what I will do is, first 7 lakhs I will not question. After 7 lakhs, I'll come and ask you, tell me, why did you make the payment? If you say, Rahul, I'm making the payment because I've bought a loan from bank and I'm giving it to outside India for education purposes, it is 0.5%. Rahul, I have taken this payment and I'm making it outside India because I am doing it for medical reasons or education reasons, but not as a loan. Meaning I have not taken a loan. I have money, but I'm sending outside India for education. What do I have? I have money, I am sending outside India for education purpose. It is not from loan. Or I am sending money outside India because of medical reasons. Income tax says rate is 5%. Clear? Yes. Rahul, apart from this, if I'm sending for any other reason, income tax says up to September you will do 5. After September you will do 20. Clear? Yes, this is what the limits are. If possible, if you forget everything else also, try this because I'm expecting MCQ from this. Bare minimum MCQs will come from this question. This is important for this attempt. Please pay small attention. You will be able to get numbers. Clear? Yes. This is what your TCS looks like. Now, Rahul, what is overseas tour package and all is not going to be tested in the exam. Don't worry about it. They are came and saying, Rahul, who and all is not liable for TCS, not coming for exam. Don't worry about it. And this is your TDS and TCS. Exactly at 5. I was not expecting with the delays which happened, but nevertheless, we have made it on time. So, congratulations to all of you. Yes.
Thank you.
Nevertheless, I'm assuming we have completed all chapters, or am I missing something? It's not coming for exam. When it is anyway exempt, the answer is very simple. It is exempt. If I have to teach you income which does not form part of total income in the next 2 minutes, the answer is very simple. If you don't know the provision, that is what the chapter is. Yes, nothing else in the chapter. Anything else? No? Sweet, great. This is what your marathon looks like, people. At the end of the day, I know we have been fast today. We have tried to learn concepts because ideally the intention is not to teach you things. The intention is to clarify a few things which you may have challenges on, but otherwise to tell you that yes, it is achievable. To tell you that it is achievable. Today's is a speed reading just for you to convince yourself that yes, Rahul, if I can do it, then you can also do it. Yes, because you have also done it along with me only. Right? So the intention is only that. Yes, I want you people to carry the same speed. Carry the same speed. Do not have that mistake that yes, Rahul, if I have 2 days in my exam hall, I can sit 1 full day, I'll do tax, 1 full day, I'll do DT. It will not happen. It will not happen because understand, you have just now unlearned yourself from another paper. That too, theory paper called as worst. Yes, you have just unlearned yourself from a law paper. You have a lot of provisions coming in your head. Yes, if that mindset, if you try to read both DT and IDT and just with one reading, you will not be able to go for an exam because things will jumble. Yes, something of law will also come into picture, something of other chapters will also come into picture. So it takes a little bit of extra readings for you to come to this position. Yes, and it cannot happen in one reading. It takes at least 2 to 3 readings. It takes at least 2 to 3 readings. But again, it is not 2 to 3 readings because I'm coming and saying that you have to do 7 hours for all 3 times. When you do the first time, you know what is happening. Second time becomes shorter, third time becomes shorter, fourth time is just a waving of book. Yes, but at least what happens is when you come to that 4th time, you know what is there in the book and you have already forgotten law, which is good, and that is what you have to carry for your exams. Yes or no? And therefore today's intention was to only tell you how your speed reading should be, For all of my friends who are still lacking behind and are missing out on a few concepts, today's class might have come and told you which chapters you're not comfortable with. Yes, I would like you to put some time in those. If you have not even touched that chapter in life, do not touch it right now. Yes, you are very late for it. Do not touch a chapter which you have never touched in life. Yes, you only have another 20-25 days. You have another 20-25 days. Do not touch that chapters. Yes, it is not going to help you in any way. It is not about the 10 marks which you are going to lose. It is more about the 40 which you can get. Rahul, I've studied only for 30 marks now. I have no answer for those. Then it's your headache and it's your burden. Yes, but nevertheless, I know all my students, at least to a certain extent, have a certain amount of comfortableness. It takes a little bit of practice. Otherwise, you are all set and sorted. Yes, small things, small mistakes which you have been making all this while, keep marking it then and there so that you don't make those mistakes ever again. Yes, you can make those mistakes maximum twice. After that, you cannot make any mistakes. Yes, maybe 1 attempt, maybe 2 attempts. Third attempt is not the answer. After third attempt also things are going wrong. Things are very ugly. It's time to take a step back. And understand where things are going wrong. Yes or no? Yes, have those thoughts in mind. Again, not that attempt is bad. Yes, it is not that if you're not able to clear, you're a worthless person. No, that's something which is supposed to happen. Yes, it's an CA Institute paper. Even if you write everything right, things will go wrong. Yes, so you cannot trust people for your skills. You know what your worth is. It is enough for you to know. You do not have to worry about what marks you're getting, right? Because that is something which someone else is controlling. What you can control is what you decide. Yes, so focus on what you know and focus on what you are worth for. Because at the end of the day, when you clear in first attempt or you clear in 10th attempt, people will look at you only for your skills, not for your marks. First job alone, it will challenge you. After that, no one cares. So don't worry about it too much. But at the same time, don't get lethargic also. This next 20 days can make and break you. Yes, so this next 20 days will decide your fate for your next. And now it has become 3 months. It's always fun when I say 6 months, but now, yeah, nevertheless. Yes, it is going to become your make and break for your next 3 months. So I want you to pay special attention on those things. I do not want you to take a chance for September because I know September is not going to be easy. There is no doubt. There is no doubt. September is not going to be easy because September is only going to be written by those people who are repeaters. Yes. November students are still going to be writing in November or Jan. So September in all likelihood is only for repeaters. And you know how it works when ICI looks at repeaters. Yes. Don't take a risk. This time is the first time a new syllabus is being introduced, and every time from my experience at least is that new syllabus first paper is always standardly easy, or at least from the books. It does not test you beyond your push limits. But yes, with the tax optimization and all those most beneficial kind of questions, you never know what is going wrong. Yes, be careful on both the ends. At the same time, don't lose your confidence. Getting 6 papers now is a boon. Yes, we have all studied in times when we had read 12 papers together. Yes, Rahul, what 12 papers you're talking about? Each subject has 2 more papers. Yes, in my times and all, we had IT, SM, DT, IDT, pata nahi kya tha. Yes, too many things were there. Yes, so you have come to a better position than what we have. It equally means that you have to put more knowledge than us. Yes, because in our times, they also realized that things were difficult, and so therefore papers were fairly easier. Papers can become complicated, but still it was not expected to happen in May at least. Yes, which means May is a good opportunity for you to break it once and for all. Do not take a chance with the May paper. September cannot have any guarantees. And after September, you know it is directly going to January. Yes, at least once in life, let's not waste our New Year's. Yes, I know people of foundation this time are crying and cribbing very hard because last year also they lost their New Year's. This year also they're losing their New Year's. Yes, for them New Year is no more a year only. Yes, nowadays they only celebrate financial years. They don't celebrate calendar years. Yes, so for them it is all lost and gone. You should not come to that position. Make it once and for all and clear it off as you progress. Yes, this tip is for you, not for direct tax. It is also for other subjects. If you think Rahul, direct tax is the only paper you can clear in 7 hours, no. Every subject has its own potential. It takes a little bit of reading, and every subject can be done in that similar amount of time. Yes, you need to at least have 2 to 3 revisions for every subject before you enter an exam hall, because you should not be remembering what is happening in the old subject. It does not help. It only confuses you further, and it only causes a problem for your life. Yes, so it is important that you forget what you have done in the past papers and then you read the fresh paper. That needs a couple of readings, and that is the kind of practice you need to have. For those of my friends who have still not attempted any test, for still not tried any papers, please do so, because you need to have that kind of speed. You need to have that kind of grip. Yes, push yourself a little bit for the next 20 days. See that you have a time frame to yourself. 1.5 days you take a gap, you write a test. 1.5 days you take a gap, you write a test. 1.5 days you take a gap, you write a test. You see where you stand, you see how much you are able to complete, and you see where you are not able to make sense. Yes, those kind of mock exams will help you to prepare yourself better for exams, and that is extremely critically important. Yes, last few things. Yes, this time papers have changed a little bit. In your new syllabus, at least my paper has become 50 marks. Earlier it was 60. With my paper becoming 50 marks, the challenge which has happened is, earlier at least papers were only for 14 marks, I think, compulsory question. Now the compulsory question is for 15 marks. Yes, the compulsory question has become 15 marks, with the other 2 questions becoming 10 each. So it is 15, 10, 10 and 10. Choose any 2 out of 3. 15 is an extremely big number, which means the length of the question is going to increase substantially. And I realized that from mock test paper number 1. The kind of question they asked is very unhealthy for you to write for 15 marks. But nevertheless, the paper length is increasing substantially, which means, Rahul, never attend compulsory question first. Thank you. Hey, do attend compulsory question. Do not leave compulsory question, for the love of God. 15 marks is a big number to let go. Yes, Rahul, you saw the paper, you did not understand anything also, it's okay. Something about the format will come in your head. Try something. Yes, anyway you are going to drown, might as well flap your hands somewhere. Yes, try something, don't let it go. Step marks is a big number. 15 marks is not an easy let go. Yes, please do not make that mistake for both DT and IDT. Do not attempt compulsory question. At the same time, please do not let it go. Keep it for the very end. 10 marks sort of questions will be fairly smaller, which means it gives you a good opportunity to complete those 10 mark questions faster, gain those marks, and then have that kind of confidence that yes, I have time, plus I have some liberty to spend some time on the compulsories. Yes, imagine 20 marks in DT, 20 marks in IDT. 40 marks plus MCQs you have. Yes, 15 is how much? 70 marks. If you can gain your confidence in the next 2 hours for 70 marks, that 1 hour if you sit and spend for that 15 marks of DT and 15 marks of IDT compulsory question, you can make wonders. You can make wonders. Yes or no? Yes. Do not let go of that question. At the same time, do not try it in the first go. If you keep trying only compulsory question, by the time you realize your mistake, paper would have been over. Paper would have been over. You would have only written one 15-mark question, which is very bad. Yes. At the same time, people, for all of my friends who have this worry that Rahul, I want to be ethical in life, in the sense that Rahul, MCQs, I did not know the answers, so I let it go. Don't do that stupidity. Yes, MCQs do not carry negative marks, meaning yes, I always tell this one thing in my classes: if you don't know anything, put C everywhere. Put C everywhere. It is a statistics, not true, but it is a statistics that no matter how hard you try, 60% of the time C is the right answer. Yes, normally the person who creates the question paper, normally on the mentality la seal na poduvaru. Yes, I have also done it. Some of my tests you would have seen it. Yes, போடும்போது எனக்கு அப்படி தான் இருக்கும். ஏன்னா A பார்க்கும்போது என்ன பார்த்தாலே இன்மிட்ட ஆன்சர் வந்துச்சுன்னா போடக்கூடாது. ஸோ கண்டிப்பா D போட மாட்டோம், A போட மாட்டோம், B and C குள்ள ஜகிள் பண்ணிட்டு இருக்கோம். Yes, 99% the mentality comes to C only. My point is that is only if you don't know. If you don't know and you see the weightage, you see Rahul C's are coming, let's put C off. Put C off. If your luck favors, you never know, a 2-mark MCQ may come in your pocket. Yes, and 2 marks can make and break your attempt. Do not let go, people, especially when today all 6 papers have become MCQs. Yes, when all papers are MCQs, you really have to play smart. Yes, don't be very ethical, Rahul, I don't know the answer, so I will not write it itself. If I have to talk on those sense, then you should not write in the paper itself. Yes, you know what your worth is. Yes, work with that, it's okay. Do attend all your MCQs, people. Don't let go of MCQs. At the same time, please don't sit and keep wasting time in MCQs. I know they give you this fancy OMR sheet and you have nothing else to do in life, so you sit and be coloring. Yes, this is not for boys, this is more for girls. Yes, ukandittu color adichittu, let's draw designs, let's make flowers and all. No, people, it's MCQs. Yes, they are going to waste a hell lot of time in your name, class, roll number, whatever nonsense. Yes, adula ஏகப்பட்ட colorings இருக்கு. Don't sit and keep wasting time on those. First start your paper, then later on that guy will come and shout at you. That time you'll do it. It's okay, but do not make mistakes there. And finally, and the most important thing which I keep telling people, 15 minutes is not for you to write. 15 minutes is for you to choose. 15 minutes is for you choose which you want to do, and it is not to choose one, because yet you have to do. You need to choose between 2, 3 and 4. Yes, that 15 minutes which is given to you is not for you to go through your MCQs. It is not for you to go through your compulsory question. It is for you to understand what you need to do in the 2, 3 and 4 for DT and for IDT. Look at the questions and right away decide, Rahul, this question is what I feel I am comfortable, let's do. This question is what I don't feel comfortable, I am not doing. Make a choice. In all practical sense, most of the people will not do question number 2 because RS varadu, because 2 la dhaan TDS irukku. Yes, so you know RS has TDS in it, so 2 will be generally avoided, which means 3 and 4 is what you need to do, which means a strict thought is go to 4 quickly, read the second subdivision, see whether you know the theory. Then look at point number 8. It will be set off and clubbing ka, so which means 99% you can answer it. 3 will be all about salaries and HP, so you can answer it, which means you just need to make a quick choice. In the next 5 minutes you just have to decide, Rahul, 4 la theory theriyuma illaya, tenjudana, let's do 3 and 4, let's ignore 2. Theory la na, go back to 2 and check Rahul enna question kekran. Suppose subdivision 1 purinjudhu, resident status I understand properly, 6 marks is coming from that. Next 4 marks left, maybe one of the sections you remember, you scored 7 or 8, good number. Yes or no? Versus where you are sitting in theory question 4 marks, edume theriyala, summa adiche dhaan irkinga, 0 dhaan varum. What is more sensible? Yes or no? You understand what I'm talking about? Yes, this 5 marks can make and break what is happening to you. Yes, very smart decisions to make. Just make a quick choice, Rahul, 2 or 4, close pannu. Go to IDT, 2, 3, 4, which one to choose? Pick, get a decision correctly. When the bell rings, start taking up 2, 3 or 4 depending on which one you have chosen, pick those, start writing. Yes. And the last and the most important thing, people, for any subject, do not start the question unless no appadina compulsory question adikave maatinga. Do not start the question unless you know what the question is asking from you. Do not start the question unless you know what the question is asking from you. Yes, always read the requirement of the question before you start the question. Yes, you may not realize it, but when you start jumping into the questions and you start hurrying around doing the question, later on you'll realize question is asking for most beneficial manner, or question is asking for only one head of income, or question is asking only for AMT tax. They're not asking for normal tax, but you're jumping and doing things. It will not help. You complete the whole question, then you strike off the whole question, then you start again. Waste of time. Always take this 1 minute before you start a question to know what is asked, then read the question. I always come and tell people, boss, if you are given 15 minutes to write the paper, 15 minutes is not to fully write. 3 minutes is for you to read, 12 minutes is for you to write. When you know what you have to write, you already know easy written documents. Yes or no? If you take things on the go and you come and say, yes, I know this adjustment, let's write. I know this adjustment, let's write. I don't know this, let's leave. It will not help, because you may never realize that one adjustment has to come in 4 different places. Yes or no? Yes. Take that 3 minutes to sharpen your axe before you start cutting the tree. Yes or no? Yes. Small tips, people. I'm very sure you people know this by now. But for some reason, exam fearly, everything gets lost. Yes. That's not supposed to happen. I've always told people in life, get so much bored by exams that going there and writing is like a normal day. Yes. If you feel like, Rahul, exam fear is too high, write so many papers that you get tired of writing papers. Right? Yes. Go sit at home every day, pick a paper and write. Get to a certain extent where you're like, day, idhukku mele the paper open panni paathale ellame theriyunda. Yes. Tomorrow you should come and say, I know what ICA pattern is. Yes. On the level, if you get in confidence, no, then you will automatically come and say, ini mele enak bayame illa. Because question thorandu paathale, hey, this came in 5 years back, this came in 4 years back, this came 1 year back. Yes or no? My strategy has always been like that only. Yes. Every time I come to the class and I give you that confidence, no, Rahul, idu varadu, idu varona. Yeah, because I've got so bored with the papers that I know everything right now. Yes, I've seen all papers right from my time, right from 2016. I've seen every paper and I know every paper looks what. So I know these are the kind of questions which ICA will never ask. I'm like, okay, go take a chance. Yes, randomly Monday ICA will ask. It's okay, because it didn't ask in 10 years. 1 year you cannot predict. That's not my mistake, right? That you also could not have predicted, because you would have anyway not studied. Yes or no? See? Yes. So don't worry about those things, people. That is what I keep telling. No, it's not the 10 which you're going to lose. It's the 90 which you're going to gain. Focus on that thing. But for you to get that 90, you need to know what you're writing. You need to structure your writing. You need to present it better. Yes. I've seen so many papers in this November exam which did not clear. Not for any other reason, but because their presentation was pathetic. Yes. They came to a certain extent where what happened is they just looked at the question, they jumped at the question, they did 5 lines, they cut the whole thing, then they did 5 lines, they cut the whole thing, then they did 5 lines, they cut the whole thing. Examiner is sitting and searching where to search the answer for. He itself does not know where should I start reading the answer, because everything is strike down only. And the problem is, no, the person strikes out and does not start over again. Strike pannite 2 line endvaru, fir thirupi strike pannite fir 2 line endvaru. So he is searching in between the lines. Is that helping? No. Yes. Avoid striking of people. Avoid overwriting people. That can only be done if you plan what you want to write before you start writing. Yes or no? Yes. Keep those small things in mind. And yes, the other things which I've already told my friends, which you should know by now, always carry 2 calculators. At least from my experience, please do carry 2 calculators. At least from my experience, please do carry 2 calculators. Same type of calculators. Okay, don't keep changing calculators. Same type of calculators, and always carry a set of black pens. Yes, and also same type of black pens. Same type of black pens. The pen which you've got used to. The pen which you've got used to. Last minute going to your mom, I did not study properly. She comes and says, in the baba oda in the pennu kudthirkaru. Yes, I went to this holy baba. The holy baba gave blessings. This is the pen he gave me. Please write with this pen. You will get full marks. No. Yes, no change in the last minute. No changing of books at this stage. when you're standing on 7th, no changing of your study materials, no changing of your pens, no changing of your calculators. Everything remains as it is. Everything remains as it is. You go with this mentality to your exam. You come out of the exam with this mentality. You clear CA Inter with this mentality. No ego, no hurt, no change. Everything remains same. Yes, people should think that you have cleared. You should feel as stupid as you are today. Yes, don't get two horns on your head. It is not helping. Yes, if you think you know too much, you come for finals, I will tell you. Yes, shameful only, it will be nothing else. Yes, so don't have that much kind of things, people. Stick to what you are right now. That is what the life lesson is. Good to go. Yes, awesome. Thank you, people, for joining in. I will see you all. நீ ஃபர்ஸ்ட் இன்டர் கிளியர் பண்ண, எனக்கு ட்ரீட் வேணும். எனக்கு ஃபைனலுக்கு முன்னாடி ட்ரீட் வேணும். ஃபைனலுக்கு என்ன பண்ண போறேன்? Yes, I will see you all after you clear your CA Inter with a happy face. Let's meet back soon. Yes, thank you, people. Have a good weekend.